with President Trump if invited again to solve real problems. Speaking in London, Zelensky said Ukraine is ready to accept a minerals deal that was put on hold last week. And he said the deal is ready to be signed by Ukrainian ministers. Zelensky chose his words carefully after last Friday's blow-up in the Oval Office. Zelensky was in London over the weekend attending a security summit of European leaders meant to rally support for Ukraine. British Prime Minister Keir Starmer, Italy's Giorgia Meloni, and French President Emmanuel Macron tried to repair the clash between Trump and Zelensky at the White House and bring the two back to the table. European leaders also fast-tracked efforts to improve their own defense capabilities. Meantime, U.S. Secretary of State Marco Rubio insisted President Trump is still committed to bringing peace in Ukraine. Here is Rubio speaking earlier on ABC's This Week.
I've asked every foreign minister I meet with, tell me your idea of how this turns out. Most don't have a plan. A few have said, well, let's give them another year of fighting. A year from now, a year later, after another year of death, another year of destruction, then maybe Putin will be ready to negotiate at that point. That doesn't sound like a good plan to me, and it certainly is not a plan the president's on board with.
That is Secretary of State Marco Rubio speaking earlier on ABC's This Week. Now, Rubio did go on to say he hopes Ukrainian President Zelensky will see President Trump's commitment on ending the war and come to the negotiating table. He also said a ceasefire deal will be difficult, but it's the best path forward. On Tuesday, the president is planning to impose new tariffs on Canada and Mexico, and at the same time, he will double the tariff on China. In total, these tariffs would apply to roughly $1.5 trillion worth of annual imports to the United States. The tariffs may be delayed. The Canada and Mexico measures were already stalled once, but any reprieve could be temporary, with a host of other Trump levies due in April. Today, Commerce Secretary Howard Lutnick said both Canada and Mexico have been working hard on controlling their respective borders. However, Lutnick added fentanyl was still an issue. Here he is speaking to Fox News.
They have done a lot, so he's sort of thinking about right now how exactly he wants to play it with Mexico and Canada, and that is a fluid situation. There are going to be tariffs on Tuesday on Mexico and Canada. Exactly what they are, we're going to leave that for the president and his team to negotiate.
Commerce Secretary Howard Lutnick speaking earlier on Fox News. Earlier today, Canadian Prime Minister Justin Trudeau vowed a strong response to any tariffs President Trump would impose. Earlier today, the president sparked a rally in digital currencies, but it has since faded. Trump said his executive order directed the presidential working group to move forward on a crypto strategic reserves. He said it will include XRP, Solana, and Cardano. Then, in a second Truth Social post published a little more than an hour later, Trump added, obviously, Bitcoin and Ethereum, as other valuable cryptocurrencies will be at the heart of this reserve. We go next to the Middle East. Israel has stopped all humanitarian aid from entering Gaza. Now, this comes after the first phase of a ceasefire deal with Hamas expired. Prime Minister Benjamin Netanyahu said Hamas has refused to accept a U.S. proposal to extend the truce agreement. Here is Netanyahu.
We will take further steps if Hamas continues to hold our hostages. And throughout this, Israel knows that America and President Trump have our back. Thank you again, President Trump.
That is Israeli Prime Minister Benjamin Netanyahu. The move to stop all humanitarian aid from entering Gaza has sparked criticism from the Palestinian Authority and human rights groups. They accuse Israel of collective punishment and exploiting humanitarian aid as a tool of blackmail. The February jobs report will be the highlight in a busy week for economic data. We have a preview from Bloomberg's Karen Moscow.
It starts Monday with a look at construction spending and ISM manufacturing. Wednesday, we get the ADP employment report, the ISM services index, as well as factory orders. And we'll also be watching for the Federal Reserve Beige Book, which will give a snapshot of the U.S. economy in the early weeks of the Trump administration. Thursday, it's the trade balance, initial jobless claims, and wholesale inventories. We also get an ECB interest rate decision. And Friday, it's the February payrolls report. Fed Chair Jerome Powell will also give a keynote speech at an event in New York hosted by the University of Chicago Booth School of Business. Karen Moscow, Bloomberg Radio.
At the Oscars, the film Anora dominated. It won Best Picture, and Mikey Madison won Best Actress for Anora. At the same time, Sean Baker won Best Director for Anora. Adrian Brody won his second Best Actor Oscar, this time for his role in The Brutalist. Zoe Saldana won Best Supporting Actress for her performance in Emilia Perez. And Kieran Culkin was named Best Supporting Actor for his performance in A Real Pain. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
हेलो एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। आज हैं 3rd of March 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। फ्रेश वीक फॉर दिस ट्रेडिंग मंथ एंड फ्रेश मंथ, यू कैन आल्सो से दैट। लेट्स सी द मार्केट राइट नाउ। नेचुरल गैस को देखोगे, गैप डाउन ओपन हुआ है, रिकवरी कर रहा है। नीचे हमारे पास सपोर्ट मिल जाएगा 320 325 के अराउंड, और ऊपर रेजिस्टेंस है एक छोटा वीक वाला रेजिस्टेंस 340 के अराउंड है, और एक मेजर रेजिस्टेंस भी 345 47 के बीच में है। कैंडल का ध्यान रखना, ओपन इक्वल टू हाई पे बाय नहीं करेंगे, ओपन इक्वल टू लो पे सेल नहीं करेंगे। सपोर्ट रेजिस्टेंस पे डेटा की बात करें तो 815 और 830 पे मैन्युफैक्चरिंग पीएमआई और आईएसएम मैन्युफैक्चरिंग पीएमआई डेटा है, गोल्ड और सिल्वर को इम्पैक्ट करेगा। क्रूड ऑयल को देखें, फ्लैट ओपनिंग था, थोड़ी बहुत सेलिंग आ रही है। ऊपर एक रेजिस्टेंस और है, थोड़ा और ऊपर आएगा तो यहाँ एक सेलिंग का प्लान करेंगे। नीचे एक पॉइंट ऑफ इंटरेस्ट है हमारे पास, एफईजी वाला एरिया, यहाँ पर रुकना चाहिए मुझे रिकॉर्डिंग, तो कोई नया सपोर्ट बनेगा वो देखेंगे, नहीं तो फिर मेजर सपोर्ट हमारे पास फिर 6024 के अराउंड दिखेगा। ठीक है, यहाँ पर भी मेरे अकॉर्डिंग थोड़ी बाइंग होनी चाहिए इस एरिया पे, एक्सपेक्ट करेंगे इस एरिया से भी थोड़ी बहुत बाइंग। कैंडल को ध्यान रखेंगे बस। फॉरेक्स में क्रूड ऑयल में रेजिस्टेंस लेके आया है क्या, चेक करो एक बार। फॉरेक्स में देख लेते हैं नेचुरल गैस को। क्रूड ऑयल का ना अपने क्रूड ऑयल नहीं, फॉरेक्स नहीं, मेरे अकॉर्डिंग तो नहीं है। फॉरेक्स में भी यही आपका एफएक्स ओपन ब्रोकर का चार्ट है, इसमें भी थोड़ा बहुत ऊपर लेवल पर है प्राइस का एग्जैक्ट रेजिस्टेंस। दूसरे ब्रोकर में भी देख लेते हैं, टीवीसी ब्रोकर भी है एक। हाँ, टीवीसी ब्रोकर में लेके आया है, ये जो मैंने पहले ब्रोकर बताया इसमें नहीं लेके आया। अलग अलग ब्रोकर का चार्ट थोड़ा बहुत ऊपर नीचे होता है बिकॉज सो एफएक्स ओपन ब्रोकर को देखोगे तो इसमें नहीं आया एग्जैक्ट रेजिस्टेंस पे एमसीएक्स की तरह। बट ये दूसरा जो ब्रोकर है फिलहाल के लिए, और ही ब्रोकर हो सकते हैं। टीवीसी जो ब्रोकर है, यूएस ऑयल के नाम से सर्च करोगे डब्ल्यूटीआई क्रूड ऑयल मिल जाएगा, वहां पर मार्केट रेजिस्टेंस पर ही हिट करके आया है। वो भी ऐसा नहीं, अभी वो फॉरेक्स में अर्ली मॉर्निंग जो हाई बनाया है 7 पीएम 7:30 पीएम के आसपास, दैट इज अ रेजिस्टेंस जोन। तो टीवीसी ब्रोकर में तो हिट करके आया है, एमसीएक्स में और आपका दूसरा जो ब्रोकर था उसमें नहीं किया। सो डिपेंड करता है आप कौन सा ब्रोकर देख रहे हो। टीवीसी में रेजिस्टेंस को हिट किया था अर्ली मॉर्निंग फॉरेक्स में, एंड डब्ल्यूटीआई क्रूड ये कौन सा है, एफएक्स ओपन ब्रोकर में नहीं किया। और किसी ब्रोकर का मेरे पास चार्ट नहीं है फिलहाल, ये तीन ही चार्ट है, एमसीएक्स एफएक्स ओपन एंड टीवीसी। अच्छा है, टीवीसी ब्रोकर बेटर है। हर ब्रोकर के अपने अपने वॉल्यूम के अकॉर्डिंग ही प्राइस मूव करता है ना। हाँ 8:15 और 8:30 पे। बाकी अभी मॉर्निंग पे मुंबई सेशन ओपन है, लंदन सेशन 1:30 पे ओपन होगा, न्यूयॉर्क सेशन 6:30 और यूएस मार्केट 8 PM। बैंक निफ्टी निफ्टी भी हल्का सा गैप अप ओपन हुआ था, फिर गिरता ही चला गया। बाइंग तो आ ही नहीं रही है, सेलिंग ही सेलिंग है। लेट्स सी, नीचे एक बार 15 मिनट में देख लेते हैं फ्यूचर चार्ट को। वैसे मॉर्निंग पे वही रेजिस्टेंस पे परसों वाले तो 3 दिन से सेम ही रेजिस्टेंस ले रहा है प्राइस। पहली कैंडल ही वहीं पर ओपन हुई थी, वहीं से सेलिंग आ गई थी। आई होप निकल गए होंगे सेलिंग में, प्रॉफिट बुक करके। अब देखते हैं सपोर्ट है या फिर नहीं एक बार नीचे, क्योंकि रेजिस्टेंस तो डे हाई बना हुआ है 15 मिनट बैंक निफ्टी फ्यूचर चार्ट। ठीक है, सपोर्ट पर ही है, 2 दिन से सपोर्ट पे रुका हुआ था। मुझे रिकॉर्डिंग अगर ये निकला 48,100 के नीचे तो ब्रेक हो जाएगा। रुका हुआ है, सपोर्ट पर ही है, बट 3 बार सपोर्ट ले चुका है यहाँ पर भी। 48,100 लास्ट लेवल है, इसके नीचे ब्रेक डाउन होता है तो फिर सपोर्ट ब्रेक हो जाएगा ऑलरेडी। इसके नीचे देख लेते हैं, ज़्यादा बेटर रहेगा अगर ये होल्ड नहीं करता है, क्योंकि 3 दिन से तो ले रहा है सपोर्ट, डब्लू बना नहीं है अभी तक। हाँ, थोड़ा नीचे आ जाए तो मेरे अकॉर्डिंग बेटर ही नीचे नेक्स्ट सपोर्ट एरिया पे फ्यूचर चार्ट पे, दैट इज अ गुड बाइंग एरिया। प्राइस अगर थोड़ा सा फ्यूचर बैंक निफ्टी फ्यूचर में और नीचे निकल के आता है, बेटर रहेगा 47,400 टू 500 के बीच में कहीं, या थोड़ा और नीचे, दैट इज अ गुड सपोर्ट। 47,150 is the best। 47,150 to 47,350। ठीक है, थोड़ा नीचे आ जाए तो बेटर है, वही एक मेजर सपोर्ट मिलेगा फ्यूचर में। बैंक निफ्टी अच्छा सपोर्ट है, वहाँ से बाइंग वापस कर सकते हैं। बाकी फ्रेश सेलिंग के लिए थोड़ा पुल बैक चाहिए हमें। ये तो काफ़ी पहले लिया था ना, आई थिंक जून 2024 का था वो। 48,323 ब्रेक हो गया था गैप डाउन में। यस, ये देखो। 1 time, 2 time, 3 time. लाइक भी करते रहो guys, don't forget to like the stream. बाकी कल न्यूज़ भी आई थी, इंडियन कोर्ट ने जो सेबी की एक्स चीफ थी उनके अगेंस्ट प्रोब स्टार्ट कर दिया एंड सेबी ने उसके अगेंस्ट फाइल कर दिया मोशन आई थिंक. कैसे कैसे लोग हो जाते हैं बताओ, इतने बड़े ऑर्गेनाइजेशन के हेड होके ऐसा फ्रॉड करते हैं बताओ. पता नहीं कितने ट्रेडिंग को सब पता होता होगा, लाइक कितने ट्रेड कहाँ पर लगे हुए हैं, अंदर का सारा गेम. इंडिया के भी जो टॉप ट्रेड मिनिस्टर हैं वो यूएस चले गए हैं इस वजह से, क्योंकि इंडिया को भी लग रहा है कि उन पर भी टैरिफ लग सकते हैं. तो ये भी एक न्यूज़ है. इंडियाज ट्रेड मिनिस्टर हेड्स टू यूएस फॉर टॉक्स एज ट्रम्प टैरिफ लूम्स, ऑफिशियल से पीयूष गोयल हैं वो.
Youth unemployment is an issue in all labor markets.
The big picture hasn't changed yet. The market is concerned about growth.
A key pillar of this bull market has been the resilience of corporate earnings.
We've struggled here domestically to kind of meet the bar of high valuation.
The broadening out of earnings later this year among the S&P 493 is really the most important question to watch.
The level of concentration is dangerous. You look back in history at times when we've been even remotely close to this, it's ended badly.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, heading towards the worst week of 2025 on the equity market on the S&P 500. Your scores look like this. Struggling to bounce by just 1/3% on the S&P 500. On the Nasdaq 100, up by 1/4%. Trade tariff threats front and center. The new proposal, 25% on Canada and Mexico next week. You know about that. But let's throw this one in there. An additional 10% on China.
So I'm going to take that and raise it and say, is that the reason why you're seeing the sell-off in equities right now? Is it that people suddenly believe that this could really escalate to some sort of tit-for-tat trade war, which seemed to be at least the rhetoric coming out of China? And this, to me, ultimately raises the question that Michael Hartnett raised at Bank of America. Does this mean that ultimately we are testing the Trump put, that if he doesn't walk back some of his rhetoric, we could end up with a much bigger sell-off as people prepare for actual tariffs?
So equities got sold off and sold hard going into the close. And I noticed the same thing that I think Michael Hartnett did as well. They didn't really talk about the stock market at all or the economy in the news conference. It's barely on their radar. So where is that Trump put? This is what Hartnett and the team seem to think. 57.83. Why 57.83? That was the close on election day. And then if we break below that level, you start to write the headline, stocks down under Trump, and all of a sudden maybe they start to take an interest.
Basically, if they care about the stock market, that is the strike price at which they ought to come out and be verbal about it. To me, this all goes back to this question of, does this Trump administration care about stocks, or is the focus fully trained on bonds, on the 10-year Treasury yields at a time where they're trying to create more efficiency in a government beset by a ton of debt?
We're about to find out how much this Federal Reserve cares about inflation. At 8:30 Eastern Time, you'll get PCE, their preferred read on inflation in the United States of America. Then after that, you'll get some Fed speak. And yesterday, the Fed speak was absolutely fascinating. President Schmidt saying the following: the Fed might have to balance inflation risks against growth concerns. The first acknowledgement from a Fed official about the prospect of stagflation.
That's exactly what stood out to me. Yesterday, stagflation suddenly came into the front and center for the first time in a long time. We heard that from Torsten Slok, and we heard that creeping into the rhetoric of Fed officials. Which is the biggest problem for them? Is it inflation, or is it the potential for slowing growth? They might get a reprieve today if PCE comes in a little bit below expectations. But to me, this is what's creeping into the market maybe more than even tariff threats.
Anne-Marie's down in Washington, D.C. She's got a lot to cover. We'll catch up with her in about 15 minutes' time. Equity futures at the moment struggling to bounce up by just 1/3%. The best day of the week so far, a gain of 0.01% on the S&P 500. Joining us through the next 60 minutes, Cameron Dawson of New Edge Wealth on increasing downside risk, former Trump trade advisor Kellyanne Shaw on President Trump's looming tariffs, and Greg Dacko of EY as economists await the next read on inflation. We begin this hour with stocks steady as markets head towards a second week of losses. Cameron Dawson of New Edge Wealth writing, upside is possible, but downside is likely over the course of the year due to the increasingly higher potential for detrimental policy, high starting valuations, and stretch starting positioning. Cameron joins us now for more. Cameron, good morning.
Good morning.
We've got tons to cover with you as well. Let's talk about next week. Tariffs. Are you expecting those to go on? The 25% on Mexico, on Canada, the 10% additional tariff on Chinese imports?
We don't think that we should rule it out. It seems like it's a key policy priority for this administration, and it is seeming increasingly that it's a key pay for the tax cuts that they want to be able to deliver. The problem is you get the tariffs immediately and taxes happen much later in the year, which just means that you don't get the offset immediately from the lower taxes in order to make the tariffs more palatable.
We've had a bit of a growth scare already in the equity market. The scores look like this for February. Consumer discretionary is down about 11% on the S&P 500. 10-year bond yields are lower by more than 25 basis points. Is it time to lean the other way or still too soon?
We don't think that the market is oversold yet, but we think that we've been seeing this brewing of a growth scare for some time. For the last 6 months, we've been cutting EPS estimates for the S&P 500. The market was rallying, but it was all based on valuation. You've also seen economic surprises roll over, so we are not surprised to see the 10-year Treasury move lower, simply because economic data has been weakening for the last couple of months. We're not at the point yet, again, that we're seeing markets be deeply oversold. We're getting a little bit closer after yesterday's move. And so we do think that eventually that's a buying opportunity simply because you're not seeing a big increase in recession risks, but certainly you're at the point where volatility is likely to remain.
You know, I want to just go back to what caused the sell-off yesterday. We're talking about tariff threats, but I took a look at some of the biggest losers. And actually, autos weren't that down as much as NVIDIA was, even after reporting better than expected earnings. There's the growth fears, but we're not seeing it represented in some sort of massive way. It really has been the big tech story. How much is that really what's underpinning some of the mood shift, the idea that this is a boom and bust cycle in technology like it always is, and we might be on the other side?
I would take it a step further and expand to it's the broader momentum trade that's unwinding, because we think this all started back when Walmart reported back last week, where you saw Walmart's one of the biggest names in the momentum index or momentum ETFs. That name trading down caused this spreading of things like Goldman Sachs to trade down, NVIDIA, Broadcom. All of these high momentum stocks have started to pull back pretty significantly. And we think it's just an unwind of that crowded positioning, crowded valuations. And because the valuations got so high, you had no room for error. So the unwinding of it just has much higher magnitude.
Why is it unwinding now? People have been talking about high valuations for a long time. They blamed it on everything under the sun, from high rates, from the idea that you're going to get an unwind from a surge in inflation. We haven't gotten either of that. Rates have fallen and inflation seems to be slowly coming out of the system. So What is it about this moment that is causing this unwind?
It's a great question because we always know that valuation is not a catalyst, but you're seeing it work to the opposite direction within international markets. Look at the German DAX going parabolic year to date, and it's not really based on any real fundamentals. It's just this big repositioning out of U.S. hyperdominance into a more global kind of leadership. But the reality is when you're starting from low valuations and just moving a little bit higher, you get these big moves to the upside. The opposite is true. You start from high valuations, no room for error, so you get bigger moves to the downside.
We've seen this shift in sentiment in the bond market as well. All of a sudden, 7 consecutive weeks of yields falling, not climbing. That went against the grain too. And this has happened without a real deceleration in the hard economic data. Lisa raised this question yesterday on the programme. Soft data has started to soften up. Do you see that bleeding into the hard data anytime soon?
It's such an interesting question because we did see soft data spike right after the election, meaning that you saw a big improvement in sentiment, and that has almost completely reversed. It did not result in better hard data following the election when we saw the soft data come up. So I think it will be really interesting today. We get the PCE. Will personal consumption, it's actually more interesting to us than the inflation part of things. Will you see personal consumption take a big dive? Consensus has estimates at 0.2% versus 0.7% in December. Could that surprise to the downside? And that would be a key test of will hard data follow soft data down?
There has been a sense that maybe we're not shifting to a slow growth. Maybe we're not shifting to rapid disinflation or a rapid spike up in inflation. But this S word that John started the show with, stagflation, and this fear that seems to be coming up again and again. Do you think that that is going to dominate over the next few months, or do you think that this is people flipping and flopping and trying to create a narrative to fit the moment?
So when you hear the word stagflation, you think 70s, which is high unemployment and a spike in inflation. We don't think we'll get that extreme. We think it's more stagflation light, kind of tastes great, less filling kind of stagflation, which just means stickier inflation and slowing growth. And that's something that the equity market doesn't like. It's certainly something that the Fed doesn't like. The question is, we think that tariffs could be initially inflationary and then after deflationary. So how does the Fed navigate that? Because if they ease policy in anticipation of that eventual deflationary episode from tariffs, the question would be is, do they run the risk of causing inflation to metastasize through the economy by easing policy too much with that downward pressure on growth? So we do think that their back is against the wall, which is why we think they're in this hold position until we see an uptick in unemployment.
Have you ever felt this exhausted at the end of the week?
Nope.
Okay, so I'm thinking about all the different mental gymnastics that everyone is trying to do to understand every different angle. What do you do with that? How do you invest with any conviction?
Yeah, so we think that we have to see volatility as a friend. We have to see volatility as opportunity because we do know that narratives will take hold. We'll see overcorrections to the downside. And this is why we think at the end of the day, it's far less important where the S&P 500 ends at the end of this year, far more important what you do with the volatility. We think that we could very easily retest the 200-day moving average. Interesting about that 57.83 level, that's effectively the 200-day. So we would get to the point where we would want to step into markets into that volatility. But we think that you keep your head down, you focus on quality, you focus on great companies that have the ability to navigate this uncertainty and use volatility to be able to add to your best positions.
March 4th is Tuesday. 25% additional tariffs on Canadian and Mexican imports. Throw China into the mix as well. You mentioned whether the market's moving for it. This month in February, still got another day to go. The peso and the loonie both stronger on the month marginally against the US dollar.
There is a feeling that this is all a threat. And even yesterday when Donald Trump came out with his Truth Social post, he seemed to indicate that it had to do with migration and immigrants and fentanyl more than it did about some sort of reciprocity, which made people think that maybe there was some sort of negotiation. You saw the leaders of both countries come out and say, look, we're working with them and we think that we're going to give them as good. So a lot of people seem to be dismissing that. The China story is different, and we're actually starting to see that in earnings.
Cameron, it's good to see you. As always, good to catch up. Cameron Dawson of New Edge Wealth. This week's just never ending. The S&P 500 down on the week, down on the month, up on a session by 0.4%. With an update on stories elsewhere, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Ukrainian President Volodymyr Zelensky will meet with President Donald Trump in Washington today. The two leaders are expected to sign a mineral deal after Trump called Putin last week to discuss a peace plan. The agreement is expected to include U.S. security guarantees to deter further Russian aggression. Elsewhere, a U.S. district judge ordered the Trump administration to produce witnesses for depositions, provide records, and answer questions about the Musk-led Department of Government Efficiency. The lawsuit was brought by labor unions and nonprofit groups and seeks to block DOJ's access to systems at 3 federal agencies. A check on Dell shares in the pre-market. They are down by nearly 2.5%. Dell expects to ship $15 billion worth of AI servers this fiscal year. That is a 50% jump from last year. But despite that strong sales outlook, Dell also expects gross margins to decline 1% due to high hardware costs. And that's your brief. John.
Hey, Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, tariffs incoming.
The drugs come in through Mexico. They come, a lot of them, not all of them, but a lot of them come from China. And that's why we did that. It's 10 plus 10. So that goes on the 4th of March. And then on the 2nd of April, we have reciprocal tariffs.
We've got a busy month coming up and a Federal Reserve decision somewhere in between. Up next on the program, former senior Trump trade advisor Kellyanne Shaw joining Anne-Marie down in Washington, D.C. From New York City this morning, good morning.
The big picture hasn't changed yet. The market is concerned about growth.
A key pillar of this bull market has been the resilience of corporate earnings.
We've struggled here domestically to kind of meet the bar of high valuation.
The broadening out of earnings later this year among the S&P 493 is really the most important question to watch.
The level of concentration is dangerous. You look back in history at times when we've been even remotely close to this, it's ended badly.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, heading towards the worst week of 2025 on the equity market on the S&P 500. Your scores look like this. Struggling to bounce by just 1/3% on the S&P 500. On the Nasdaq 100, up by 1/4%. Trade tariff threats front and center. The new proposal, 25% on Canada and Mexico next week. You know about that. But let's throw this one in there. An additional 10% on China.
So I'm going to take that and raise it and say, is that the reason why you're seeing the sell-off in equities right now? Is it that people suddenly believe that this could really escalate to some sort of tit-for-tat trade war, which seemed to be at least the rhetoric coming out of China? And this, to me, ultimately raises the question that Michael Hartnett raised at Bank of America. Does this mean that ultimately we are testing the Trump put, that if he doesn't walk back some of his rhetoric, we could end up with a much bigger sell-off as people prepare for actual tariffs?
So equities got sold off and sold hard going into the close. And I noticed the same thing that I think Michael Hartnett did as well. They didn't really talk about the stock market at all or the economy in the news conference. It's barely on their radar. So where is that Trump put? This is what Hartnett and the team seem to think. 57.83. Why 57.83? That was the close on election day. And then if we break below that level, you start to write the headline, stocks down under Trump, and all of a sudden maybe they start to take an interest.
Basically, if they care about the stock market, that is the strike price at which they ought to come out and be verbal about it. To me, this all goes back to this question of, does this Trump administration care about stocks, or is the focus fully trained on bonds, on the 10-year Treasury yields at a time where they're trying to create more efficiency in a government beset by a ton of debt?
We're about to find out how much this Federal Reserve cares about inflation at 8:30
The big picture hasn't changed yet. The market is concerned about growth.
A key pillar of this bull market has been the resilience of corporate earnings.
We've struggled here domestically to kind of meet the bar of high valuation.
The broadening out of earnings later this year among the S&P 493 is really the most important question to watch.
The level of concentration is dangerous. You look back in history at times when we've been even remotely close to this, it's ended badly.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, heading towards the worst week of 2025 on the equity market on the S&P 500. Your scores look like this. Struggling to bounce by just 1/3 on the S&P 500. On the Nasdaq 100, up by 1/4%. Trade tariff threats front and center. The new proposal, 25% on Canada and Mexico next week. You know about that. But let's throw this one in there. An additional 10% on China.
So I'm going to take that and raise it and say, is that the reason why you're seeing the sell-off in equities right now? Is it that people suddenly believe that this could really escalate to some sort of tit-for-tat trade war, which seemed to be at least the rhetoric coming out of China? And this, to me, ultimately raises the question that Michael Hartnett raised at Bank of America. Does this mean that ultimately we are testing the Trump put, that if he doesn't walk back some of his rhetoric, we could end up with a much bigger sell-off as people prepare for actual tariffs?
So equities got sold off and sold hard going into the close. And I noticed the same thing that I think Michael Hartnett did as well. They didn't really talk about the stock market at all or the economy in the news conference. It's barely on their radar. So where is that Trump put? This is what Hartnett and the team seem to think. 57.83. Why 57.83? That was the close on election day. And then if we break below that level, you start to write the headline, stocks down under Trump, and all of a sudden maybe they start to take an interest.
Basically, if they care about the stock market, that is the strike price at which they ought to come out and be verbal about it. To me, this all goes back to this question of, does this Trump administration care about stocks, or is the focus fully trained on bonds, on the 10-year Treasury yields at a time where they're trying to create more efficiency in a government beset by a ton of debt?
We're about to find out how much this Federal Reserve cares about inflation. At 8:30 Eastern Time, you'll get PCE, their preferred read on inflation in the United States of America. Then after that, you'll get some Fed speak. And yesterday, the Fed speak was absolutely fascinating. President Schmidt saying the following: the Fed might have to balance inflation risks against growth concerns. The first acknowledgement from a Fed official about the prospect of stagflation.
That's exactly what stood out to me. Yesterday, stagflation suddenly came into the front and center for the first time in a long time. We heard that from Torsten Slok, and we heard that creeping into the rhetoric of Fed officials. Which is the biggest problem for them? Is it inflation, or is it the potential for slowing growth? They might get a reprieve today if PCE comes in a little bit below expectations, but to me, this is what's creeping into the market maybe more than even tariff threats.
Anne-Marie's down in Washington, D.C. She's got a lot to cover. We'll catch up with her in about 15 minutes' time. Equity futures at the moment struggling to bounce up by just 1/3%. The best day of the week so far, a gain of 0.01% on the S&P 500. Joining us through the next 60 minutes, Cameron Dawson of New Edge Wealth on increasing downside risk. Former Trump trade advisor Kellyanne Shaw on President Trump's looming tariffs. And Greg Dacko of EY as economists await the next read on inflation. We begin this hour with stocks steady as markets head towards a second week of losses. Cameron Dawson of New Edge Wealth writing, upside is possible, but downside is likely over the course of the year due to the increasingly higher potential for detrimental policy, high starting valuations, and stretch starting positioning. Cameron joins us now for more. Cameron, good morning.
Good morning.
We've got tons to cover with you as well. Let's talk about next week. Tariffs. Are you expecting those to go on? The 25% on Mexico, on Canada, the 10% additional tariff on Chinese imports?
We don't think that we should rule it out. It seems like it's a key policy priority for this administration. And it is seeming increasingly that it's a key pay for the tax cuts that they want to be able to deliver. The problem is you get the tariffs immediately and taxes happen much later in the year, which just means that you don't get the offset immediately from the lower taxes in order to make the tariffs more palatable.
We've had a bit of a growth scare already in the equity market. The scores look like this for February. Consumer discretionary is down about 11% on the S&P 500. 10-year bond yields are lower by more than 25 basis points. Is it time to lean the other way or still too soon?
We don't think that the market is oversold yet, but we think that we've been seeing this brewing of a growth scare for some time. For the last 6 months, we've been cutting EPS estimates for the S&P 500. The market was rallying, but it was all based on valuation. You've also seen economic surprises roll over, so we are not surprised to see the 10-year Treasury move lower, simply because economic data has been weakening for the last couple of months. We're not at the point yet, again, that we're seeing markets be deeply oversold. We're getting a little bit closer after yesterday's move. And so we do think that eventually that's a buying opportunity simply because you're not seeing a big increase in recession risks, but certainly you're at the point where volatility is likely to remain.
You know, I want to just go back to what caused the sell-off yesterday. We're talking about tariff threats, but I took a look at some of the biggest losers. And actually, autos weren't that down as much as NVIDIA was, even after reporting better than expected earnings. There's the growth fears, but we're not seeing it represented in some sort of massive way. It really has been the big tech story. How much is that really what's underpinning some of the mood shift, the idea that this is a boom and bust cycle in technology like it always is, and we might be on the other side?
I would take it a step further and expand to it's the broader momentum trade that's unwinding, because we think this all started back when Walmart reported back last week, where you saw Walmart's one of the biggest names in the momentum index or momentum ETFs. That name trading down caused this spreading of things like Goldman Sachs to trade down, NVIDIA, Broadcom. All of these high momentum stocks have started to pull back pretty significantly. And we think it's just an unwind of that crowded positioning, crowded valuations. And because the valuations got so high, you had no room for error. So the unwinding of it just has much higher magnitude.
Why is it unwinding now? People have been talking about high valuations for a long time. They blamed it on everything under the sun, from high rates, from the idea that you're going to get an unwind from a surge in inflation. We haven't gotten either of that. Rates have fallen and inflation seems to be slowly coming out of the system. So what is it about this moment that is causing this unwind?
It's a great question, because we always know that valuation is not a catalyst, but you're seeing it work to the opposite direction within international markets. Look at the German DAX going parabolic year to date, and it's not really based on any real fundamentals. It's just this big repositioning out of U.S. hyperdominance into a more global kind of leadership. But the reality is, when you're starting from low valuations and just moving a little bit higher, you get these big moves to the upside. The opposite is true. You start from high valuations, no room for error, so you get bigger moves to the downside.
We've seen this shift in sentiment in the bond market as well. All of a sudden, 7 consecutive weeks of yields falling, not climbing. That went against the grain too. And this has happened without a real deceleration in the hard economic data. Lisa raised this question yesterday on the programme. Soft data has started to soften up. Do you see that bleeding into the hard data anytime soon?
It's such an interesting question, because we did see soft data spike right after the election, meaning that you saw a big improvement in sentiment, and that has almost completely reversed. It did not result in better hard data following the election when we saw the soft data come up. So I think it will be really interesting today. We get the PCE. Will personal consumption, it's actually more interesting to us than the inflation part of things. Will you see personal consumption take a big dive? Consensus has estimates at 0.2% versus 0.7% in December. Could that surprise to the downside? And that would be a key test of, will hard data follow soft data down?
There has been a sense that maybe we're not shifting to a slow growth. Maybe we're not shifting to rapid disinflation or a rapid spike up in inflation. But this S word that John started the show with, stagflation, and this fear that seems to be coming up again and again. Do you think that that is going to dominate over the next few months, or do you think that this is people flipping and flopping and trying to create a narrative to fit the moment?
So when you hear the word stagflation, you think 70s, which is high unemployment and a spike in inflation. We don't think we'll get that extreme. We think it's more stagflation light, kind of tastes great, less filling kind of stagflation, which just means stickier inflation and slowing growth. And that's something that the equity market doesn't like. It's certainly something that the Fed doesn't like. The question is, we think that tariffs could be initially inflationary and then after deflationary. So how does the Fed navigate that? Because if they ease policy in anticipation of that and that eventual deflationary episode from tariffs, the question would be is, do they run the risk of causing inflation to metastasize through the economy by easing policy too much with that downward pressure on growth? So we do think that their back is against the wall, which is why we think they're in this hold position until we see an uptick in unemployment.
Have you ever felt this exhausted at the end of the week?
Nope.
Okay, so I'm thinking about all the different mental gymnastics that everyone is trying to do to understand every different angle. What do you do with that? How do you invest with any conviction?
Yeah. So we think that we have to see volatility as a friend. We have to see volatility as opportunity because we do know that narratives will take hold. We'll see overcorrections to the downside. And this is why we think at the end of the day, it's far less important where the S&P 500 ends at the end of this year, far more important what you do with the volatility. We think that we could very easily retest the 200-day moving average. Interesting about that 57.83 level, that's effectively the 200-day. So we would get to the point where we would want to step into markets into that volatility. But we think that you keep your head down, you focus on quality, you focus on great companies that have the ability to navigate this uncertainty and use volatility to be able to add to your best positions.
March 4th is Tuesday. 25% additional tariffs on Canadian and Mexican imports. Throw China into the mix as well. You mentioned whether the market's moving for it. This month in February, still got another day to go. The peso and the loonie both stronger on the month marginally against the US dollar.
There is a feeling that this is all a threat. And even yesterday when Donald Trump came out with his Truth Social post, he seemed to indicate that it had to do with migration and immigrants and fentanyl more than it did about some sort of reciprocity, which made people think that maybe there was some sort of negotiation. You saw the leaders of both countries come out and say, look, we're working with them and we think that what we're going to give them is good. So a lot of people seem to be dismissing that. The China story is different, and we're actually starting to see that in earnings.
Cameron, it's good to see you. As always, good to catch up. Cameron Dawson of New Edge Wealth. This week's just never ending. The S&P 500 down on the week, down on the month, up on a session by 0.4%. With an update on stories elsewhere, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Ukrainian President Volodymyr Zelensky will meet with President Donald Trump in Washington today. The two leaders are expected to sign a mineral deal after Trump called Putin last week to discuss a peace plan. The agreement is expected to include U.S. security guarantees to deter further Russian aggression. Elsewhere, a U.S. district judge ordered the Trump administration to produce witnesses for depositions, provide records, and answer questions about the Musk-led Department of Government Efficiency. The lawsuit was brought by labor unions and nonprofit groups and seeks to block DOJ's access to systems at 3 federal agencies. A check on Dell shares in the pre-market. They are down by nearly 2.5%. Dell expects to ship $15 billion worth of AI servers this fiscal year. That is a 50% jump from last year. But despite that strong sales outlook, Dell also expects gross margins to decline 1% due to high hardware costs. And that's your brief. John.
Hey, Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, tariffs incoming.
The drugs come in through Mexico. They come, a lot of them, not all of them, but a lot of them come from China. And that's why we did that. It's 10 plus 10. So that goes on the 4th of March. And then on the 2nd of April, we have reciprocal tariffs.
We've got a busy month coming up and a Federal Reserve decision somewhere in between. Up next on the program, former senior Trump trade advisor Kellyanne Shaw joining Anne-Marie down in Washington, D.C. From New York City this morning, good morning.
The big picture hasn't changed yet. The market is concerned about growth.
A key pillar of this bull market has been the resilience of corporate earnings.
We've struggled here domestically to kind of meet the bar of high valuation.
The broadening out of earnings later this year among the S&P 493 is really the most important question to watch.
The level of concentration is dangerous. You look back in history at times when we've been even remotely close to this, it's ended badly.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, heading towards the worst week of 2025 on the equity market on the S&P 500. Your scores look like this. Struggling to bounce by just 1/3% on the S&P 500. On the NASDAQ 100, up by 1/4%. Trade tariff threats front and center. The new proposal, 25% on Canada and Mexico next week. You know about that. But let's throw this one in there. An additional 10% on China.
So I'm going to take that and raise it and say, is that the reason why you're seeing the sell-off in equities right now? Is it that people suddenly believe that this could really escalate to some sort of tit-for-tat trade war, which seemed to be at least the rhetoric coming out of China? And this, to me, ultimately raises the question that Michael Hartnett raised at Bank of America. Does this mean that ultimately we are testing the Trump put, that if he doesn't walk back some of his rhetoric, we could end up with a much bigger sell-off as people prepare for actual tariffs?
So equities got sold off and sold hard going into the close. And I noticed the same thing that I think Michael Hartnett did as well. They didn't really talk about the stock market at all or the economy in the news conference. It's barely on their radar. So where is that Trump put? This is what Hartnett and the team seem to think. 57.83. Why 57.83? That was the close on election day. And then if we break below that level, you start to write the headline, stocks down under Trump, and all of a sudden maybe they start to take an interest.
Basically, if they care about the stock market, that is the strike price at which they ought to come out and be verbal about it. To me, this all goes back to this question of, does this Trump administration care about stocks, or is the focus fully trained on bonds, on the 10-year Treasury yields at a time where they're trying to create more efficiency in a government beset by a ton of debt?
We're about to find out how much this Federal Reserve cares about inflation. At 8:30 Eastern Time, you'll get PCE, their preferred read on inflation in the United States of America. Then after that, you'll get some Fed speak. And yesterday, the Fed speak was absolutely fascinating. President Schmidt saying the following: the Fed might have to balance inflation risks against growth concerns. The first acknowledgement from a Fed official about the prospect of stagflation.
That's exactly what stood out to me. Yesterday, stagflation suddenly came into the front and center for the first time in a long time. We heard that from Torsten Slok, and we heard that creeping into the rhetoric of Fed officials. Which is the biggest problem for them? Is it inflation, or is it the potential for slowing growth? They might get a reprieve today if PCE comes in a little bit below expectations. But to me, this is what's creeping into the market maybe more than even tariff threats.
Anne-Marie's down in Washington, D.C. She's got a lot to cover. We'll catch up with her in about 15 minutes' time. Equity futures at the moment struggling to bounce up by just 1/3%. The best day of the week so far, a gain of 0.01% on the S&P 500. Joining us through the next 60 minutes, Cameron Dawson of New Edge Wealth on increasing downside risk, former Trump trade advisor Kellyanne Shaw on President Trump's looming tariffs, and Greg Dacko of EY as economists await the next read on inflation. We begin this hour with stocks steady as markets head towards a second week of losses. Cameron Dawson of New Edge Wealth writing, upside is possible, but downside is likely over the course of the year due to the increasingly higher potential for detrimental policy, high starting valuations, and stretch starting positioning. Cameron joins us now for more. Cameron, good morning.
Good morning.
We've got tons to cover with you as well. Let's talk about next week. Tariffs. Are you expecting those to go on? The 25% on Mexico, on Canada, the 10% additional tariff on Chinese imports?
We don't think that we should rule it out. It seems like it's a key policy priority for this administration, and it is seeming increasingly that it's a key pay for the tax cuts that they want to be able to deliver. The problem is you get the tariffs immediately and taxes happen much later in the year, which just means that you don't get the offset immediately from the lower taxes in order to make the tariffs more palatable.
We've had a bit of a growth scare already in the equity market. The scores look like this for February. Consumer discretionary is down about 11% on the S&P 500. 10-year bond yields are lower by more than 25 basis points. Is it time to lean the other way or still too soon?
We don't think that the market is oversold yet, but we think that we've been seeing this brewing of a growth scare for some time. For the last 6 months, we've been cutting EPS estimates for the S&P 500. The market was rallying, but it was all based on valuation. You've also seen economic surprises roll over, so we are not surprised to see the 10-year Treasury move lower, simply because economic data has been weakening for the last couple of months. We're not at the point yet, again, that we're seeing markets be deeply oversold. We're getting a little bit closer after yesterday's move. And so we do think that eventually that's a buying opportunity simply because you're not seeing a big increase in recession risks, but certainly you're at the point where volatility is likely to remain.
You know, I want to just go back to what caused the sell-off yesterday. We're talking about tariff threats, but I took a look at some of the biggest losers. And actually, autos weren't that down as much as NVIDIA was, even after reporting better than expected earnings. There's the growth fears, but we're not seeing it represented in some sort of massive way. It really has been the big tech story. How much is that really what's underpinning some of the mood shift, the idea that this is a boom and bust cycle in technology like it always is, and we might be on the other side?
I would take it a step further and expand to it's the broader momentum trade. that's unwinding. Because we think this all started back when Walmart reported back last week, where you saw Walmart's one of the biggest names in the momentum index or momentum ETFs. That name trading down caused this spreading of things like Goldman Sachs to trade down, Nvidia, Broadcom. All of these high momentum stocks have started to pull back pretty significantly. And we think it's just an unwind of that crowded positioning, crowded valuations. And because the valuations got so high, you had no room for error. So the unwinding of it just has much higher magnitude.
Why is it unwinding now? People have been talking about high valuations for a long time. They blamed it on everything under the sun, from high rates, from the idea that you're going to get an unwind from a surge in inflation. We haven't gotten either of that. Rates have fallen and inflation seems to be slowly coming out of the system. So what is it about this moment that is causing this unwind?
It's a great question, because we always know that valuation is not a catalyst, but you're seeing it work to the opposite direction within international markets. Look at the German DAX going parabolic year to date, and it's not really based on any real fundamentals. It's just this big repositioning out of U.S. hyperdominance into a more global kind of leadership. But the reality is, when you're starting from low valuations and just moving a little bit higher, you get these big moves to the upside. The opposite is true. You start from high valuations, no room for error, so you get bigger moves to the downside.
We've seen this shift in sentiment in the bond market as well. All of a sudden, 7 consecutive weeks of yields falling, not climbing. That went against the grain too. And this has happened without a real deceleration in the hard economic data. Lisa raised this question yesterday on the programme. Soft data has started to soften up. Do you see that bleeding into the hard data anytime soon?
It's such an interesting question, because we did see soft data spike right after the election, meaning that you saw a big improvement in sentiment, and that has almost completely reversed. It did not result in better hard data following the election when we saw the soft data come up. So I think it will be really interesting today. We get the PCE. Will personal consumption, it's actually more interesting to us than the inflation part of things. Will you see personal consumption take a big dive? Consensus has estimates at 0.2% versus 0.7% in December. Could that surprise to the downside? And that would be a key test of, will hard data follow soft data down?
There has been a sense that maybe we're not shifting to a slow growth. Maybe we're not shifting to rapid disinflation or a rapid spike up in inflation. But this S word that John started the show with, stagflation, and this fear that seems to be coming up again and again. Do you think that that is going to dominate over the next few months, or do you think that this is people flipping and flopping and trying to create a narrative to fit the moment?
So when you hear the word stagflation, you think 70s, which is high unemployment and a spike in inflation. We don't think we'll get that extreme. We think it's more stagflation light, kind of tastes great, less filling kind of stagflation, which just means stickier inflation and slowing growth. And that's something that the equity market doesn't like. It's certainly something that the Fed doesn't like. The question is, we think that tariffs could be initially inflationary and then after deflationary. So how does the Fed navigate that? Because if they ease policy in anticipation of that and that eventual deflationary episode from tariffs, the question would be do they run the risk of causing inflation to metastasize through the economy by easing policy too much with that downward pressure on growth? So we do think that their back is against the wall, which is why we think they're in this hold position until we see an uptick in unemployment.
Have you ever felt this exhausted at the end of the week?
Nope.
Okay, so I'm thinking about all the different mental gymnastics that everyone is trying to do to understand every different angle. What do you do with that? How do you invest with any conviction?
Yeah. So we think that we have to see volatility as a friend. We have to see volatility as opportunity, because we do know that narratives will take hold. We'll see overcorrections to the downside. And this is why we think at the end of the day, it's far less important where the S&P 500 ends at the end of this year, far more important what you do with the volatility. We think that we could very easily retest the 200-day moving average. Interesting about that 57.83 level, that's effectively the 200-day. So we would get to the point where we would want to step into markets into that volatility. But we think that you keep your head down, you focus on quality, you focus on great companies that have the ability to navigate this uncertainty and use volatility to be able to add to your best positions.
March 4th is Tuesday. 25% additional tariffs on Canadian and Mexican imports. Throw China into the mix as well. You mentioned whether the market's moving for it. this month in February, still got another day to go. The peso and the loonie both stronger on the month marginally against the US dollar.
There is a feeling that this is all a threat. And even yesterday when Donald Trump came out with his Truth Social post, he seemed to indicate that it had to do with migration and immigrants and fentanyl more than it did about some sort of reciprocity, which made people think that maybe there was some sort of negotiation. You saw the leaders of both countries come out and say, look, we're working with them and we think that we're going to give them as good. So a lot of people seem to be dismissing that. The China story is different, and we're actually starting to see that in earnings.
Cameron, it's good to see you. As always, good to catch up. Cameron Dawson of New Edge Wealth. This week's just never ending. The S&P 500 down on the week, down on the month, up on a session by 0.4%. With an update on stories elsewhere, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Ukrainian President Volodymyr Zelensky will meet with President Donald Trump in Washington today. The two leaders are expected to sign a mineral deal after Trump called Putin last week to discuss a peace plan. The agreement is expected to include U.S. security guarantees to deter further Russian aggression. Elsewhere, a U.S. district judge ordered the Trump administration to produce witnesses for depositions, provide records, and answer questions about the Musk-led Department of Government Efficiency. The lawsuit was brought by labor unions and nonprofit groups and seeks to block DOJ's access to systems at 3 federal agencies. A check on Dell shares in the pre-market. They are down by nearly 2.5%. Dell expects to ship $15 billion worth of AI servers this fiscal year. That is a 50% jump from last year. But despite that strong sales outlook, Dell also expects gross margins to decline 1% due to high hardware costs. And that's your brief. John.
Hey, Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, tariffs incoming.
The drugs come in through Mexico. They come, a lot of them, not all of them, but a lot of them come from China. And that's why we did that. It's 10 plus 10. So that goes on the 4th of March. And then on the 2nd of April, we have reciprocal tariffs.
We've got a busy month coming up and a Federal Reserve decision somewhere in between. Up next on the program, former senior Trump trade advisor Kellyanne Shaw joining Anne-Marie down in Washington, D.C. From New York City this morning. Good morning.
The big picture hasn't changed yet. The market is concerned about growth.
A key pillar of this bull market has been the resilience of corporate earnings.
We've struggled here domestically to kind of meet the bar of high valuation.
The broadening out of earnings later this year among the S&P 493 is really the most important question to watch.
The level of concentration is dangerous. You look back in history at times when we've been even remotely close to this, it's ended badly.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, heading towards the worst week of 2025 on the equity market on the S&P 500. Your scores look like this. Struggling to bounce by just 1/3% on the S&P 500. On the Nasdaq 100, up by 1/4%. Trade tariff threats front and center. The new proposal, 25% on Canada and Mexico next week. You know about that. But let's throw this one in there. An additional 10% on China.
So I'm going to take that and raise it and say, is that the reason why you're seeing the sell-off in equities right now? Is it that people suddenly believe that this could really escalate to some sort of tit-for-tat trade war, which seemed to be at least the rhetoric coming out of China? And this, to me, ultimately raises the question that Michael Hartnett raised at Bank of America. Does this mean that ultimately we are testing the Trump put, that if he doesn't walk back some of his rhetoric, we could end up with a much bigger sell-off as people prepare for actual tariffs?
So equities got sold off and sold hard going into the close. And I noticed the same thing that I think Michael Hartnett did as well. They didn't really talk about the stock market at all or the economy in the news conference. It's barely on their radar. So where is that Trump put? This is what Hartnett and the team seem to think. 57.83. Why 57.83? That was the close on election day. And then if we break below that.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Fu.
And I'm Matt Miller, standing in for Romaine Bostic. We're kicking you off to the closing bell here in the U.S. Let's get a quick check first off at the markets, which had turned down and are now intraday back up. It's been a very volatile session after the meeting at the Oval Office that by now we've all watched, in which the debate got a little bit heated between President Trump, J.D. Vance, and President Zelensky. The S&P 500 now up 0.5%, 58.93, but down for the week, and the worst week that we've seen for stocks since September. The NASDAQ down 0.5%, and the mid caps, as well as the Russell 2000, are down a little bit less than a third.
All right. And as far as our top stories go, let's start with inflation relief, at least for now. The latest read on the Fed's favorite price gauge, reinforcing bets on rate cuts this year, and also keeping the rally in U.S. Treasuries intact. But it does come as consumer spending weakens, especially by those who are not in the top 10% of U.S. households. And that is fueling a growth scare and increasing the risk of economic fragility. Now, speaking of risks, President Trump's meeting with Ukraine's leader, as you mentioned, Matt, quickly falling apart, and with it, perhaps the possibility of a tidy end to Russia's war in Ukraine.
Yeah, absolutely. The president, during his campaign, repeatedly stating that he would end this war within 24 hours of getting to the Oval Office.
I think that was more in spirit rather than by a firm deadline.
He was pretty serious about it, and it has now been 6 weeks and 5 days. I think he's finding that it's a lot more difficult than he thought it would be. Today, we saw President Zelensky, I thought, very odd, leaning over President Trump and essentially blaming him for allowing Russia to re-invade Ukraine to J.D. Vance, who quickly snapped back. And then, of course, things got a little bit out of control.
Yeah, the optics were not good as far as the U.S. was concerned. And you heard and saw President Trump quickly, come back at Zelensky.
And Zelensky has now tweeted and thanked the president, thanked Congress, and said that he hopes they can continue these negotiations for peace. I want to go to Washington right now to speak with a member of the Trump administration. U.S. Treasury Secretary Scott Bessent is standing by, and I'll hand things off to Bloomberg's David Weston, who will do the interview. David?
For our Bloomberg audiences worldwide, I'm David Weston. I'm delighted to welcome now the U.S. Treasury Secretary. He's Mr. Scott Bessent. So, Mr. Secretary, thank you so much for joining us. Ukraine is at the top of everyone's mind right now, and particularly the deal that you were the point person on as you went over to Kyiv to actually first present it. We all watched what happened in the Oval Office. I guess the simple question is, can this deal be saved?
Well, David, the question is which deal, the peace deal or the economic deal? Because clearly it's very difficult to do an economic deal with a leader who doesn't want to do a peace deal. And I will tell you, I was sitting 3 away from President Trump or President Zelensky, and this has to be one of the great diplomatic own goals in history.
If Mr. Zelensky called back right now and said, I'm sorry, I want to put it back together, what would he have to do?
I don't know. Mr. Zelensky and his team were taken out of the Oval, and they kept coming back with that message, and then they left the White House, and it's going to take a lot of repair. And, David, the real tragedy here, maybe things can be repaired with the administration, but I don't know how the American people are going to feel. And more importantly, the economic deal, the meeting today, the real purpose was to show that there was no daylight between the Americans and the Ukrainians. So President Trump's idea was to show that with the economic deals, to show that we're more intertwined, and that would be a symbol to the Ukrainian people, to Russian leadership, and to the American people. And President Zelensky blew that up today. I'm not sure what he was thinking.
As I say, you were the point person, really, for the administration on the economic deal. We all thought on the outside we were very close. In fact, I think many of us thought there'd be a signing today, that we'd have some form of economic deal today. Were we as close as those of us on the outside thought? Were you surprised?
Again, I was shocked that President Zelensky would come into the Oval Office, behave like this, speak to the president, speak to the vice president, but more importantly, disrespect the American people like this. I know he's under a great deal of stress. He and I had a very heated exchange in Kyiv. I think the same thing may have happened between him and Vice President Vance and Secretary Rubio in Munich. And, to come in and behave like this was unacceptable. And look, I mean, what better runway did he have that President of France, Emmanuel Macron, in the Oval on Monday? Yesterday, we had a fantastic meeting with Prime Minister Keir Starmer from the UK, and then President Zelensky today. I mean, you could not have asked for a better arc. And he walked in, and I'm not sure what he was thinking.
Many of us have been in heated negotiations, not at this level, but still heated negotiations where people pound the table, they may walk out the door and things like that. And it's actually part of the negotiation. Is that what we saw today, or was this a more fundamental rupture?
David, you don't do a negotiation with the President of the United States in public like this. That we were scheduled to have lunch afterwards, and that perhaps he could have brought up some of the points. Instead, he chose to let things go into a downward spiral on worldwide television. And, again, I keep coming back to the disrespect of the American people. It was one thing for President Zelensky and I had an extended, heated negotiation in Kyiv, but we were going to get this economic agreement done. But when you bring it out to the public like this, we'll see if there's any coming back.
If there is further negotiation, do you expect to remain the point person on the economic deal?
I expect to be the point person on the economic deal, but ultimately it's going to be up to President Trump whether he thinks that he can continue negotiating with President Zelensky.
What is in it for Ukraine, the economic deal? Why is it in their best interest to sign this deal?
The economic deal is a fantastic deal because if you think the U.S. is willing to co-join its economic interest with Ukraine, and like I said, a very, very strong symbol, potential for very high returns for Ukrainian people. And again, it was meant to be a very strong symbol to Russian leadership that the U.S. and Ukrainian people are more co-joined. And we have economic interest on the ground. Economic security becomes military security. The economy of Ukraine coming out of this, I thought our deal would have really been an accelerant to Ukrainian growth. I mean, you look at Poland next door, and since the Iron Curtain came down, when it came down, Poland and Ukraine had roughly the same size economies. Now Poland, before the war started, Poland's was 4 times larger. So Ukraine has a lot of potential. We'd hope to help unlock it. We'll see whether a deal can be done.
Would it be beneficial to Ukraine, though? I understand why it might benefit the United States. But you've heard some people like Larry Summers said to me, this is sort of like Versailles, except that the Germans were the aggressors in World War I. These are the victims. Why should they give up natural resources? What's wrong with that argument?
Well, look, I think Professor Summers should comment on things where he has all the facts. And Versailles was debt. This is equity. We get nothing if the Ukrainian people don't get anything. It's win-win. So there is no debt component here. Many of the European loans, or much of the European aid, has come in the form of debt. Thus far, U.S. has put in grants, and this is not debt. If it were debt, the Ukrainian bonds would not have been going up on the deal. So I think Mr. Summers, Professor Summers, should maybe call me and ask for the details before commenting. Maybe it's a nice media line that it's Versailles, but it's just not the truth.
You also have some other responsibilities besides trying to get an economic deal in Ukraine. Let's talk a little bit of the economy. And specifically, you and I have talked before, you have as a goal, as I recall, getting the deficit down to 3% of GDP in the United States. Saying it's going to take a little time to do it, not right away. What role does revenue from tariffs play in your spreadsheet when you look at getting to that 3% number?
Good. David, that's a great question, because over the coming weeks, months, as we put the budget together, your viewers are going to see lots of different nomenclature. There's CBO scoring, and CBO scoring will likely not include any tariff income, and so much of the tariff income could be substantial. We will see where the tariffs finally end up. The China tariffs, since they were put on, have brought in substantial revenue. They continue to bring in substantial revenue. President Trump has talked about reciprocal tariffs. If tariffs are his favorite word, I would say reciprocal has gotten to be his second favorite word. And in the reciprocal tariffs, you actually don't know the path of what's going to happen, David, because the idea there is that if Europe has a 12.5% tax on our cars, we could either put a 12.5% tax on theirs, or the tariffs could get dropped altogether. So it's going to be very path dependent, but I would expect that with the 10-year scoring that the CBO likes to use, that there could be substantial tariff income over the next 10 years.
When we look at tariffs, there's a lot of different things being talked about, proposed, threatened, even imposed. One of them is Mexico, which comes up next week. Is it important to get the revenue from the Mexico tariffs? Because I know Mexico is sort of moving, it appears right now, for example, with respect to tariffs on things coming into Mexico from China. Can they get off the hook on tariffs?
So the tariff negotiation isn't under the purview of Treasury. It's USTR, U.S. Trade Representative, and Commerce. So I'm going to leave that question to them. I do think one very interesting proposal that the Mexican government has made is perhaps matching the U.S. On our China tariffs. I think it would be a nice gesture if the Canadians did it also. So in a way, we could have Fortress North America from the flood of Chinese imports that's coming out of the most unbalanced economy in the history of modern times.
Another one of the goals I think we've talked about is 3% growth. Again, I'm not saying you're going to get there right away, but that's the goal ultimately, as I understand it. We have some people now starting to say the indications about a coming recession are going up, including Torsten Slok from Apollo, somebody you know, who came out with a note today saying the probabilities of a recession are going up. Is that what your numbers show you?
David, it's early. I do think that we're seeing kind of the hangover from this excess spending in the Biden 4 years. And what we are going to do now is something that I've talked about several times on your show in the past. We're going to reprivatize the economy. And as we bring down government spending, and get the private sector moving again, that may not be a perfect one-to-one ratio, but I'm sure it's going to happen. President Trump said the other day, someone said, well, when does it become your economy? He said probably 6 or 12 months out. I think I would agree with that.
We also are seeing some numbers, some sentiment numbers. The consumer sentiment indicates that inflation expectations are rising. Now, that's not necessarily the hard numbers. We're not necessarily seeing it in consumer spending yet. Sooner or later, this has to come into sync. What do you think the American people get wrong as they anticipate more inflation?
Well, I think, look, I'm not going to question the American people's current conditions because we're still living through this Bidenflation. I think that over the next 6 and 12 months, that as we deregulate, drill more American energy and establish our energy program and then make the 2017 Tax Cuts and Job Act permanent, get some certainty, that I think that we could very quickly go back to the Federal Reserve target of 2.0%.
We've also talked about the 10-year, and you've indicated that the yield on the 10-year is an important indicator for you. That's on your dashboard as you assess how well the economic plan is doing. It's gone down to 4.2 from 4.4 since the election, but it's still at 4.2. Do you have a sense of, and I'm not asking for a specific number, but a range that would indicate this economic policy is working?
Well, David, again, it's going to depend on how quickly the inflation drops, what the growth level is. But I would say that I believe interest rates have come down more than 20 basis points or 20-something since the election. And the other thing that's important is mortgage rates have come down, and the spread on mortgages versus treasuries have come down since November, which I think is indicative of some of the things that we're going to do in financial deregulation. So the housing market is stuck now, but I would expect that the housing market sometime in the next few weeks is going to unfreeze. The other thing on the economy here is I having been in the investment business for 35 years, I'm used to anomalies, and we've got a lot of anomalies going here, whether it was the tragic fires out in California, the cold weather in the Northeast. So we're not really looking at kind of comparable data. Also, there's been a big jump in import data, or the level of imports in the economic data, and some of that may be manufacturers or consumers pre-stocking in anticipation of anticipated tariffs.
Again, if you're looking at the yield on the 10-year, I'm curious about what levers you have as Secretary of Treasury to pull or push to affect that. You've mentioned financial regulation and deregulation. What about the tax bill? Where are we on that? What will that do to the yield on the 10-year, and what are the likelihood of it getting passed?
Look, I think we're pass fail on the tax bill in terms of we're going to pass. We are going to get it passed. We started this week. I lead something that's called the Big Six. So it's the Treasury Secretary, Kevin Hassett, Chair of the National Economic Council, Senators Leader Thune, Ranking Member or the Chair of the Finance Committee, Senator Crapo, Speaker Johnson, and Jason Smith, who chairs the House Committee. So the six of us have started working on the bills. They're going into reconciliation. So I'm quite optimistic on the progress they're making. The House had a very close vote, but Speaker Johnson got it over the line. And again, I think that certainty will help establish the parameters. And then again, it's the deregulatory agenda and the getting energy prices down. So I think we could go back to target pretty quickly. And David, just for a minute, on the other side, what we're not getting any credit for yet, but I'm very optimistic about, is the Department of Government Efficiency. That I think that there are substantial savings to be found here, and there's a lot of low-hanging fruit. I don't know what the number is, but that's a pretty good story. So back to, if we can get growth up through deregulation and permanency in the tax cuts, and then cut spending, because from the first time I was on your show, we talked about this blowout government deficit. So we got to get that down.
Well, let's talk about actually Doge, and how material that is in your competition, 3%. I understand you don't have a specific number, but will it be material? Because it is a very big budget. You have to take a lot of money off of the spending side to really make a material difference in that deficit as a percentage of GDP.
Well, David, I think we can make a pretty big hit here. And the way to think about it is every $300 billion is 1% of GDP. So is there $300 billion of savings there? Maybe. Is there 150? But everything starts moving us back toward the target, and we're determined to get this down. President Trump at the cabinet meeting talked about balancing the budget. He asked me, how soon can we do that? And we'll see. But I do suspect, in terms of waste, fraud, and abuse, I think most of us think in terms of waste and abuse. I got to tell you that I'm slightly shocked at some of the fraud we're finding, and you're going to be hearing about more of that over the next couple of weeks.
And finally, Mr. Secretary, when you went into this job, you had some specific goals of things you thought you could accomplish, like 3% growth, like getting the deficit down to 3% of GDP. Now that you're inside, and you've actually seen it from the inside, are you optimistic about making those numbers? And what's the biggest risk to that?
Look, it's execution, and we go out every day. We try to, we have our goals. As we said, we've recentered on the 10-year, which is for capital formation, for mortgages. We are working on the budget deal. We are working on substantial deregulation. We're working on the President's policy of energy dominance. And if we get all those done, I think that it'll be easily achievable. But David, actually, I'll take back the word easily. What I am learning in Washington is nothing's easy, but everything's possible.
Okay. Thank you so much, Mr. Secretary. Really great to talk to you. That's the United States Treasury Secretary Scott Bessent. And we'll turn now back to regular Bloomberg programming.
All right. Thank you so much. That was David Weston, host of Wall Street Week, speaking with Treasury Secretary Scott Bessent. And he said everything's difficult in Washington, but nothing's easy. They did talk about the Trump economy and how that'll be a reality in, 6 to 12 months' time. Right now,
nothing is easy, but everything is achievable.
Achievable, a possibility.
Yes. Yeah. I thought it was a fascinating conversation. When you talk about waste, fraud and abuse, though, I really think about Medicare and Medicaid and military spending.
That's the third rail.
Much more than I do about the federal workforce, which represents 4% of the budget, as opposed to military spending, which is 12% of the budget, and then healthcare, which is 24% of the budget. I mean, if you want to really reduce spending, you don't start with, peanuts with tech workers at the Department of Multimedia, right? You've got to go after big, juicy, porky military contracts, but the problem is they're won with lobbyists and good old boys, and of course,
Medicare and Medicaid is wrapped up in votes.
Is Trump's base for sure.
All right, let's just get you caught up on where we stand with financial markets right now. There's red when it comes to Treasury in terms of the yields coming down. It's green, of course, because Treasury prices rise, but yields come down. You have equities in the excuse me, I'm getting my colors mixed up here because it's been all over the place.
Yeah, there's been a lot of volatility today. So we did have equities coming down shortly after that press conference.
And it's come back up as we head towards the close.
And it's come back, although we're still looking at a drop of about 2% on the week for the S&P 500. The NASDAQ looking at a drop of more like 4% on the week. And in terms of treasuries, I think it's interesting that the 2-year is now below 4%. The 10-year yield is at 4.22, which is more than 50 basis points lower than it had been in January.
At the heights of January, yeah.
President Trump and Secretary Bessent have said they really want to bring down the 10-year. That's what affects mortgage rates. That's what affects auto loans. And they've done at least a good job of that so far. It's come down every single week of President Trump's presidency. All
right, so let's bring in now Vishal Kanduja. He is head of broad markets, fixed income at Morgan Stanley Investment Management. Vishal, good to speak with you. And you heard what Scott Bessent said about how in 6 to 12 months, this will be Trump's economy. But right now, this is Donald Trump's markets. What does the rally in treasuries, the drop in yields, tell you or reflect about Trump's markets right now?
I think the very clear signal from the U.S. Treasury curve move, as well as the overall yields move down, is that the market is significantly worried about growth downside rather than inflation upside. And I think if you just rewind the clock back to December 1st and then fast forward it on and see the yield moves from there, I think the market was very positively oriented from the pro-growth, disinflationary growth, if you will, heading into the inauguration, because that was the sort of the narrative shift at that point. The Fed had already cut 100 basis points, or was very close to in the 3 meetings post the first 50 basis point cut. So you saw a pretty significant sell-off, almost to 470, as you pointed out. And most of that was led by the real yield, again, directed by the policy expectations. And now, again, you're seeing the other side of it coming down from 470 to 420, very clearly directed by the real yields and directed by the policy fatigue that you're seeing. So yes, fantastic interview. We buy the direction of where the administration is trying to go, but I think the market is saying that the numbers will get difficult to get there in a reasonable time frame.
The inflation numbers had been difficult, Vishal, with CPI and PPI, but clearly core PCE has come down significantly. We've seen, I think, 2.6% year over year was the reading this morning, and that's headed towards the Fed's target. You mentioned they cut 100 basis points. They're at 450 now on the upper bound. Do you expect the Fed to be able to get that rate below 4% by the end of the year? Because that's what this market and probably this administration would really like to see.
I think very close to 4%. I think our initial, when we started off the outlook sessions in the back of the 2024, November, December, our base case at that point was still that 10-year will stagger around that 4 to 5%. And the one thing that the market has to get used to is the volatility. I think that was going to be a constant in 2025 that we are going to see. I think at one point, sorry, go ahead, Scarlett.
No,
please.
no, go ahead. Go on.
I think at one point there was a 35% chance of a hike priced in the next 12 to 18 months in the market. We disagreed with that. At this point, I think the odds are very clearly priced in for one, maybe two cuts by the early part of 2026, which is again goes to our base case.
Vishal, very quickly here, what we've seen is that U.S. corporate bonds seem to be replacing treasuries as safe havens, with investment-grade credit seeing less volatile price action than treasuries. Is it easier to make a high-conviction call on corporate credit than it is on treasuries right now?
Yes, I think very clearly, I think the refinanceability issue is not in the corporate America or especially in the investment-grade corporate market. Fundamentals there on the balance sheet side are very, very strong. I think the refinancing issue is going to be on the Treasury side, especially that 20 and 30-year part of the Treasury, as you're going to get the numbers are going to start to get difficult on the deficit side. And then I think the refinancing of those big chunk of Treasury bills that were issued over the last 18 months, that will be answered by the investors will expect a lot more yield on the 20 and 30-year part of the curve. So, yes.
All right, Vishal Kanduja, head of broad markets fixed income over at Morgan Stanley Investment Management. Thank you so much. Coming up, we're going to take a look at Harley Davidson next in our top calls. This is The Close on Bloomberg. It is just about 3:30 p.m. in New York. This is the Countdown to the Close. I'm Scarlett Fu.
And I'm Matt Miller, standing in for Romaine Bostick. Very grateful to be here today. Thanks, Romaine, for the chance.
It's a quiet Friday.
Yeah, I know, but no, it's not.
I know.
Quiet.
I'm being.
There's a lot going on. I mean, from really what I was watching at the beginning of the week, yields falling, stock falling. Actually, if you look at U.S. stocks versus the rest of the world, it's the worst start to the market since 1994.
So on a relative basis, although for the week we're looking at 2% declines from the S&P.
That's still
500.
the worst drop since September, right?
It is, but this is a seasonally weak period as well for equities. So let's not forget that.
Yeah. Okay.
All right, let's get you to some of our top calls. We'll look at some of the big movers on the back of analyst recommendations. And let's get you started with Walgreens Boots Alliance. Deutsche Bank analyst George Hill cutting his rating to sell after reports that Sycamore Partners would lead to a breakup of the pharmacy chain. Hill says the deal isn't likely to come to fruition given the especially challenged condition of Walgreens' U.S. business. The stock lower by 4.5%.
All right, Scarlett, I'm taking a look at Kava. It's got an upgrade to overweight, which is essentially buy, from Piper Sandler. The analyst says Kava is one of the best ways to invest in the growth of the fast casual restaurant industry, especially since it raised its price less than other eateries have raised their prices in recent years. Those shares up more than 5%.
And Matt, we're going to end things on egg producer Vital Farms. Stifel upgrading the name to buy from hold and setting its price target at $44. The analyst says growth potential has been constrained by capacity issues, but new additions at its farms can better position Vital to meet strong demand for eggs amid the avian flu. Shares currently up by almost 6%. And those are some of our top calls.
Have you tried to buy eggs recently?
No, I have held on and hoarded the eggs that I do have at home right now.
Yeah, at Costco, so I go in there once a week, and the eggs are gone after about 10:30. They said they get their deliveries at 10. They're gone by 10:30. They have a limit.
By the way, it only opens at 10 a.m.
Yeah, so in a half hour they're gone. They have a limit of 3 dozen per customer. But what I've noticed is that the cheaper eggs, the bargain basement eggs, where they treat the chickens horribly, right, are now priced at the same level as the luxury chicken eggs.
I know. The
So
organic eggs. Yep.
It makes the decision much easier, less guilt for me. I want to get from eggs to hog right now. Harley Davidson, I went to take a look at Harley bikes this week. Had a great time down in Austin riding the cruiser line for a couple of days. The shares, though, have had a tough time. Down almost 30% over the past year, leaving some to wonder how the MoCo can rebound in 2025. Joining us for more on this story is Jamie Katz. She's a senior equity analyst over at Morningstar, and Harley is one of the companies under her purview. So, Jamie, what do you think about the problems? I mean, the motorcycle industry in general has had a rough time. If I look at shares of Polaris, which makes Harley rival Indian, they've fared even worse. But what can this iconic American brand do to sell more bikes, to move more metal and raise its stock price?
Well, that's a great question. And I think, to get to that, we have to sort of look a little bit further back, right? If you look over the last decade or so, the unit sales or the unit shipments have been completely crushed, right? If you look at 2014, they did 271,000 units that they shipped. We're looking at 146,000 units for 2025. So it's very clear that the total addressable market is changing and evolving. And maybe what has happened is Harley hasn't been as fast maybe to adapt to that. So as touring bikes have become a smaller piece of the total demand for bike market, it has been very hard to stimulate sales. And Harley's made steps to think about what is going to sell? What do we need to do for innovation? But at the end of the day, we're at a really different secular place than we were 10 or 20 years ago. And I think an important component of this is really about what younger and middle-aged people can afford at this time relative to the past. What they need to do is figure out, A, what are people seeking for? That was part of the adventure touring launch, right? And some of the EV. And then, what price point are they willing to buy it at? And with interest rates where they are, that's been a pretty big headwind the last year or so. Yeah, big problem. I mean, these are pretty expensive luxury items, really. Even the lowest priced of the big twins, the Street Bob, is $17,000, and they can get up to over $45,000 when you look at the big touring bikes. How scary are tariffs when you look at the situation of Harley Davidson? I mean, obviously they need metal, they need steel and aluminum to build these things. And if they get 25% tariffs, that's going to raise costs for Harley. Also, last time when we put tariffs on Europe, the Europeans struck back at the most American things and tariffed Levi's jeans, Jack Daniels, Tennessee whiskey, and Harley Davidson motorcycles, and they're likely to do that again. Yeah, I guess, the one good thing is there is a fair amount of production domestically, and they do still sell a significant portion of their sales domestically. So that piece is helpful, right? And there is some production capacity abroad where maybe there can be a shift of capacity for things going to Europe, to places like Vietnam or something like that. I think it's been really hard to quantify that for almost all of the companies in our coverage space, because the rhetoric coming out of the administration changes pretty much on a daily basis. So everybody's been afraid to say, yes, it's going to cost us this much. No, it's going to cost something else. But what we do know is that this is not the first time tariffs have been put on. And so I think there were a lot of efforts to mitigate those costs, in 2018 and 2019 when there were tariffs implemented that will maybe help defray the magnitude of them this go around. So these, you're looking at pictures of me riding. That's you? Some of the cruisers. That's me in my leather suit riding, I believe that's a Heritage Classic.
How much does that one cost?
I think it's about $20,000 for that bike, which sounds very expensive, but in today's market, that's a pretty reasonable price. Mm-hmm. I do want to point out that these motorcycles are famous for being made in America, right? And Americans are not going to buy Harley Davidsons unless they're made in America. A lot of the customer base doesn't even like that they partner up with other companies to produce different brands overseas. So that's not going to change. But Harley could do a lot with its overseas partnerships as it makes bikes, for example, for Indian under the Hero brand.
That's all true, but that will require patience from investors. Jamie, I look at Harley-Davidson's PE ratio, 7 times earnings, 7 times reported earnings, 7.8 times estimated earnings. This stock is incredibly cheap. And, there's been some underperformance. There's a lot of concerns about growth, where it's going to get its growth from. Should this company be publicly traded or should it be taken private?
Well, that's a great question. And I have to say, the multiple doesn't really fit what the business is doing, right? When we look at earnings, they did $3.44 last year. They guided to flat to down modestly for EPS. And in our model, we have them set to earn $3 a share this year. So we are coming in below the guidance. And I think the real problem is how do you stimulate this in this economy? Would it be easier to turn this around without the scrutiny of the public markets? Probably, because if you look at these shares back, I don't know, till the beginning of the century, 2000 or so, there hasn't been a whole lot going on in them. So I think, if there is going to be a step change in how they want to manufacture and they don't want to do it under the quarter-to-quarter surveillance of, the equity analyst community, of course, doing it private is a little bit easier. The question is who is going to purchase them and at what price?
Absolutely. It always comes down to that. Jamie, really appreciate your joining us today. Jamie Katz over at Morningstar talking about Harley-Davidson, which, of course, Matt Miller is near and dear to your heart.
I have just looked at the shares from the beginning of the century.
Yeah.
Actually down 20% on an absolute basis. If you look at total return with reinvested dividends, up 26%. It sounds a little bit better, but the S&P in that period is up 540%.
Yeah, no comparison.
Yeah.
All right. Coming up, we're going to catch up with Mickey Naftali. He is CEO and chairman of the Naftali Group. We're going to talk about real estate in Florida and Manhattan. This is The Close on Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
All right, this is Bloomberg Markets, The Close. Welcome to Matt Miller joining me on The Close today.
Thank you very much. Glad to be here.
There's a really interesting story on the Bloomberg. It's the big take, in fact, about Doge and how it's canceling all these different leases that the federal government has as a way to save money. And we talked a little bit earlier on about how they're looking to cut corners or cut costs on small potato items as opposed to the big items like Medicare, Medicaid, or defense spending.
Yeah, absolutely. And there has been a lot in the press about Doge and the costs and chaos that it's causing. I think it was the cover of the Wall Street Journal today, as well as the cover of the New York Times. And of course, it's our big take. So they're definitely stirring things up. The question is, how will this affect the real estate market specifically? I think it's important to note that we do have the tailwind of rates coming down to some extent. That's got to help, right? Because there's a wall of refinancing coming, especially for commercial real estate. And if we get rates to continue on this path, it's going to be a lot easier for landlords to stay.
That is certainly the thinking for a lot of the markets. Yeah. But, in places like Washington, D.C., where the government holds a lot of those contracts, those leases, that's going to be a bigger challenge to address.
Yeah, problem. Let's talk about that right now with Mickey Naftali, CEO and chairman of Naftali Group. He joins us here on set. Thank you, first of all, for sticking with us through some ups and downs. The news has been pretty insane today, and we were lucky enough to get an interview with the Treasury Secretary. He has made the point over and over that he and President Trump really want to get the 10-year down. How important is that to your business, to get rates down from what really have been relatively high levels? We haven't seen 5% rates in 20 years.
Right. So the capital market is on the, development, project development side is quite tight. There are not too many lenders. We are, in a very small group of developers around the country that can get financing in a relatively decent rates.
Where are you getting it?
But in projects in New York, projects in South Florida, but the majority of the kind of mid-size, small to mid-size developers are struggling. And that's why, by the way, a few years ago, we established our debt business as well, and we are providing debt to other developers and investors because the capital market is so tight. But hopefully, again, if the interest rates will start to come down, I think the capital market will open up and there will be more opportunities.
I'm just wondering where you're finding finance, because I talked to some mid-state real estate players in this city, and a lot of times they're getting financing from overseas. They're not necessarily tapping markets here, and I wonder which markets are more open and which markets are tighter.
No. So for U.S.-based projects, we are getting the financing here. For construction financing, we're getting from J.P. Morgan, from Deutsche Bank, from OZK, from some other folks that are playing. And again, we are in a very small group of developers that can get financing in a relatively good rate, but the rest of the market is quite tight.
So Scott Bessent told us earlier this hour that the housing market is stuck now, but it will unfreeze in weeks. Where are you seeing demand for the properties that you do build?
Right.
What segment of the market?
Right. So I think we actually, in New York, we have a really, really good sense of the market because as we speak right now, we have 3 condominium projects in 3 different neighborhoods that we are selling. We opened those 3 projects, the sales office of those 3 projects back in September. And as we speak right now, 50%, we are 50% sold on the Upper West Side, on the Upper East Side, and in Williamsburg.
These are luxury condos, right?
Mid to luxury, Upper East, Upper West, yes. Williamsburg, very, very nice quality, but the price point is lower than the Upper East Side and the Upper West Side. Then, when we look at South Florida, for example, we have 2 very big projects, one in Miami and one in Fort Lauderdale, and we are selling in Miami, and the market is quite over there. We see buyers from different demographic. For example, in Miami, we see a lot of buyers that are coming from Latin America, while in New York, most of the buyers are locals. So it's very interesting. We see a lot of interest for a good product. There is not much inventory. Again, because the capital market is tight, there are not too many projects that are being built at this point of time.
So the costs of financing, the cost of developing, the labor, all of that has gotten a lot more expensive in recent years. Yeah. Is there any way to make money now on building affordable housing?
I think it's almost, if we really want to be honest about it, it's impossible you have to have some type of tax benefits because look, there is not only in real estate, in any type of business, no investor will go and invest in something head on knowing that they will lose money, right? So you need to feel comfortable that you can make a decent profit to cover all the issues that might happen during the investment, right? There is no way with the construction cost, with the insurance cost, with the carrying cost, you can't build affordable. By the way, you cannot build Class A rental building in the U.S. today because it just doesn't make financial sense.
The economics
it's just
don't work.
Too expensive. It doesn't work.
I wonder, I think of, obviously, this is not a market you're involved in. You're here in New York, you're in Florida. But when I look at the devastation in Los Angeles and think of the rebuilding there,
You need steel to build these things. That's potentially going to be a lot more expensive. You need lumber. A lot of that we get from Canada. And mostly you need labor. And I've seen estimates from the University of Michigan that about 20% of our construction workers are here in this country, undocumented. Of course, it's much more in California and Texas. That's probably way lower than the real figure. What kind of costs do you think we're going to see, in terms of building new houses, new multifamily, new apartments?
Right. So that's a very good question, and I think it's a little bit premature to tell. We bought in the last 2 months over $150 million of trades, construction trades, between New York and South Florida just in 2 months. And I can tell you that at this point of time, there is no change. We don't see any upcharge for maybe additional cost but
that's interesting.
That's a reporting from right now, right? We are on the market. We're buying in those two major markets for big projects.
Right.
But it's hard to tell. By the way, it's hard to tell if we're really going to have those tariffs in place, yes or no. So I think there is a lot of unknown. At this point of time, there is no upcharge.
Miki Naftali, really appreciate your joining us and sharing your insight with us. Miki Naftali is CEO and chairman of the Naftali Group. All right, let's get back to our big conversation with the Trump administration that took place earlier this hour. We mentioned it. Scott Bessent, the Treasury Secretary, speaking with our David Weston. And here's an excerpt of what he had to say about tariffs on China.
Very interesting proposal that the Mexican government has made is perhaps matching the U.S. On our China tariffs. I think it would be a nice gesture if the Canadians did it also. So in a way, we could have Fortress North America from the flood of Chinese imports that's coming out of the most unbalanced economy in the history of modern times.
And that was, of course, the U.S. Treasury Secretary Scott Bessent kicking off the show, speaking with David Weston for Wall Street Week. And, of course, if you want to hear the whole interview, tune into Wall Street Week later on tonight. But, at issue here is tariffs and how confusion, uncertainty over these tariffs have really thrown the market, bonds and stocks, into uncharted territory.
Right. Well, we hadn't seen a lot of bond volatility. It had really calmed down as President Trump came into office. But we're starting to see the MOVE index kick up and the volatility is back. I thought it was really interesting what Secretary Bessent told David Weston with regard to tariff offers that the U.S. is getting from Mexico. Of course, the 25% tariffs on Mexico and Canada should go into effect on March 4th. That's Tuesday coming up. But we've seen reports, Eric Martin writing in our Mexico City bureau, that Claudia Sheinbaum is considering putting the same tariffs on China that the U.S. does, potentially putting the same tariffs on Europe that the U.S. does. And Bessent invited Canada to consider the same kind of approach, which I think would be really interesting. If
like
Trump,
the North American countries teaming up against Team China.
Absolutely. Well, and potentially against Europe and the rest of the world as well. Donald Trump obviously wants to get these trade imbalances back in shape, and they are now at the worst level. We have a chart, #BTV 2575. I believe, from this morning. And it shows you the trade deficit is the biggest that it's been in history right now.
Well, and this is something he's keen on addressing. It's become kind of a scorecard in a way, or it certainly was a big scorecard for in his first administration. Let's now bring in our next guest. And let's go now to Drew Pettit. He is Director of U.S. Equity Strategy over at Citi. And Drew, I mentioned scorecard for President Trump because in the first term, it really felt like the U.S. trade balance was something he fixated on. Now, there's a lot of talk about how the stock market is his benchmark. It's his traffic light. It'll tell him to go or stop. Do you agree with that?
Not quite sure. Look, it's a little bit hard to disentangle talk from actual policy. And at the end of the day, that's what we're trying to do. But if you're looking at the scorecard in that sense, we're still trading at 24 times. As much as we have this, let's call it a bit of a tariff call. If people want to talk about a Trump put, okay, that's one thing. But we're just a little bit stuck right now because of the confusion, like Matt said in the intro. So look, yeah, scorecard market's stuck, but at the end of the day, it's 24 times. It's a pretty good backdrop for equity valuation right now.
What did we learn this week, Drew, from what NVIDIA told us? The reaction in particular to the decent results. They were good. They just weren't great. They didn't knock anyone's socks off when it came to the outlook, especially for gross margin.
Yeah, look, I think NVIDIA was basically telling you exactly what we know about the rest of the growth side of the market. It's really fully priced. This is not about how you execute backward looking. It's about how that's going to translate into forward numbers. Honestly, we've been talking about three things when it comes to growth in growth stocks. It's revisions, revisions, and revisions. If they don't go up, it's hard for the growth side of the market to really work like it did last year and the year before. And then when it doesn't happen, when we don't get the follow through in revisions, these big names like NVIDIA and the rest of the Mag 7, they just become like any other stock.
You, in your most recent note, you stress that, well, you continue to stress GARP, which I believe is growth at a reasonable price, right? Via your reverse discounted cash flow overlay on the NASDAQ. Explain what that means and where do you find it specifically?
Yeah, it's funny. So a lot of people use a DCF to solve for net present value or the value of the stock today. We just assume the market's right. Let's say price is right, and we have to figure out what the growth rate needs to be for the next 3 years to justify that price. Where we see analyst expectations above that market implied growth rate is what we consider GARP. And you get half the Mag 7, still looks kind of reasonably priced on that type of metric, and we're really stressing that. What that gives us is upside leverage when we do get follow through in out year revisions.
So Mag 7 stocks, I think, down about 7% this week. They've had a rough week. Shocking to me how poorly, especially Tesla, has done, considering the the close proximity of the CEO to the White House. I think he actually has an office in the White House, but I guess he's busy doing other stuff.
I thought he was sleeping there.
Do you think Mag 7 stocks are a buy? Do you buy the dip?
Yeah, it's funny. Not wholeheartedly. Look, I'm not jumping into the deep end here. I think how we've framed it, again, what is GARP in the Mag 7 or what is reasonably priced in the Mag 7? Amazon we're comfortable with. We still see tailwinds. Google, I think the pricing there, very fair. Meta, super cycle. There could, in its product lineup, that could be further upside. NVIDIA, kind of reasonably priced. Analysts likes it, but we've seen some reductions in estimates. Tesla, Apple, Microsoft. We struggle with those a little bit, honestly. Tesla, don't really care who's in office and who's doing what. If you're buying Tesla today, it's not for the projected cash flows of what the business is today. You have to buy that stock for it to be something else, for it to be full self-driving, for it to be a robotics company. As a car company, what the street has modeled today, you need a lot of upside to justify that price.
Drew, I look at the S&P 500 for 2025. It's up 1.1%. And Matt was wowing us with this stat about how it is actually the worst start to a year for U.S. stocks relative to global stocks since 1994. Is there just a lot more competition now for U.S. stocks, from the rest of the world, that perhaps the obvious America First trade just doesn't work the way it did before for investors outside the U.S. and perhaps increasingly investors inside the U.S. as well?
Yeah, we got to remember that we're up only 1% after being up 20% and then another 20% compounded. So it's, kind of time frame a little bit. Yeah, tactically, look, Europe had just absolutely terrible sentiment. Upward revisions there gave you a lot of leverage. You saw Europe even in U.S. dollar terms up 10%, right?
Right.
But when you look inside the U.S. market, when you get past the Mag 7, there's a lot of growth stocks that are working.
Drew, we got to leave it there.
There's still some exceptionalism there.
Thank you so much. Drew Pettit is Director of U.S. Equity Strategy over at Citi. Let's take you to the closing bell right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about about 2 minutes away from the end of the trading day. Scarlett Fu and Matt Miller here. Romaine Bostic and Alex Steele have today off. And of course, we want to bring in our colleagues from radio to take you through a global simulcast. Carol Massar and Tim Stenovic. And of course, in doing so, we bring you the best of Bloomberg Television, Bloomberg Radio, and our YouTube audiences globally to parse through the most crucial moments of the trading day. Carol, it looks like these last, 10 minutes, even hour has been a straight shot up for equities.
Maybe that's what Alex and Romaine are up to. They're at home buying stocks. But I mean, it's really fascinating to see the buying that we've seen into the close here. You've got most names over 400 in the S&P 500. So broad-based buying as we get ready to wrap up not only the day, the week, but also the month. It's been a rough month, though, Tim. You keep reminding me.
It has been a rough month. The S&P 500 down 1.4% on the month. At least as of now, it was a lot uglier this morning. The NASDAQ, though, composite down 4% on the month.
Yeah, it's the rally into the close has been so strong here. We were down 2.5% for the week on the S&P. We were down 4% for the week on the NASDAQ. We were down 7% for the week on the Mag 7 stocks. And they're just pumping up here. You can see NASDAQ gains at 1.7%. The small caps and the mid caps are not doing quite as well. But I look at the Mag 7 index that we have, BM7T index, if you want to type it into your Bloomberg terminal, and I see that it was down at 1.5%. It's now up more than 2.1% for the day.
How much do you think this has to do with end of month positioning? I mean, it is the last trading day of February.
I can't find any other explanation for this.
Window dressing.
Window dressing on the last day of the month. And of course, in these final seconds, we are looking at equities closing near their highs of the session, just coming off the best levels. But you're looking at gains of better than 1% for the Dow, the S&P, and the NASDAQ. The Dow adding 591 points, the S&P 500 gaining 1.6%, the NASDAQ adding 1.6% as well. And where does that leave us for the week? We're still looking at losses for the S&P and the NASDAQ, but the Dow has now moved into the green, up 1% on the week. The Russell 2000, we should mention, lagging behind a bit here, as it has been for a while, up 1.1%.
Hey, guys, a couple of things. We've got the Bloomberg Mag 7 index up about 2% in today's session, still down more than 4% for the week overall. And back to today in the S&P 500, 438 names ultimately gaining ground on this Friday, 64, Scarlett, to the downside.
All right, let's go over to the IMAP. It's a pretty simple read today. All green, your pesto pizza pie in full bloom here, with all 11 industry groups rising at least 0.8%. Financials, consumer discretionary, and tech are leading the way. And within consumer discretionary, we're talking about auto companies in particular. The laggards, if they are even lagging here, real estate investment trusts, materials, and healthcare.
All right, guys, let's get to some of the individual gainers. If I may, Intel on that list, that one up as much as almost 6% in today's session, but finishing the day with a gain of about 2.8%. TechCrunch out this morning reporting that Intel may delay its Ohio chip factory to 2030 at the earliest. Yeah, I know, exactly.
It's rough for Central Ohioans, Carol.
I know. The Columbus Dispatch actually out with the report
Breaking
today.
That scoop, yeah. We were banking on that, you know?
$28 billion project, semiconductor project in Central Ohio. But again, a delay or slowing, if you will, for the second time this year. So
at least we won the national championship.
Yeah. Hooray, hooray. I should point out the stock's up about 19% year to date. Lots of stuff swirling around Intel, including whether or not TSMC makes an investment. I know Matt's here. All right. Monster Beverage, guys, up more than 5%. This after the company's fourth quarter gross margin topped the average analyst estimate. Net sales also roughly in line. Wall Street expectations. So we saw this one really an outperformer among the indices. And then Kava Group. Can't get it right.
I think Kava.
I just say Kava?
Yeah.
Yeah.
Potato, patata, Kava.
It's like Spanish champagne.
Thank you very much.
Oh, yeah, that's a good way of thinking about it.
Up 5.5% in today's, from somebody who doesn't drink anymore.
Yes, almost 3 years now.
All right, well done. All right, it is up about 5.5% in today's session. Piper Sandler actually turning bullish on this name after yesterday's nearly 9% sell-off. I should point out that we talked to the CFO today. Seems pretty upbeat about the outlook and the expansion. And we'll see. They're continuing
She likes the lamb
invest.
meatballs and feta too, by the way.
Does like the lamb.
That's what she told us.
I did ask about that. Stock's it was down about 17% year to date, though.
I think we're going to go to decliners now. I want to start with Dell. Matt, it's Dell, right? Dell?
I'm just glad they're all still in the red, Tim. I was worried your decliners might have bounced up.
Oh, I went to make sure before. Don't worry. I went to make sure. 4.7% to the downside for Dell. The company did give a strong outlook for sales of servers optimized for AI, though investors remain concerned about the profitability of these products. Walgreens Boots Alliance shares also fell by 4.7%. This after reports that a take-private deal might not earn shareholders much money. The company has been reportedly exploring a take-private deal with the private equity firm Sycamore Partners. The arrangement might involve splitting the company into 3 different parts, the Financial Times reported on Thursday. Representatives for Walgreens and Sycamore declined to comment. And finally, shares of Duolingo, based in Pittsburgh, down 17%. Shares fell due to its costly AI strategy. It reduced its gross margins by 71.9% in the fourth quarter. Despite the cost, the AI features have been popular with users, and the Max tier now accounts for 5% of subscribers and paid users, rising 51% to over 40 million.
Maybe because of the cost, right? I love it when you see, as a consumer, when you see margins compressed like that, it means you're getting a good deal. They're paying a lot to put those AI features in their product, and I can get it at a relative bargain because they're not making any money.
We're out there buying Blackwell chips now, NVIDIA?
I don't know if those margins have compressed to the same extent.
Okay.
Those are like 70% margins.
Yeah, and also they're like 40 grand per chip. I want to take a look at yields. This has been, I think, the story of the week. The 2-year yield coming in to less than 4%.
Amazing.
The 10-year yield, as you know, we watched Scott Bessent on surveillance. I think it was it last week or was it Monday? Scott Bessent on surveillance saying that they're really focused in the Trump administration on getting these 10-year yields down, on getting mortgages cheaper, on making auto loans more affordable. And so far, it looks like they're working. The 10-year yield has come down every single week of the Trump presidency. It's down 55 basis points from its high in January, and we're looking right now at 421.
All right, I agree. I think that was the big story of the week. It was just, a few weeks ago, maybe, perhaps, that people were talking about moving up to 5% on the 10-year, and it's just interesting to see how that has changed dramatically. Guys, one of the stories that caught our attention has to do with Skype, kind of rest in peace, shutting after 14 years and after Microsoft's $8.5 billion purchase.
This is a really big deal. I mean, for people who remember how difficult it was to talk to somebody just a few years ago in another country, Skype was really the only way you could do it. But then you had the rise of other apps like Snapchat, FaceTime. Microsoft, for its part, says the growth of Microsoft Teams is replacing Skype. The company has just, about 36 million users now. Skype.
But it's really hard to make a long distance phone call, an international call to a business. Like if you're going to call a person who's available on Snapchat or on WeChat or on WhatsApp, that's easy. But if you're calling a business and you're calling a landline overseas, you still kind of need Skype. And I tried to get on the other day, and I was told to buy a 1-month subscription, and with that,
So hang on, what business overseas are you trying to make a call to? And have you not just
hotel.
Pick up the phone and dial +44 whatever, right?
But it would have cost like $1 a minute on my mobile phone.
Always saving money, Scarlett.
You didn't use WhatsApp? You didn't do WhatsApp?
No, you can't because they have to be a user of WhatsApp.
Oh, okay.
Yeah, the business isn't a user of WhatsApp.
Skype is like AOL Messenger. Zoom works flawlessly. Why would you consider anything else? I don't really know.
Well, something to consider. In any case, this weekend, by the way, is the Oscars. I don't know if you guys are going to be watching on Sunday night, but one thing that I always pay attention to is the swag bags that they give out to the presenters and the nominees. This year, they're offering select Oscar nominees a gift bag that's worth over $216,000, including a trip to the Maldives.
Yeah.
How do you fit that in a bag?
Well, it's just one of several trips, right? That's a 4-night stay in the Maldives, $23,000, 5-night stay also.
Did we just show a picture of naked John Cena? Can we show that?
It was on broadcast television, network television.
We have trouble getting Victoria's Secret VO approved, and we have naked John Cena? I think it's pretty grotesque to offer
I thought we were talking about you're saying the bags are grotesque?
Bags. You offer already incredibly wealthy and privileged people $211,000 swag bags? Like, why?
Everyone loves free stuff, and I'm sure they're excited about it.
I don't know, Matt. Sounds like somebody wasn't invited to the Oscars this year.
They end up, what's interesting is they say they a lot of times don't even end up using them because the IRS comes knocking at their door because they're included, I guess, in their income. So
you just leave that trip.
Yeah.
They don't on the table.
Yeah. You donate it to someone less fortunate. So someone.
But then they have to pay the taxes on it.
Well, maybe someone overseas. You know, some of the people that Scarlett's trying to get a hold of on Skype, they could take her trip to Maldives.
Yeah, sure. I'll do that when I go to the Oscars this Sunday.
All right, let's watch the Oscars. All right, guys, what a day, what a week, what a month. That's it for the February trade here on Bloomberg. That's a wrap, too, for our cross-platform radio, TV, YouTube, Bloomberg Originals. We do it all. Have a good and safe weekend, guys. We'll see you again, same time, same place on Monday.
All right, coming up on the close, we're going to take a look at NVIDIA and the DeepSeek drama that engulfed it. This is the close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Welcome back to the close. I'm Scarlett Fu.
And I'm Matt Miller, standing in for Romaine Bostick. It's pretty exciting, actually, because I watch this show every day.
Yeah, well, you opened the markets, right, at 9:30 a.m., and now you're here to close it, and we close at our highs.
Yeah, I mean, the market is very exciting. I just meant being a part of the show. It's not as good when Romaine's not here, but it's kind of nice to see, how
right?
the sausage is made. Yeah, the market was insane. I mean, climbing high up into the close, and it looked like
10 minutes.
It was going to be a horrendous week. I was going back and looking at these three indexes for the week, and about an hour before we came on air.
Like, I'm very lucky. You feel more connected to yourself. Come to the Etsy and regenerate your mind.
Live from Singapore, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. President Xi Jinping is heading into China's biggest political gathering, with the economy gaining momentum, though under threat from Donald Trump's plan to increase tariffs. European leaders pledged to increase defense spending and support Ukraine after talks between Trump and President Zelensky collapsed. The Ukrainian leader says he is willing to meet Trump again if invited. Plus, India's economy rebounded last quarter, with GDP growing 6.2%, but economists are still cautious about the future as global trade uncertainties escalate. Asia in the money, kicking off the week in the positive. The MSCI Asia Pac Index in positive territory, up about 0.7% off session highs, though. It went as high as 1.5% on the back of the focus on Ukraine, with Europe saying it is willing to support Ukraine financially, militarily as well, and that's causing the euro to rise as we speak. We also know that defense stocks have been rising on the back of that. In Asia, though, the focus remains on China ahead of the MPC meeting. Expectations are that we'll see more stimulus from the Chinese government to support the economy that's been struggling to reverse course at this point in time. In terms of the CSI 300 index, it is up 0.7%. The Hang Seng also higher by 1.5%. It all depends on what we see this week at that MPC meeting. Will we, won't we see the stimulus that is needed to prop up not just the economy, but sectors like the IT sector as well as the property sector. In terms of the currencies, we're keeping an eye on the Chinese yuan. It is trading higher at this point in time versus the USD. Now, with the US on the verge of slapping new tariffs on China, Canada and Mexico, let's bring in our China correspondent, Min Lo in Beijing. And Min, tell us about the tariffs that are set to take effect.
Yeah, so there is the 25% tariffs that are going to be placed on Mexican and Canadian goods that's supposed to kick in tomorrow, although Trump officials are saying that the final number is still not yet set in stone. So perhaps still some last-minute negotiations going on that could change that final number. We know that Scott Bessent had been signaling that if Canada and Mexico would match the U.S. tariffs to create a sort of North American frontier there, then perhaps they may be able to lower tariffs on Canada, and Mexico. So China could potentially be at risk of more tariffs headed its way from both Mexico and Canada. That's on top of the additional 10% tariffs from the U.S. that will kick in tomorrow. It will be midnight U.S. time tomorrow, which will be 1 p.m. Beijing time. So that's when we want to look out and keep our eyes peeled for any announcements of countermeasures from China, because we know that they have retaliated in the first round of that 10% tariffs in February. Pretty targeted and modest sort of measures. Will China continue to adopt this stance of strategic patience? We heard President Xi speaking with Chinese officials, calling them to remain calm and composed amid these external challenges. When will Beijing's patience run out? And it's possible, if they feel that President Trump isn't really negotiating on good faith, he's keeping those tariffs on despite the measures taken by Mexico and Canada to protect the borders, to strengthen security there. If they feel that there is no room to reach a sort of win-win scenario, we might see China toughen their stance. And you got to wonder also what is preventing President Xi and Trump, one of them, from picking up the phone to have that phone call that President Trump had telegraphed that was supposed to happen as soon as possible.
Min, as you said, response has been measured from Beijing. You got to wonder how far it is willing to go, bearing in mind that, of course, the U.S. is a big export market for Chinese goods.
Yes, and China has years to prepare for this. Their companies have already been diverting their goods to other countries, seeking alternative markets in the global south, in Southeast Asia. A lot of the goods going through third countries like Vietnam, eventually reaching the U.S. So there is this also sense of regulatory catch-up if the U.S. start pressuring other countries to impose tariffs on China as well. And it's not just about retaliating against the U.S. What will China do to protect or ring-fence its economy by beefing up domestic consumption and building up the resilience there in the face of these tariffs? So to protect against the external environment, they have to strengthen the domestic conditions so that they no longer rely so much on exports. So what sort of stimulus will we see to boost domestic consumption, to go beyond not just that consumption upgrading program? Will they be strengthening social safety nets, giving out more cash handouts to the people who need it, so that people actually feel that they are able and they feel safe about taking money out of their wallets to spend in the economy? That's the big question there. And of course, is China going to still rely on that old playbook of using industrial policy and investments to shore up the economy versus actually transferring that cash to people's pockets? That's what we want to look out for, because the government has pledged that they want to put consumption as a top priority. How much and how aggressive are they going to go with the stimulus?
There's so much room for disappointment given expectations are so high, Min. China correspondent Min Lo in Beijing. Now, the UK has called for a coalition of the willing to secure Ukraine after any US brokered ceasefire as European leaders met in London. Prime Minister Keir Starmer says Britain, France and others will work with Kyiv on a ceasefire plan.
Not every nation will feel able to contribute, but that can't mean that we sit back. Instead, those willing will intensify planning now with real urgency. The UK is prepared to back this with boots on the ground and planes in the air. Together with others, Europe must do the heavy lifting.
And this comes after Volodymyr Zelensky left the White House abruptly on Friday without a minerals deal or security guarantees, following a heated exchange with President Trump.
You're not in a good position. You don't have the cards right now. With us, you start having cards. Right now, you don't. You're playing cards. You're playing cards. You're gambling with the lives of millions of people. You're gambling with World War III. You're gambling with World War III. And what you're doing is very disrespectful to the country.
Well, joining us now is Samar Puri, director of the Chatham House Centre for Global Governance and Security. Samar, good to have you with us. We saw the two leaders speaking on top of each other. Suddenly, it was quite a disastrous meeting. What led to that?
Well, very good to be with you. I find it scarcely believable that it's only 2 weeks since the Munich Security Conference, which I actually attended, when I think the dominoes started to fall. And it became very clear that the US policy position with regards to Ukraine was to prioritize above all else the restoration of US bilateral relations with Russia, ostensibly as part of an approach to ending the fighting in Ukraine. But the clear outcome of that is that Ukraine's interests are not of Donald Trump administration's concern. So what we saw in this dramatic, much replayed press conference in the Oval Office was the outcome of all of that. And most interestingly, so the understanding is the retired US General Keith Kellogg, who was supposed to be America's envoy, principal envoy on Ukraine, Russia, potentially advised Zelensky, if you go to Washington, D.C., be very, very aware that this sort of thing might happen. But nonetheless, what we've got as an outcome from this dramatic clash between Zelensky, Trump, and J.D. Vance as well, sitting, as you know, on the sofa alongside, is the strong possibility that if there is a failed attempt at bringing peace to Ukraine, that the Americans can wash their hands off the whole thing and say, well, listen, Zelensky wasn't ready for peace. That's Trump's words. And what can we do about it? But we don't yet know because it's still a very, very uncertain situation.
What is certain is that the relations have soured somewhat. Summer, I'm going to wonder, was Zelensky really adequately prepared to meet Trump that time?
From the outcome that we witnessed in front of the cameras, you'd have to say no. And I feel a bit for Zelensky here because imagine what his life has been like over the last 3 years. It's been largely lobbying quite sympathetic, principally Western audiences, government audiences, parliaments, Congress, all the rest of it, receiving standing ovations. If you were prepping Zelensky, I imagine if a diplomat prepping Zelensky before that meeting would have said, you are going to receive the polar opposite reaction to the reaction that you are somewhat accustomed to flying around the world, making the advocacy case for why supporting Ukraine is in sort of interests of the country that's hosting you. You may actually be cross-examined. And, of course, Trump and Vance will play to the crowd of their own domestic US audience, which at a certain level, the US electorate won't be as engaged in the minutiae of what's happening in Ukraine. They'll just see their president talking tough to a foreign leader who, in their president's words, has been basically taking money from the US for no possible end. Now, with regards to Zelensky's performance, questions may be asked, the suit question he was asked, why aren't you wearing a suit? Well, arguably that shouldn't really be part of the discussion. But again, was he adequately prepared for that particular gambit? It's quite, below the belt, as they say, to question him on why he's wearing what he says he wears, because he is trying to sartorially represent the fact Ukraine is in conflict. I would probably conclude he could have done a bit better. I think the big question for Zelensky now is not necessarily what you and I think. It's what happens in Kiev with regards to possible political opponents that he might face in a future Ukrainian presidential election. He might may wish to make quite a strong case that he wasn't able to carry the sympathies or even the attentions properly of the US president.
What happens in Kyiv is one side of the coin. The other side is also what happens to Ukraine-US relations. At this point, relations look like they have broken, and you got to wonder how that can be fixed and whether Zelensky is the man to fix it.
Right, and that's the point, isn't it? There may be voices saying that Zelensky can't necessarily fix it. Now, the other thing with Zelensky is he's gone from this cold reaction and response in Washington, D.C., to a literal hug by Prime Minister Keir Starmer in the UK. So Zelensky has plenty of friends, and I suspect Zelensky will want those European friends, Starmer and Macron of France in particular, to lobby on behalf of Ukraine back into the White House. Now, whether that actually works, the UK is quite understandably saying it wants to act as a bridge between what's happening in Europe, what's happening with Ukraine, and where the attention spans and sympathies of the administration in Washington, D.C. currently sit. Whether that's realistic, well, we're going to find out. It's going to be a huge test for Keir Starmer and for President Macron, their powers of diplomacy. I'd say the signs are not terrible, given that the US wants to restore relations with Russia so it can actually engage the Russians on this particular issue, which is a stunning turnaround given how adversarial the USA was with regards to Russia for the entirety of the Biden administration. And could we end up seeing a good cop, bad cop approach to Ukraine? as in the Americans play bad cop with Ukraine simply to keep that channel to the Russians open, but the Europeans, led by Starmer and Macron, play good cop. They give that brotherly hug, that metaphorical and literal arm around Zelensky's shoulders, and also offer these credible security guarantees in the shape of a European security force. But I totally agree with your question to round off. There's a huge uncertainty whether Zelensky can actually re-engage with the US president, and the key indicator there is whether the minerals deal, where the US says that would buy effectively their involvement, their interest in Ukraine for the long haul, can be resurrected, can be signed.
Right.
Zelensky was initially going to sign that. He didn't sign that. He came away empty-handed.
Summer, we're hearing the right things from the European countries, the likes of Germany, Spain, France, even Luxembourg have said they will stand by Ukraine. The question really is, do you trust the extent to which they are willing to stand by Ukraine?
Do you know, I do trust the extent to which the willingness they have. Certainly from the UK's perspective, it's very core to, I think, even British popular reactions to what's happened, which is you don't let the underdog who's been bullied, let them suffer without help. So I know that's more of an emotive case, but I do trust it. Now, where I think the blocks are is even if there is a credible European stabilization, reassurance, peacekeeping force put together, is what the Russian attitude to that is. I just want to reflect on that very quickly. Sergei Lavrov, Russia's foreign minister, said, even if these are NATO countries, don't arrive badged as NATO, we don't want that to happen. And I think there's still an open question as to what the Russians would ask for in terms of the stabilization peacekeeping force. Let me give you a very quick hypothetical. Do they say, yes, France, Britain, Luxembourg, whoever else, you can stabilize from the Ukrainian side? Is there still going to be some kind of desire to get Chinese peacekeepers, peacekeepers from countries that are more sympathetic to Russia, to also be involved? So I don't think we can yet conclude this will be a purely European-led stabilization force, if indeed we do get to the stage where there is a deal involving Russia or Ukraine.
We've spoken about Russia quite a bit in just this 5-minute conversation. It does seem like the U.S. under Trump is trying to strike a different kind of relationship with Russia. How concerned are you about that?
I think if one wants the West to present a unified front against Russia, seeing Russia as the West's mortal enemy, this has probably been one of the worst fortnights of your professional life. From my perspective, I actually served in the Donbass in East Ukraine just 10 years ago in the OSCE ceasefire monitoring mission around that first Russian invasion. I have my own strong views as to, the illegality, the brutality of what Russia has unleashed in Ukraine over the last decade. I also have a realist perspective, which is that sadly, Ukraine was headed to some kind of de facto partition, which is where we're headed towards now. If you take that realist prescription, then you have to talk to Russia in some way, shape or form. And it is clear that under the Biden administration, there was no attempt to engage the Russians in negotiation. There was still this message that you can't talk to the Russians because of the evil heinousness of what they've done in Ukraine. Well, I don't think you can lead a practical policy response to ending this war purely on the moral reaction to this. The moral reaction is very, very important, but there's also an imperative to end the fighting and to bring an end to the destruction. Now, that doesn't mean that Russia should be rewarded, but there is no way to physically dislodge the Russians from 20% of territory they hold in Ukraine and 80% of Ukraine's coastline, roughly, they still also occupy. There has to be negotiations to end this conflict. And Keir Starmer as well has also reiterated his support for Trump's instinct to bring this to an end through negotiation.
We're obviously looking at a pivotal moment in the global world order. It's going to be a changed one. And how should the rest of the world view their relationship with the U.S.? The U.S. obviously no longer defending democracies. How should the likes of NATO, how should countries involved in a Five Eyes arrangement be looking at this?
That's a really good question. I think it's so important to broaden the lens as to how these events in Europe and with the transatlantic relationship are being perceived around the rest of the world. I wrote a book last year called Westlessness, The Great Global Rebalancing, which sort of argued that the trend lines show that the West's position in the rest of the world is changing very, very quickly. And there'll be many more governments and countries and publics around the world that want to forge their own independent views around things. What I say is, on the first hand, countries that have some security dependency on the US's goodwill and its ability to write checks to back their security will understandably be looking at those arrangements with a degree of pessimism, whether that's Taiwan or even South Korea, where there are American soldiers positioned. Of course, there might just be the concern that the Americans will ask for different terms to keep engaged in our countries, in our region's security. That's one part. I think the other part is, this is happening in a world where the BRICS partnership is expanding, where we're still possibly talking about Chinese involvement to help Moscow end this war in Ukraine. And of course, China's view on the invasion was never to criticize it, but it was to kind of play this arm's length role as this economic partner to Russia. All of this, if you'd been Rip Van Winkle sleeping for the last 20 years, is unrecognizable to the world of 20 years ago.
Samer, a related question would be the sharing of intelligence. I mean, how much should countries be sharing their intelligence with the Trump administration, given what they're seeing right now?
Depends which country you're talking about. And there's one news report from about a week ago, which I don't know how true it was that as part of the US-Canada argument, there was some individuals around the Trump administration said we should throw Canada out of the Five Eyes intelligence sharing partnership. That's sort of the Anglosphere countries, UK, Australia, New Zealand as well. Now, who knows whether that's just a bargaining chip in that argument between Trudeau and Trump over Canada's subservience to the US and how much it takes in its security partnership. But let's be really clear, the US has the biggest intelligence apparatus in the world, including its signals intelligence and satellites. So you're not going to turn your nose up at that partnership if you're part of it. It is probably part of how you understand the world, understand threats. I think the possibility of relying on it in the same way, certainly for the duration of the Trump administration, if indeed that part of relationship management becomes a bargaining chip for Trump, that I think is certainly a very, very different world. Whereas I think you would have probably taken your partnership with the US maybe a bit more for granted on the security side in years gone by.
One final question before you go. How should Asian economies be looking at it, especially those who have said time and time again they will not take sides?
It's interesting because the whole they shall not take sides argument is the substance of many meaningful foreign policies. Some experts call that hedging, as in a country is hedging its bets. I think the notion of multi-alignment, in which a country like India or Indonesia, rising power, substantially important economies, are managing their foreign policies with active dialogues towards the Western friends they have, as well as towards China, potentially also towards Russia, in both those examples I've given. That is not an indecision, a failure to choose. That is a substance of potentially very wise and sort of modern foreign policy for this era that we're living through, which is an era of transition where there's still enormous Western power, American power, but there are also rising powers with enormous strategic autonomy and increasingly something to give on the economic side and potentially on other sides as well going into the future.
Right. Samer, thank you so much for your time. Samer Puri, Director, Center for Global Governance and Security at Chatham House. And we have an alert here in response to Trump's additional 10% tariffs on China. China has now responded, according to the Global Times, citing some sources. It says that if the U.S. insists on imposing unilateral tariffs and formally announces relevant measures, China will definitely carry out strong, powerful countermeasures, and that's according to the Global Times, citing some sources saying that it will respond, definitely carry out strong, powerful countermeasures on the back of those additional 10% tariffs. Of course, at this point in time, we've seen how China has been pretty measured in its response. Still ahead on Inside, we'll continue the conversation on the pivotal NPC meeting in China. Hear why Fidelity International's Pei-Chen Liu expects a higher national deficit to fund fiscal stimulus. Much more ahead. Keep it here with us. This is Bloomberg. And here's a look at cryptocurrencies after a massive rally sparked by President Trump once again talking up his plan for a strategic crypto reserve. Trump's social media post says the reserve will also include other cryptos beyond Bitcoin and Ether, including Solana, XRP, and Cardano. The shout-out helping digital assets claw back some of their steep losses from last month. Well, coming up, investors and policymakers alike are waiting and watching how China will offset the risk of U.S. tariffs while also ramping up fiscal spending. More on Insights coming right up. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. The outlook for China's stocks is being clouded by the tariff threat. This week, traders are also awaiting policy details from China's biggest political huddle of the year. Avril Hong is here with a check on the markets. And Avril, looks like traders are taking the tariff deadline in their strike. Too much optimism, I feel.
Maybe. I mean, the tariff deadline, potential retaliatory action from China, they seem to, for now, be kind of shrugging things off, right? This is the picture on mainland stocks into the lunch break. CSI 300, Hang Seng, enjoying a rebound from the steep losses of Friday, where the week was really dominated by tariff and tech concerns. Today, the bounce is getting fueled by the Tyson manufacturing PMIs, which echo the official numbers in showing resilience in factory activity. So it gives you a sense of the state of the economy that Chinese authorities are dealing with in dealing with Trump and his tariffs. Flip the board again, because as I said, the official non-manufacturing PMI data over the weekend showed the rise. But you look under the hood as well, it shows you how purchasing as well as output prices have, in the past couple of months, actually been picking up. So a sense of deflationary pressures also easing, although there have been some, including the likes of Bloomberg Intelligence, that flag that this might be masking consumption weakness. If you look at services PMI, it actually fell. Flip the board again. If you take a look at the valuations amid the selling of last week, it was really interesting that on many of these indices, they were either around or higher than the 10-year mean. So it was interesting how this held up. Of course, as you alluded to, this week's going to be about the NPC, which some have highlighted does have a tendency to underwhelm, but maybe this time around, given the threat of tariffs, authorities might be spurred into action, Haas.
Your guess is as good as mine, Avril Hong. Thank you. And China's NPC meeting expected to set the tone for China's economic direction and spending plans for the year. Our Chief North Asia correspondent Stephen Angle has more.
This year's National People's Congress will be tasked with some heavy lifting to counter deflationary pressures at home. Congratulations. Compounded by political uncertainties from abroad.
We think 2024 was the year of understanding the beginning of reflation in China, but it's going to be a long, long battle.
Coming out of the first Trump trade war and then the pandemic, China doubled down on its industrial policies while simultaneously cracking down on the property sector, the internet economy, and of course, COVID. An over-reliance on exports has led to the challenge China faces today. How to address, without stoking excessive debt levels, the imbalances between industrial overcapacity and slumping consumer spending, while also bracing for a potential protracted trade war.
Priority of macroeconomic policies should shift from promoting more investment in the past to promoting both consumption and investment, with more importance attached to consumption.
Bloomberg opinion columnist Shuli Ren says China's households sitting on more than $20 trillion of savings have hunkered down, spending less and creating their own self-care safety nets. Call it economic long COVID.
I think that's a fatal mistake because last year, consumption accounted for only 1/3 of the total GDP growth versus 2018, consumption accounted for more than 2/3. So what happened last year was that basically China managed to grow the so-called 5% only because of strong exports. And that basically put the China's economy in a very vulnerable position when Trump launches his trade war.
December's Central Economic Work Conference essentially set the NPC agenda to approve more public borrowing and spending this year, but authorities have been short on specifics.
I think China basically has no good choices at this point, and President Xi has to make some sacrifices,
including vows to strengthen China's social safety net by boosting healthcare and pensions to an aging society and middle class that's been hit with massive paper losses on property.
I suspect the government will look at the economic development, look at tariff announcement and responses in the economy, and potentially announce more. So basically, I think they need to work hard to stabilize the property market and boost domestic consumption.
The levers for the level of reflation are now in the hands of NPC lawmakers gathered here this week. Stephen Engel, Bloomberg News, Beijing.
Well, our next guest believes China may be able to withstand higher tariff pressures without massive disruptions to its domestic economy. Let's bring in Pei Qianliu, Asia economist at Fidelity International. Pei Qian, good to have you with us. Why do you think China can withstand the additional tariffs? We're talking about $1.5 trillion worth of goods.
Thank you for having me today, firstly. And I think that my optimism about China's ability to stabilize its economy lies under the developments of China over the last few years. If you think about China emerged today as one of the major exporters in the world, yet its reliance on U.S. in terms of exports as a share of its own GDP has been declining. It's telling us that China has been diversifying its export partners as well as deeply integrating the global supply chain. So from that perspective, I think China does have a lot more trading partner to deal with, and that itself is perhaps less disruptive than we previously have envisioned compared to trade war episode number 1.
Even though there's less reliance, exports remain the only bright spark in China's economy, and the U.S. is its biggest trading partner on a single country basis. So surely there would be some impact.
Absolutely. I think that is rightly pointed out towards what China needs to address right now, because China has been, over the years, more reliant on external demand compared to its own domestic demand. Now we're in a pivotal moment. We're all waiting for the National People's Congress this week, more particularly. And I think more importantly, people are waiting for a signal of rebalancing from China, from reliance on external demand more to domestic by addressing the weakness in the consumption and property sectors.
Now, in terms of consumption, that is the big question mark, whether or not China can address that with its fiscal stimulus. How much fiscal stimulus is needed? How much do we need to see to be confident that consumption will be addressed?
I think it's a gradual process. While we do hope that the fiscal stimulus on aggregate term could be more expansionary, we're not thinking about an ambitious target of aggressive expansion. More realistically, we think there will be a gradual expansion that's being addressed by a combination of on-balance sheet budget deficit expansion from 3% of GDP to 4% this year. We also think that central government will more likely be willing to take on the leverage by expanding its bond issuance scope to support consumption. But putting all this together, we're not thinking about flood stimulus like 2008 and 2009, because we're now in a very different scenario. China does have a structural challenge to address too, and those need to be addressed in a gradual manner by a combination of easing and reforms.
But gradual approach has disappointed the markets. The gradual approach has disappointed investors, and hence the market's looking pretty lackluster when it comes to foreign investment in the country. Can that approach still work?
I think we probably need to dissect China's number a little bit more into differentiating where the disappointment comes from. In our view, I think China's real growth has been relatively stable, or if not more optimistic than market has expected. The disappointment coming from the nominal growth that China has not been able to address more directly. So that to us, addressing inflation problem or deflationary pressure is more important than addressing the real growth problem. So instead of looking at numbers in terms of fiscal, which we definitely will focus a lot more on, we are also focusing more on China's way of addressing this deflationary impulse that's coming. So if you look at the inflation number makeup, in my view, I think that supply side has been the main pressure that's been weighing on both PPI and CPI. We have seen moderate improvement in demand, and I think that's going to continue. But more importantly, I think China needs to address the supply side problem of the issue as well. So more of a rebalancing.
So you're seeing that the deflationary pressures are easing at this point in time?
It is easing because domestic demand has been picking up gradually, but supply side remains a pressure for the domestic inflation pictures. So we think that China needs to address both sides of the problem, supporting this domestic demand while continuing to address the supply side issues with reforms.
Consumption is also being hampered by what's happening in the property sector and lots of expectations of what China can do to help ease the pain in the sector, which has gone on for some time now. What can China do?
I think for consumption, it boils down to two factors that drives consumer sentiment. Firstly is the wealth impact, which inevitably lies to the stabilization of the property sector, because household has been suffering a lot of paper loss on the property sector over the past few years. So I think that direction of stabilizing property sector and equity markets is a right direction to travel. We need more policies coming up from this side. It might be incremental, but stabilization helps restore household confidence.
What policies would work?
I think for Chinese government, they are right now focusing a lot more on addressing the excess inventory issues in the property sector. So this year, in terms of more details in the MPC, I think we're looking for optimistic case. China allows the local government special bond issuances to be used for addressing such issues that could accelerate the pace of local government addressing the excess inventory.
So destocking is what we're looking at for measures to help that. The other thing that the market in particular is looking at for are pretty much stimulus for the tech sector, in particular AI. We've seen how the rally's been driven by the tech plays, including the likes of Baidu, Alibaba, and Tencent. What can be expected there?
I think the tech sector outperformance in the recent weeks is one of the hopes or optimism that we have on China's fundamental, because that is happening under the backdrop that the regulatory environment has not yet changed significantly. I think President Xi's meeting with the private sector carries a lot of significance from that perspective, because that just tells us that the policymakers are now going to be more supportive of this sector. So that's a tailwind to the development of this sector. Private sector probably does not need aggressive fiscal support, but accommodative or supportive regulatory environment could play a bigger role than fiscal stimulus to drive the growth of this sector.
We've been talking about how we want to see greater stimulus from China. How much capacity
Okay guys, book half profit in crude oil. Okay, ये इस ब्लू नीचे वाली ब्लू कलर की लाइन के नीचे अगर क्लोजिंग आ जाती है तो फिर थोड़ा टारगेट बड़ा रख लेंगे 80 पॉइंट का, नहीं तो इतना ही टारगेट रहेगा विच इज़ अराउंड 40 पॉइंट. इसके नीचे क्लोज होता है तो फिर ये फाइनल टारगेट है 80 पॉइंट का. रुक सकता है यहाँ पर ये ब्लू कलर की लाइन के आसपास. सो बुक द हाफ प्रॉफिट एंड ट्रेल रिमेनिंग क्वांटिटी इन क्रूड. लेट्स सी ब्रेक करता है या नहीं करता है. देखो नेचुरल गैस में भी नीचे आएगा प्राइस अगर, तो यहाँ एक बाइंग का प्लान रखेंगे. अगर ये वापस ऊपर जाता है तो वापस सेल कर सकते हैं ऊपर से, ठीक है, अपर लेवल पे.
International rules-based order. That's why Europe should be involved.
Finland's President Alexander Stubb speaking there to Bloomberg's Francine Lacroix. Coming up, investors await Trump tariffs on Canada, China and Mexico. We think they're going to take effect tomorrow morning, London time, 5:01 a.m. We're going to bring you more on what you should expect. That conversation is next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 50 minutes into today's session, and you are seeing green on the screen for the DAX and the FTSE 100. The CAC not moving much at the moment, but there is outperformance, of course, for the defence names this morning. Double-digit growth for some of these names this morning. Leonardo, BAE, Saab, Thales, Rheinmetall, interestingly, pairing some of its earlier gains, but still up 9% this morning. But let's turn to another story that is rippling through these markets, and it is, of course, tariffs. President Donald Trump just 1 day away from slapping new tariffs on Canada and Mexico and doubling a levy on China. The moves are set to upend ties with the biggest US trading partners, and we can speak now to Brendan Murray, who leads Bloomberg's global trade coverage. Brendan, when we look into these markets, Valerie Teitel was saying it earlier, the FX market in particular suggests that when it comes to Mexico and Canada, you're going to see another delay, not implementation. I wonder, when they're just kind of a negotiating tactic,
At what point do they lose their power if the bark is never followed up with a bite?
No, exactly. That's the main question is, you know, the 25% tariff on Canada and Mexico would have an immediate and very large detrimental effect on the U.S. economy. It would be immediately felt through the auto industry. So you can imagine auto industry CEOs in the U.S. are going to be on the phone to the president to tell him, if you do this, production shutdowns are coming, job losses are coming. So you could imagine that the pressure will be very high on the U.S. president to delay. Perhaps he's got his joint session of Congress speech tomorrow night. You know, those tariffs, those North American tariffs you would assume the investors and financial markets would not react well to those. Does he want to go into that speech tomorrow night with kind of a pessimistic view about where the U.S. economy is going?
And Brendan, when you're looking at Mexico, Canada, and people sort of lump those together perhaps sometimes, and then there's China as well. I mean, what are you looking at as more material? I'm thinking of this in terms of risk appetite and how this plays out for other markets. Which appears to be more consequential? Which tariffs?
In the short term, the Canada and Mexico tariffs definitely are more consequential. The China tariffs seem to be more gradually phased in. You know, we've had 10% tariffs on Chinese imports for the past month. Importers, U.S. companies are adjusting, but you've had the CEO of Walmart come out recently and say, American consumers are feeling the stress of this kind of thing. You double it to 20%, that's even going to be even more stress. Look at Apple, which makes a lot of iPhones in China. Those are now those could become 20% more expensive than they were a month ago. Will consumers ultimately feel the sting of that? I think is a real question that the Trump administration thinks if we phase these in and we bring China to the negotiating table at some point, then we can perhaps work out a deal. But in the meantime, the tariffs are the pressure that we're going to apply.
This time tomorrow, do you think tariffs will be on Mexico and Canada?
I wouldn't want to predict anything, but I would imagine that there will be some sort of 11th hour announcement of a delay.
Is it lower or a delay? I guess is the question. What does that look like?
I would guess that there would be a delay.
Right,
another month, and you know, more time to maybe cite some progress, but we're not there yet. Maybe some smaller tariffs on a few items, sort of a token, follow through on the bluff that was mentioned. So I would imagine that when we get up tomorrow and the president is getting ready for his speech, the stock market is not going to be crashing because North America is in a trade war.
Okay, there you go, Lizzie. Brendan, nice to see you. Thank you very much indeed. You're still going to have a pretty busy 24 hours, I suspect.
Right, yeah.
Brendan's a busy guy right now. Brendan Murray.
And in terms of what we've got coming up this week, of course, the China NPC meeting is going to be huge in terms of the response to that tariff threat. And really, China getting back on its feet, getting back a bit of swagger. But those tariffs are going to test that momentum. And at the moment, markets kind of looking as if it's going to underwhelm.
It's going to be an incredibly busy week, isn't it? From tariffs tomorrow, then we go to that address to Congress. It's sort of like a State of the Union feel to it, even if it's not called that at this stage of his presidency. So you've got all of that building towards, as we mentioned in the first part of the programme, jobs data on Friday, but Friday seems so far away. An ECB meeting, EU leaders meeting to talk about Ukraine on
Wednesday
Thursday.
Feels like a long way away. There's a lot to get through between now and then. The story this morning, though, is definitely what's happening with these defence stocks. Huge rallies being generated across the board in terms of the defence stories that we are watching. As you can see, some really big gains. Some of them being paired a little bit, but these are huge gains on the back of already big gains. These stocks, some of these stocks are massively already year to date.
Yeah, absolutely. I was just going to go through some of those. Rheinmetall, even though it's paired its gains today, but Rheinmetall up 77% year to date. Leonardo up by 63%. Thales and Saab, both of those up by more than 45% year to date. The numbers those are.
But when you look at the bond space, 2-year bund yields down a basis point, 10-year bund yields up 2 basis points. Is that because the bond market kind of saw this coming already?
Maybe. It feels like we've been talking about this for weeks and weeks, but something woke stocks up today.
Absolutely. We've still got a lot to go for the bond market. Manufacturing ISM later out of the United States, the ECB later on this week. Anyway, it's been a busy morning. Hope you've enjoyed it. The Pulse is next. This is Bloomberg.
world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 8 p.m. Eastern Time. Right here on Bloomberg. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. The top names in business are on Bloomberg.
This is a cycle the likes of which I've never seen. And the willingness of people to believe things that just simply aren't true, it never ceases to amaze me. You know, I've always said that bull markets place a premium on promises and bear markets discount reality. And right now, there's lots of companies making lots of promises.
Nobody covers business like Bloomberg. Context changes everything.
Volodymyr Zelensky says he's willing to meet Donald Trump again if invited back to the U.S. after their White House clash, while key European leaders rally behind Ukraine.
The only thing that Vladimir Putin understands is power. You show any kind of a weakness, and he will basically go after you.
European defense stocks jump as region's leaders scramble to offer Ukraine support amid concerns of a U.S. pullback. Plus, markets brace for a barrage of tariffs on Canada, Mexico, and China set to take effect tomorrow. Now, at 9:30 a.m. London time today, we'll also be joined by the former Italian Prime Minister Mario Monti to talk European security and tariffs. But first thing is first, let's take a look at the European markets map. Now, it's very clear that a lot of these stocks are actually held up by defense. Defense stocks are definitely gaining on the willingness of Europe to step up the defense of Ukraine. You can see the CAC 40 pretty much unchanged. We did have also some of the rating agency looking at the debt issuance by some of these countries. The FTSE down, actually gaining, the FTSE gaining some 0.2%, so is the DAX, the IBEX down 0.8%. Now, Euro gaining, defense stocks rallying again. This is thanks to a concerted push by European leaders that is fueling this wave of military spending. BAE Systems gaining 13%, Dassault and also Rheinmetall gaining some 9%. Now, cross-asset, look, the picture is a little bit more uncertainty when it comes to tariffs. If they do come in place tomorrow as expected, it means it would be on around $1.5 trillion worth of goods. That's a huge unprecedented tariff wave, and so it's weighing on a couple of the assets that we look at the most. You can see U.S. 10-year yield at 4.2291, euro dollar 104.03, and then Bitcoin actually gaining a touch compared to the 25% sell-off that we saw in the last 3 weeks at 91,238. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Ukraine's president says he's willing to meet Donald Trump again if the U.S. president invites him to, quote, solve real problems. Volodymyr Zelensky met European leaders in London yesterday after clashing with the U.S. president and vice president in Washington on Friday. Now, French media reported that France and the U.K. are also working on a plan for a one-month truce. The U.K. Prime Minister said it's time for Europe to step up.
Not every nation will feel able to contribute, but that can't mean that we sit back. Instead, those willing will intensify planning now with real urgency. The UK is prepared to back this with boots on the ground and planes in the air. Together with others, Europe must do the heavy lifting.
Now, Finland, which shares a 800-kilometer-long border with Russia, told us Europe must counter Russia with strength.
The only thing that Vladimir Putin understands is power. You show any kind of a weakness, and he will basically go after you. There's a Russian saying that if you use a knife or a bayonet and push in and it's soft, go all the way. If it's hard, pull back. Let's be hard.
Well, joining us now is Fabrice Potier, Chief Executive of Rasmussen Global and a former Director of Policy Planning at NATO. Here with us in the studio is also Stephanie Baker, a Bloomberg senior writer who spent a lot of time looking at the Russian economy and what Vladimir Putin's endgame is. So thank you both for joining us. Stephanie, it's been an extraordinary 4 days. I mean, I don't even know where to start. What did we witness in the Oval Office, and what will be the long-term repercussions of what Europe has to pay up?
Right. So I think the stark difference that was revealed by that Oval Office showdown was that Zelensky views a ceasefire without security guarantees as not sufficient to guarantee long-term peace. Whereas it looked like Trump was viewing his idea of a deal is just stop the fighting, try to do a quick deal, and it doesn't matter if there are U.S. security guarantees attached. And I think that is the fundamental problem here that both Europe and Zelensky needs to overcome. Trump administration officials are now demanding an apology from Zelensky. Zelensky obviously doesn't think he's done anything wrong. He was just trying to explain Ukraine's position. He's a war-weary leader with tremendous pride, and I think he was trying to explain that Putin can't be trusted. And he was trying to respond to Trump's rhetoric that does seem to be echoing Russian talking points. And so I think that's the fundamental problem here. And, Marco Rubio gave an interview yesterday trying to explain, look, we can't be attacking Putin and expecting him to come to the table. But I think there's the sort of two views on that. Is Trump really sympathetic with Putin, or is this a negotiating tactic?
And, Stephen, we also heard from the Speaker of the House, Mike Johnson, and this is what he said on Vladimir Putin.
I think Vladimir Putin is an old-school communist, a former KGB agent. He's not to be trusted, and he is dangerous. The way I view this is that China, Russia, Iran, and North Korea are engaged in a new Axis powers, and they are not on America's side. Let's be crystal clear about that.
Fabrice, we saw also this extraordinary meeting in London yesterday with the coalition of the willing countries in Europe that want to step up defense. Is there a clear leader in this? One of the questions that keeps on coming up is actually, who do you speak to in Europe? Is there a lack of leadership, and what needs to be done now?
I think there are some clear leaders, with France and the UK being the foremost European military powers, also nuclear military powers. But that's obviously not enough. You need a European critical mass. You need a European coalition that is more than just two, that can really bring not just political depth, but also real military capabilities. Because we are talking here about not necessarily a peacekeeping force, but like a reassurance deterrence force. And to deter Russia, you need some real signaling. You need to show you are committing real force, like the Finnish president was alluding. You need to show strengths. And therefore, the UK and France are not enough. I will add that I think at last, we are seeing this coming off the ground. And we have been at Rasmussen Global, for example, talking about the European coalition for the past 6 months. That's the way to negotiate with Trump also, to come to the White House with something to put on the table rather than just beg for a seat at the table. And I think finally the Europeans are getting their act together.
Stephanie, what are the risks in striking a deal with Russia without plausible and strong deterrence?
Well, I've long argued that Putin does want some kind of quick deal, like a ceasefire that would include some kind of sanctions relief, which he does want. And I think he wants some breathing room to regroup and rearm. I don't think his long-term goals for controlling Ukraine have changed fundamentally. And I think that's part of the problem with coming to a deal, is that he wants his negotiating demands are non-starters for Ukraine. He wants caps on Ukraine's military forces. Russia has annexed more territory than it actually controls on the ground. That's another sticking point. So I think without firm security guarantees from the U.S. backed up with some kind of peacekeeping force, I think it will be risky in terms of Russia coming back for another bite.
Yeah, and Fabrice, I guess the question is, can Europe, even if it gets its act together, go at it alone? Or do they need U.S. support? How long does Ukraine have if the U.S. suddenly actually doesn't give anything to Ukraine anymore?
I think here, to get it right, you have three critical layers. The first one being the Ukrainian forces. We tend to forget, but this is a formidable military right now, one of the best equipped in Europe, one of the most war-ready, because they are fighting every day. And they are close to beyond 500,000 of servicemen and women deployed right now on the Ukrainian soil. So this is the first line of defense, not to be underestimated. Second, you do need European forces, possibly where we are strong in the air and maritime domain. You could see a kind of no-fly zone, anti-access effort to be able to guarantee that the non-occupied Ukraine will be able to return to business, to normal reconstruction and economic development. And finally, to make all of this potent enough vis-a-vis Putin, you do need some U.S. guarantees to the European guarantors. You do need some U.S. Political declaration, but also signaling that if something were to happen, a dramatic escalation by Russia, that it will not be just the Ukrainians and the Europeans, that the U.S. will be there to watch our back. And I think that's what Starmer and Macron have been trying to negotiate with Trump over the past few weeks.
Stephanie, do you see a real risk of the U.S. and, Russia dividing Europe into spheres of influence?
Absolutely. I mean, I think that's what Putin's ultimate goal is. He wants his own sphere of influence, and he's achieved one of his overarching goals, which is to divide Europe from the U.S. and weaken NATO. And I think NATO is weakened by this, by Trump's position and his stance. The meeting in the Oval Office, I think, raises real questions about whether or not the U.S. would come to Europe's aid if it was attacked. It's not just about security assurances for Ukraine. I know Trump did say he believed in Article 5, but you had Elon Musk today or last night saying that the U.S. should pull out from NATO and the UN. And I don't take that. I think that does have influence, and it could influence Trump's thinking. I mean, the ultimate risk here is that a quick deal on Putin's terms ends up rewarding Putin instead of punishing Putin, which is, the theme of my book on the economic war against Russia, that if the Trump administration agrees to give him what he wants, stop the fighting, give him some limited sanctions relief as an inducement without any long-term security guarantees or plan to stabilize Ukraine, then that will weaken Europe long-term.
And Fabrice, with your many, many years at NATO, are you confident that NATO's deterrence will remain intact?
Well, I think nothing has fundamentally changed, and this current U.S. administration has clearly said they were not intending on changing U.S. presence in Europe. We have to see what happens in the coming years, but I think we are fine. The question, however, is where are we going next? And I think European stability and defense is now increasingly going to happen outside NATO, outside the EU. Is going to be coalition, and maybe down the line there will be then a reconnection with NATO. But right now, NATO is no longer the first in line. This is really going to be about the Europeans doing the heavy lifting in a new kind of geometry, and this is a new world, and we have to be creative in that sense also.
Okay, Fabrice, thank you so much. Fabrice Potier there, Chief Executive of Rasmussen Global, and Stephanie Baker, Bloomberg senior writer and author of Punishing Putin. Now, coming up, the U.S. charges towards imposing tariffs on Canada and Mexico tomorrow, barring last-minute negotiations. We'll discuss all of that with the markets of Seema Shah of Principal Asset Management. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Tuesday, President Trump addresses a joint session of Congress for his first major speech since returning to the White House. Tune in to Bloomberg Television and Radio for a special edition of Balance of Power at 8 p.m. Eastern for full coverage of the address, followed by the Democratic response. It all starts Tuesday, only on Bloomberg. Context changes everything.
And now the U.S. is set to impose tariffs on goods from Mexico and Canada tomorrow, barring any last-minute negotiations. Now, traders are also watching for China's response as the National People's Congress begins this week. Now, our next guest says the latest U.S. tariffs could have a greater economic impact than levies Donald Trump imposed back in 2018. Well, Seema Shah, Chief Global Strategist at Principal Asset Management, joins us now. Seema, thank you so much for being here. I mean, the amount of goods that actually could be tariffed tomorrow is like 1.5 trillion. I mean, this is huge. What are the chances that this plunges the U.S. into a recession?
So, hi, Francine. This is very, very significant. But again, we have to remember we don't actually know exactly what's going to come in. So we could wake up tomorrow. Fast. Exactly. I mean, from a day-to-day perspective, we don't even know. Let's say it is even introduced tomorrow. We don't even know how long it's going to be kept there for. Yeah. So there is a ton of uncertainty going on. In the worst-case scenario, from what we've been looking at, with a 25% tariff on Mexico, Canada, an additional 10% on China, it would have an impact on U.S. growth, pushing it down by around just over 1.1%. That's not enough to plunge it into recession. But of course, the economic data in the last couple of weeks has been concerning. And one of the things that we are watching very closely is, of course, the deterrent business sentiment, consumer sentiment, and what are the capex plans. So there are so many different dimensions to Trump 2.0 that is actually becoming more and more difficult to analyze what the potential economic impact could be.
Seema, where do you think it impacts first? Again, the market has definitely, over the last 3 to 4 weeks, I would say, changed from worrying about inflation to actually hurting at consumer spending. And again, this capex could have longer-term impacts if chief executives just hold off spending.
Exactly, and I think that's one of the things is for tomorrow, let's say that it's delayed for another month. Of course, that's better than the worst-case scenario of the full tariffs being introduced. But it still means that there is that lack of uncertainty weighing on capex. So this is a fairly difficult period. I think, as you said, the sentiment has shifted. The focus has gone from potentially rate hikes to now more and more people saying, well, look, is recession on the horizon? We're not there yet. Yeah. We still think that actually the fundamentals of the US economy is still very strong. Consumer balance sheets, corporate balance sheets, strong enough to withstand the various headwinds. But of course, there is the potential that this, continues to gain a lot of steam. And of course, we don't know what else is coming. And I think that's the key thing.
China's economy, how do you play it right now? Again, given the tariffs, given that it's also a big week for some of the politics and party politics that we'll hear about.
Right, so we have become somewhat more, optimistic on China. It's obviously been helped by valuations being so cheap that we didn't need too much good news in order to
ओके गाइस, क्रूड ऑयल में प्रॉफिट बुक कर लेना, ठीक है। क्रूड ऑयल में प्रॉफिट बुक कर लेना अगर चाहो तो। बाकी थोड़ा सा नीचे और आएगा तो देखेंगे 6051 के आसपास। बाकी अगर सीधा ओपन इक्वल टू हाई बना के गिर जाए इस लेवल पे तो यहाँ तो बाइंग बनेगी बनेगी। एक बाइंग थोड़ा सा यहाँ से भी एक्सपेक्ट करना ही चाहिए हमें। थोड़ी रिस्की रहेगी बट यहाँ से भी एक एक्सपेक्ट करी जाएगी। लाइक कुछ इस तरह का फॉर्मेशन देगी। थोड़ा क्वांटिटी कम रखेंगे उसमें। 3 PM हो गया, इंडियन मार्केट क्लोज होने वाला है, थोड़ा ध्यान रखना। एंड नेचुरल गैस भी थोड़ा सा अपर लेवल पे सेलिंग का प्लान रख सकते हैं इन नेचुरल गैस। बाकी सेलर्स एग्जिट जरूर हो जाएं। कोई न्यूज़ वगैरह आती है तो देखते हैं, और कोई न्यूज़ अभी है नहीं, इंडियन मार्केट ही क्लोज हुआ है, नथिंग एल्स। यहाँ थोड़ी क्वांटिटी कम ही रखेंगे, यहाँ ज़्यादा क्वांटिटी रख नहीं सकते। बाकी अगर ओपन इक्वल टू हाई बना के गिर जाए तो फिर तो बेस्ट ही है, बेस्ट के सिनेरियो। एसएल थोड़ा सा बड़ा रहेगा इसलिए भी ज़्यादा रिस्क नहीं उठाएंगे, लगभग 20 पॉइंट का, 20 to 22 पॉइंट का। कम ही रखना है क्रूड वाले ट्रेड में, ठीक है। इसका एसएल के हिसाब से रिस्क रिवॉर्ड उतना अच्छा है नहीं, 1:2.2 ही दिखा रहा है। सो गो विथ अ स्मॉल क्वांटिटी। बाकी एसएल बड़ा है तो मिनी भी ट्राई कर सकते हो। बेटर तो ये रहता है कि अगर ये ओपन इक्वल टू यहाँ कहीं हाई बना के सीधा ब्रेक कर दे और यहाँ आ जाए, फिर यहाँ से थोड़ा सा रिस्क रिवॉर्ड बेटर हो जाएगा। बिकॉज यहाँ से देखोगे तो रिस्क रिवॉर्ड आपका सीधा सीधा 1:4 to 1:5 बन जाता है। सो ध्यान रखना, थोड़ा सा रिस्क की साइड पे रहेगा ये सपोर्ट जोन। सो गो विथ अ स्मॉल क्वांटिटी ओनली।
Our starting point must be to put Ukraine in the strongest possible position now, so that they can negotiate from a position of strength. And we are doubling down in our support. Yesterday evening, the UK signed a £2.2 billion loan to provide more military aid to Ukraine, backed not by the British taxpayer, but by the profits from frozen Russian assets. And today I'm announcing a new deal, which allows Ukraine to use £1.6 billion of UK export finance to buy more than 5,000 air defence missiles, which will be made in Belfast, creating jobs in our brilliant defence sector. This will be vital for protecting critical infrastructure now and strengthening Ukraine in securing the peace when it comes. Because we have to learn from the mistakes of the past. We cannot accept a weak deal like Minsk, which Russia can breach with ease. Instead, any deal must be backed by strength. Every nation must contribute to that in the best way that it can, bringing different capabilities and support to the table, but all taking responsibility to act, all stepping up their own share of the burden. So we agreed some important steps today. First, we will keep the military aid flowing and keep increasing the economic pressure on Russia to strengthen Ukraine now. Second, we agreed that any lasting peace must ensure Ukraine's sovereignty and security, and Ukraine must be at the table. Third, in the event of a peace deal, we will keep boosting Ukraine's own defensive capabilities to deter any future invasion. Fourth, we will go further to develop a coalition of the willing to defend a deal in Ukraine and to guarantee the peace. Not every nation will feel able to contribute, but that can't mean that we sit back. Instead, those willing will intensify planning now with real urgency. The UK is prepared to back this with boots on the ground and planes in the air. Together with others, Europe must do the heavy lifting. But to support peace in our continent and to succeed, this effort must have strong US backing. We're working with the US on this point after my meeting with President Trump last week. And let me be clear, we agree with the President on the urgent need for a durable peace. Now we need to deliver together. Finally, we agreed that leaders will meet again very soon to keep the pace behind these actions and to keep working towards this shared plan. We are at a crossroads in history today. This is not a moment for more talk. It's time to act, time to step up and lead, and to unite around a new plan for a just and enduring peace.
Congratulations, Mr. President.
Well, he's back. And guess what he's talking about?
We will tariff and tax foreign countries to enrich our citizens.
This is a surprise to no one because it's one of his favorite subjects.
I do like tariffs. Tariffs, tremendous tariffs, tariffs that are massive. To me, the most beautiful word in the dictionary is tariff.
Trump has ordered federal agencies to investigate the impact of tariff policies, or in his words, recommend appropriate measures, like global tariffs, to fix these deficits. The topic was low on boardroom agendas under former President Biden, but since Trump's election in November, talk of tariffs has spiked.
The new president has promised to put tariffs on goods coming to the US from all around the world, not just from trading rivals such as China.
He's seeing tariffs as a leverage point to get other people to do what he wants.
In his first week back, Trump threatened to enact 10% tariffs on China, 25% tariffs on Mexico and Canada, and to use them as a tool to try to stop the Russia-Ukraine war.
Trade policy under President Trump has the potential to send shockwaves through the global economy.
Even if Trump's threats don't materialize, the mere thought of a trade war is already upending international relations and forcing companies to prepare for the worst.
I feel like a pawn in a big game of chess.
Let's start with what we know. Tariffs are government-imposed taxes on imported goods and services which increase the cost of imports. And that's the whole point, to make them less competitive compared to domestic products in a bid to help or protect local industries. Their use in the United States declined dramatically after World War II.
More and more, the cargo ships of the great trading nations are making New Orleans a regular port of call.
And in the globalized 90s, they became a dirty word.
No country can escape the global economy, and the greatest, largest, most powerful country in the world cannot escape the global economy.
Broadly speaking, everyone agreed that the freer flowing of goods and services lended to prosperity for all. But that kind of economic thinking has been turned on its head when it became clear that there are not just winners, but there are also losers from globalization. President Trump wants tariffs to raise revenue for the government. He wants tariffs to bring manufacturing back to the US. And of course, he wants tariffs to level the books with key trading rivals around the world.
While Trump frames his tariffs as a way of raising trillions of dollars to pay for tax cuts, it's worth taking a look at the numbers. The blue line is what the government is estimated to collect from existing tariffs over the next 4 years. Only a drop in the bucket compared to the black line, which shows revenue from income tax. Of course, we shouldn't forget that we have been here before.
President Trump's first term, when he implemented tariffs, it sent shockwaves around the world because it was breaking with convention.
Front page of every newspaper in the country right now, a dive on the Dow because of this trade war.
In Trump's first trade war, the scope of the tariffs was targeted toward capital goods and intermediate goods from China, and it was not a very large increase in tariff rates. So overall, it took average tariff rates from 1.5% to about 4.5% on overall U.S. imports. During that second half of 2019, the trade policy uncertainty was clearly having an impact on dampening business investment. So it de-escalated in late 2019 when the U.S. and China signed the Phase 1 agreement.
In the Phase 1 deal, China promised to buy at least $200 billion more in U.S. goods and services. But that didn't happen. Now, Trump wants to change that and cut a new deal with the Chinese government.
Until I came along, China never paid 10 cents to this country. They ripped us off and they never paid anything.
Even before Trump's Inauguration Day memo calling for a fresh look at U.S.-China trade relations, companies in China have been bracing themselves for a second trade war by chasing new markets and offshoring production to neighboring countries. The memo also singled out Canada and Mexico, using tariffs as leverage to achieve domestic policy goals.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people to come in, and fentanyl.
Whatever the motivation, it's American companies that could suffer the most.
U.S. auto industry has a very long supply chain that is very complicated, that takes many parts from many countries. A lot of this supply chain and auto parts came from Canada and Mexico. So imposing tariffs on Canada and Mexico basically effectively would be imposing tariffs on GM and Ford's production.
If he goes ahead with the kind of threats that he's talking about, then you would see question marks over how will that impact inflation, how will that impact where business puts their investment, how will it impact the flow of goods around the world.
Many U.S. businesses are trying to wargame what's coming next.
During the first Trump presidency, when tariffs were enacted, it was the biggest strain our company has ever seen. 100% of our products are manufactured in China. It took us 24 to 36 months to adjust the supply chain. I would estimate the spend to be around $30 million. If new tariffs are enacted, the costs are going up. And if our cost of goods sold goes up, unfortunately, the cost for everybody goes up. This is not a tax on other countries. This is a tax on you.
And that's really only the first layer of the onion, as you can't have a trade war without retaliation, something that on the surface the U.S. might have an upper hand in.
China has more to lose than the U.S. because U.S. imports about 450 billion of goods from China, but China only imports 150 billion of goods from U.S. So even if China wants to retaliate against the U.S. tariffs, there's only 150 billion of U.S. goods to retaliate.
But China's intrinsic role in global supply chains could offer fresh methods of retaliation.
China dominates the production of some important metals such as germanium, gallium, and these are metals that are very critical to build semiconductors. So if China were to impose export controls on these crucial minerals, that will have knock-on effects in U.S. ability to build up the AI industry or build up semiconductor plants.
I'll bet it all.
And as with any fight, things can get personal.
So in the first Trump administration, EU, in retaliation to the U.S. steel and aluminum tariff, imposed 25% tariffs on U.S. bourbon from Kentucky, with the explicit goal of making Mitch McConnell, the Kentucky senator, unpopular. And similarly, China decides on what to retaliate in order to hit at the red states, the agriculture centers in the U.S. And so the industry that could suffer from a retaliation from our trade partners could range from agriculture, winemakers, and automakers.
But like all policy, the devil is in the details, something the international business community anxiously awaits. The how and the when and for how long all remain unknown, and that uncertainty takes its toll on the economy.
The challenge becomes, are you protecting against the risk of tariff? Or are you protecting against the risk that expected tariffs are not going to be put on?
It's been found that when uncertainty on trade policy increased, what you have in a couple quarters down the line tends to be economic slowdown.
When Trump was last in office, news coverage of trade policy uncertainty was high. It dropped under Biden and stayed low, but now that Trump's back, so is the uncertainty.
I can't tell you if our cost is going to go up by 0%, 10%, or 25%. I have no idea what's coming. And when you're having vague conversations with your big customers, they don't like it.
Ultimately, how this trade war impacts both the US and global economy will depend on the specifics. We'll have a long way to go before we can truly count the costs and the benefit of it.
Good Monday morning from the Asia Pacific, just half an hour from the opening bell. Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Rebecca Chung-Wilkins.
Our top stories this morning. European leaders are racing to craft a plan for Ukraine's security, including a coalition of the willing, after the clash between Presidents Trump and Zelensky.
Now, Chinese investors are facing a pivotal week here with high hopes that the National People's Congress may deliver further stimulus to counter U.S. tariffs. We'll have discussions on the economy and business environment as we count down to the two sessions.
And China's largest bubble tea chain, Mishra, is set to debut this hour after Hong Kong's biggest IPO of the year.
Good morning, and again, welcome to the show. It is Monday. It certainly doesn't feel like we had a weekend. Everything from obviously the dust-up that we saw in the Oval Office over the weekend, certainly events after that. We had PMI numbers out of China, and on that note, we're looking ahead to NPC. Markets are on better footing right now compared to, I guess, how we ended the day on Friday in the Asia Pacific, and then we had, of course, that continued rebound into the U.S. close. That being said, though, as you can see, U.S. futures are in the early goings of Monday, pairing some of the gains earlier on. So we're now down a 1/10%. The dollar, as you can see, is reversing a lot of the strength that we saw going into the Friday close. We'll talk more about the PMI numbers and what that perhaps means for the context we're coming into this NPC meeting and the NPC, and of course that work report where we are expecting them to effectively outline, of course, economic targets this year, and then some more. Perhaps we'll see. A couple of other things to note as well. Okay, so in Singapore, we're coming online there. One stock that we've been tracking, of course, resuming trade today. City Development's down about 6-7% in the opening minutes. At the reopen here, of course, there's speaking of dust up there within the board itself. I guess we can talk more about that corporate room drama a bit later on in the show. 2 then 10s right now ahead of the jobs report, of course, later this week. And broadly speaking, though, risk appetite is better, but not solid going into the open today. Right, Korea's closed. Just a, I guess, housekeeping reminder that Taiwan, though, is reopening today, and that's coming up on your next board, of course, after that, I guess, being shut on Friday. TSMC is down about 3.4%. That is some catch down, of course, to the sort of price move we saw, that pullback that we had in Asia Pacific on Friday. Crypto, yes, we're down, but compared to levels this time yesterday, Sunday, of course, we're up about 10,000 US dollars in Bitcoin. We'll talk more about this later. And of course, the approach to the Chinese Open following that massive pullback that we had in price on Friday. And we are called higher ahead of course, a fairly pivotal week. By the way, speaking of PMI, we have the Taishan numbers coming out this hour. Stay tuned for that. And of course, as it pertains to these tariffs that are set to kick in, as it pertains to expectations around the Chinese currency, Goldman Sachs have come out with their note. They think 740 is the price we're looking at on the exchange rate. On the nominal rate itself, when you look at things like implied and expected vol over the next week or so, it doesn't seem like anything that has been announced so far has taken people blindsided. We have been talking about this for some time now.
Yeah, we have. But sort of two big rival stories now. On the one hand, we have the MPC coming up, a big focus, of course, on what the offset is going to be for tariffs, some of that sluggishness, the over-reliance perhaps on the export market in China. But also, of course, we have this big geopolitical story developing when it comes to the US, when it comes to Ukraine. And just thinking about that a little bit deeper, the UK now has called for a coalition of the willing to secure Ukraine after any US-brokered ceasefire, as European leaders met in London. Prime Minister Keir Starmer says Britain, France and others will work with Kiev on a ceasefire plan.
Not every nation will feel able to contribute, but that can't mean that we sit back. Instead, those willing will intensify planning now with real urgency. The UK is prepared to back this with boots on the ground and planes in the air, together with others. Europe must do the heavy lifting.
Now, those comments coming through after Vladimir Zelensky left the White House abruptly on Friday without a minerals deal or security guarantees. It's following that heated exchange with President Trump.
You're not in a good position. You don't have the cards right now. With us, you start having cards. Right now, you don't. Yeah, you're playing cards. You're playing cards. You're gambling with the lives of millions of people. You're gambling with World War III. You're gambling with World War III. And what you're doing is very disrespectful to the country.
Let's bring in our team now. For the latest on Ukraine, we have Bloomberg News Desk Editor Jill Deesis and our China correspondent Min Lo is in Beijing, looking ahead to the National People's Congress there. Jill, we'll start with you. Really pretty extraordinary scenes in the White House over the weekend. What does this mean for a potential ceasefire and U.S. relations with Europe?
Well, ultimately, Rebecca, I think what we're seeing here is this idea that the need for Europe to really sort of step in and ultimately be sort of the lead in sort of brokering something here with Ukraine. It's really thrown into sharp relief when you see that very disastrous meeting between Zelensky and Trump and his Vice President Vance in the White House over the weekend. Trump has really kind of been making this case for the last several weeks now. He's been saying pretty much that, Europe needs to be out front. We've seen Trump, kind of willing to expedite negotiations with Putin, really. And I think, what you're seeing out of Europe, not just this emergency meeting that we just had on Sunday, but also, that meeting in Paris just a couple of weeks ago, is Europe really kind of scrambling and trying to figure out a way forward here. I mean, I think that what's notable about this emergency meeting that Keir Starmer hosted here is that it's not this giant coalition of everyone that's involved in the EU. I mean, you're seeing, everyone from, Germany, Norway, but also Canada attended this. You have Italy talking here. I think it's really that reality of Europe to say we can't just wait for every single member of the EU, plus Britain to kind of get on board here. They need to sort of broker something, and they need to broker it fast because they're fast approaching a reality where you might have something involving Ukraine that doesn't come with that guarantee of American-backed security. Yeah, as he pointed out, it is time to act, not so much more words here. We did hear as well from Vladimir Zelensky, and I guess in so many words, if the conditions are right, if he did get an invite back, that he is still willing to speak with President Trump. Yes, I mean, I think that, despite, how we just all saw that meeting go, you did have Zelensky, repeatedly say that he still does, ultimately want to, develop some kind of a relationship with Trump, get back to the White House. I mean, I think that there is that understanding that, at the end of the day, still Ukraine, and I think certainly the EU at this point would prefer that America be involved, the U.S. be involved in some kind of negotiations here. I mean, still obviously, the U.S. has been for the last 3 years, really critical for supporting Ukraine militarily here. I mean, that's something that you don't necessarily want to just go away. And ultimately, I mean, you want to make sure that the U.S., that if you're Ukraine, if you're the EU, that you have that same seat at the table with the U.S. if, ultimately, Trump sort of goes in and starts negotiating with Putin. So I do think that, at least for Zelensky, that's a channel that he wants to keep open. But again, I do think that when you've got these types of, EU meetings kind of coming together here, it does, sort of suggest there that the EU still, at least Europe more broadly, still has to be sort of front and center going forward for any kind of negotiation. Jill, thank you so much. Jill Deesis there on the latest on the Ukraine front. Let's get to Min Lo now. Of course, she's in Beijing for us to cover, of course, this big 2 sessions taking place this week, economic targets and everything in between out of China. Perhaps maybe some context here as well on the external challenges to this economy, tariffs, whatnot. Min, just talk us through tariffs, of course. They're set to take effect. And how does that really color what we are expecting to hear out of that work report this week?
Yeah, so we have the 25% tariffs that U.S. is imposing on Canadian and Mexican goods that was supposed to kick in February. They're going to kick in tomorrow, although Trump officials are now saying that that final number is still not set in stone. So about 24 hours ahead of that deadline, looks like there are still going to be this last-minute negotiation. We know that Scott Bessent has signaled that it would be a good idea if Canada and Mexico both match the U.S. tariffs on China to create a sort of North American tariffs there. So could be more potential tariffs coming from Canada and Mexico on China. Of course, the additional 10% tariff on Chinese goods from the U.S. administration is supposed to kick in tomorrow, U.S. time midnight, which will be Beijing time around 1 p.m. tomorrow. That's when we want to look out for how China would respond, whether they would announce their own set of countermeasures to those tariffs tomorrow, a day ahead of that NPC. And so far, their measures have been very targeted, slightly less than proportional in scale to the U.S. tariffs. Will we see China continue to adopt that stance of strategic patience here? Because we did hear President Xi last week urging officials to remain calm and composed amid these external challenges. But you got to wonder what is preventing both President Xi and Trump from picking up that phone in that call that President Trump had said was supposed to take place as soon as possible. Also got to wonder how long Beijing's patience will last, because at some point, if they feel that President Trump is not negotiating on good faith, they might shift towards a more aggressive and assertive stance as well.
Yeah, Min, on your point about the sort of strategic patience that we've seen from Beijing so far, nonetheless, we have seen China take some efforts to support its economy. What is it doing so far, and are we seeing signs that that support is actually having an impact, having read-through?
Yeah, well, we did get the PMI numbers over the weekend, and pretty good set of numbers there, beating expectations on the manufacturing front, coming in at 50.2 versus 49.1 the previous month. Non-manufacturing coming in at 50.4, in line with estimates. And it's a good set of numbers that I feel like she still masks the weakness in consumption, because you look at non-manufacturing 50.4, that consists of two prints, the construction PMI and the services PMI, and most of that number is being pulled out by construction, which came in at about 52 or so. Services PMI came in bang in the middle at 50, a contraction from the previous month, which shows that purchasing managers perhaps are expecting this pullback in spending, perhaps after the Lunar New Year. And also that's despite the government measures so far, the expanded sort of equipment upgrading program. We have seen the effects there with an increase in spending in
Good Monday morning from the Asia Pacific, just half an hour from the opening bell. Hong Kong, Shanghai, and Shenzhen. You're watching the China Show.
This is the Asia Trade. I'm Sherian in Tokyo.
I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for a cautious open after Wall Street closed out February with gains. The dollar in focus as traders brace for President Trump's tariff barrage due to hit China, Mexico and Canada this week. Chinese stock investors facing quite a pivotal week, with high hopes that the National People's Congress may deliver further stimulus to counter US tariffs. And geopolitics in focus after that Trump-Zelensky White House showdown. European leaders now seeking their own coalition to secure Ukraine.
Take a look at the setup across Asia right now as we're awaiting the Japanese market opens, of course, in about 1 hour. We're seeing those futures looking higher, 0.3%. We actually saw a week of losses for the Japanese yen, but this after already 2 months of gains against the U.S. dollar. Of course, we continue to watch the BOJ tightening path. This week will be about the National People's Congress in China. We are expecting that growth target for the year to come out. The ASX 200 staggered open, not doing really much at the moment, but we continue to watch also what's happening in South Korea. That market is closed today, but of course, we have seen thousands of people protesting the Constitutional Court decision on President Yoon Suk-yeol's removal. Take a look at how we're setting up with U.S. futures at the moment. We saw that rally on the Friday session. This, of course, as we got the PCE numbers showing that inflation isn't necessarily heating up. We also heard from Treasury Secretary Scott Bessent talking about inflation slowing down over the course of the year. Crude prices at the moment above that $70 a barrel level. Of course, we continue to watch the tech sector as well, given those implications coming from tariffs that we're expecting on Mexico, China, and Canada as well. Heidi.
Well, the UK has called for a coalition of the willing to secure Ukraine after any US-brokered ceasefire. As European leaders met in London, Prime Minister Keir Starmer says Britain, France and others will work with Kyiv on a ceasefire plan.
Not every nation will feel able to contribute, but that can't mean that we sit back. Instead, those willing will intensify planning now with real urgency. The UK is prepared to back this with boots on the ground and planes in the air. Together with others, Europe must do the heavy lifting.
This comes after Volodymyr Zelensky left the White House abruptly on Friday without a minerals deal or security guarantees following that heated exchange with President Trump.
You're not in a good position. You don't have the cards right now. With us, you start having cards. Right now, you don't. You're playing cards. You're playing cards. You're gambling with the lives of millions of people. You're gambling with World War III. You're gambling with World War III. And what you're doing is very disrespectful to the country.
Let's bring our Bloomberg economist Alexander Isakov. And Alexander, you know, just a truly extraordinary moment when it comes to global diplomacy. But what do you see as the sort of longer-term impact of that spat on potential settlement, on potential sort of redrawing of the security lines and support that we see in Europe?
Yeah, for obviously the spat left Ukraine weaker than it was a week ago, despite the EU readiness to step in. Without US, the coalition of the willing will be narrower. And probably we are further away from the settlement today. We know that the goals of the conflict for Russia are endogenous and they depend on the level of support for Ukraine. This means that Russia and Moscow will likely be bolder in their territorial claim after this spat and will be more willing to advance kind of higher territorial claims in the potential settlement when and if the time for it arrives.
What does it mean for U.S. support eventually? Because we are expecting Ukraine's U.S. gear to start running out by the summer. So could European leaders come to the rescue?
They will, but our experience and experience of the last year shows that the U.S. support is crucial. So if we look at 2024, we can see that the stall in the support from Congress that happened in the first half last year actually meant that Ukraine found it much harder to hold the lines over the year. So we don't expect an immediate impact. U.S. has adopted a pretty significant, chunky support package last year under Biden, but we expect that in the next 6 to 9 months, we will see that those kind of stocks are running out, and without continued and large support, we will see that Ukraine will start to experience more problems in terms of just holding the line.
You've written that the only major winner here is Putin. How much leverage does this give Moscow in this situation? And is there a realistic possibility that EU allies, global allies, can find the funding that, you know, in the gap that will be left potentially by the US?
Yeah, for sure. Moscow is definitely a winner here. We expect that Moscow will advance bold territorial claims for Ukraine's east and south. We expect that those claims extend beyond current territorial lines of control for Moscow. As far as the funding question goes, we expect that this will be a combination of basically more spending by EU countries on defense, and part of that will be in the build-out of industrial capacity for industrial manufacturing. Part of that will go directly to fund Ukraine's micro-financial needs. The country needs an injection of hard currency just to stabilize its external position, but also just fund the current service provision to the population. We see that the discussions sometimes touch seizing of the Russian reserves, but more often than not, they kind of find out that they already back the 50 billion euro loan that G7 provided Ukraine. So kind of tapping the Russian frozen reserves will be trickier than finding just funding new support through new debt or new taxes.
So, Alexander, as we continue to see the Trump administration's political attacks on President Zelensky, where does the Ukrainian public stand in all of this?
We don't have kind of hard survey data. There are good pollsters in Ukraine, but I haven't seen kind of hard, large-scale surveys on that question. But from the anecdotal evidence, it seems that the country is rallying around the flag and kind of consolidating around Zelensky, kind of in response to this outside criticism, which is to be expected.
If the coalition of the willing from Europe doesn't manage to come through when it comes to actual funding and security forces in that region, what are the broader sort of longer-term impact when it comes to potentially, what happens to Ukraine and what the implications are for broader Europe?
I think that the broad implication is clear that the decades-long peace dividend that Europe enjoyed is coming to an end. We expect that fiscal kind of story for Europe, which has already been dominated by the calls to stabilize the debt path, will be kind of harder to reconcile with the need to increase the defense spending to GDP to around 3%. Some countries are already kind of on the forefront of it. So countries like Poland are pretty well prepared to face this challenge, but they are in the minority. Most of the European Union countries will need to rethink their fiscal stance and fiscal space to kind of get to the 3% defense spending.
Bloomberg economist Alexander Isakov there. And on another geopolitical flashpoint, Israel blocking all humanitarian aid to Gaza after the first stage of the ceasefire expired on Sunday. It comes after Hamas rejected a U.S.-led proposal to extend the truce until mid-April. Both Saudi Arabia and Egypt have criticized the Israeli move and say aid should not be used as a weapon for collective punishment.
Well, Sherry, we're watching Beijing this week with China's annual National People's Congress opening later. The economy is showing signs of some recovery momentum, but Trump's tariffs will definitely test Beijing's ability to be able to sustain that push. Bloomberg's China correspondent, Min Lo, is in Beijing. She joins us now. And so we've heard from various economists sort of really trying to manage expectations when it comes to big bang stimulus, right? Given all of the uncertainties when it comes to the impact of tariffs, counter tariffs, reciprocal tariffs. What are we expecting this week?
Yeah, so we have thousands of policymakers, including the provincial heads, the ministry heads, coming to Beijing to attend that parliamentary conclave this week. And policymakers expected to reveal the economic targets for 2025, including the growth target, widely expected to be 5% growth this year. The inflation target expected to be lowered from the existing 3% to 2%, but that's largely seen as a ceiling rather than a floor, given how low inflation is this year, the last year. And the other big target that we're looking out for is the deficit target, which is expected to be increased from 3% to between 3.8 to 4%, which would be a record high, signaling that policymakers would be pumping in trillions of yuan into the economy to address the persistent issues of the property crisis, the consumption slump, and of course, those Trump tariffs. The first round of that 10% kicking in on February 4th, and that second round of the additional 10% supposed to kick in tomorrow, a day before the NPC meeting begins. Will that factor into how the government's going to push out the budget allocation this year? Some analysts think it's not going to change the budget very much, which has been discussed and possibly set in stone weeks and months beforehand, because Beijing also favors a gradual and a very targeted approach. They may try to reserve some room to revise the budget, maybe in the middle of the year. They have done that before in 2023, also during the financial crisis. Of course, there is that DeepSeek themed rally we have seen in markets. That AI theme is going to be a priority as well. We're looking out for how policymakers signal their priority to that sector. We expect the government to continue to double down on these so-called new quality productive forces, pouring in resources to encourage private innovation. And of course, the other big piece markets will be looking out for is the consumption piece, what the government is going to do to boost consumption. That is going to be the main sort of part of the economy that will shield China's growth from the tariffs, not just from the U.S., but other U.S. allies like Canada and Mexico that are under pressure from the U.S. to match those U.S. tariffs.
The issue with the Chinese economy is that despite all of the easing measures and stimulus, the take-up is pretty low because of the lack of confidence by consumers and businesses, right? And yet, China seems to be really in a place to keep those financing costs low in order to try to encourage the private sector to do more?
Yeah, so this is according to the PBOC Governor Pang Gongsheng. He gave an interview where he was quoted by local media saying that the central bank is going to provide or keep financing costs low, and that the government is also going to maintain market to implement this moderately loose monetary policy and loosen market liquidity as well. And this comes, as we know, liquidity has been pretty tight in recent weeks as the PBOC tried to support the yuan. And again, the PBOC governor reiterating that pledge perhaps to reassure markets as investors are figuring out exactly when the PBOC is going to shift its stance from supporting the yuan to supporting the economy and loosening the market conditions there. Market regulators also met with a bunch of companies last week, including the likes of Geely, for example. SenseTime was there as well. And they are pledging to increase and diversify the funding sources for companies from loans, stocks, and bonds as well. And this comes as some companies have been facing trouble with securing funding, especially when funding needs the demand for that has been rising on the back of this AI rally. Many people looking to develop or to push innovation in that space, and the government is now pledging to support small and medium enterprises to help them secure more funding as the private enterprise becomes this important source of private innovation in the Chinese economy.
And Bloomberg's China correspondent Ming Lo there joining us today from Beijing. But coming up on the Asia trade, we'll get the dollar outlook with JP Morgan Asset Management. Fitch Ratings also explains the tariff impact on the auto sector and why they downgraded Nissan to junk. Plus, we hear from the Vanguard Group on why they don't expect a bazooka policy package out of China's NPC later this week. More ahead. This is Bloomberg.
So many different prisms through which we can watch the US story, right, particularly when it comes to what's going on in global geopolitics. But take a look at this chart looking at what's been happening when it comes to the dollar and the underperformance of US equities, particularly compared to, say, for example, European stocks, right, which have really staged quite a recovery. We've also seen that fleeing to the bond market as well. Also taking a look at dollar bulls just slashing their wages to the lowest since before the US election. We're seeing traders there pulling back their bets on the dollar for a sixth week, and they're down by more than $8 billion compared to the prior week. So there is this kind of sense of, arguably the idea of crumbling US exceptionalism is why we're seeing dollar bears kind of seizing upon this trade and the momentum. But certainly, for whatever reason, that greenback appeal is.
इस क्रूड ऑयल में ध्यान रखना पर लिखा हुआ है, ठीक है, थोड़ा सा लो क्वांटिटी में रखना है, इसमें रिस्क रिवॉर्ड ठीक नहीं बन रहा है. बाकी नेचुरल गैस में भी रेजिस्टेंस एरिया के अराउंड सेल कर सकते हैं, जितना ऊपर सेल करोगे उतना छोटा है सेल, जितना नीचे से करोगे ऐसा थोड़ा बड़ा होगा, लेकिन रेजिस्टेंस जो नहीं है. बाकी ऊपर टारगेट यही हैं दोनों क्रूड ऑयल में. बाकी मोमेंटम क्रूड में तो आ गया, नेचुरल गैस में मोमेंटम ही नहीं आ रहा है। मॉर्निंग से थोड़ा बहुत गैप डाउन के बाद रिकवरी आई है, ऊपर देखते हैं रेजिस्टेंस होल्ड करता है, ओपन इक्वल टू लो ना बनाए बस, अदरवाइज तो बढ़िया है ये। इंडियन मार्केट भी क्लोज हो गया है, बाकी डेटा मैंने लिख ही रखा है यहाँ पर, 815 और 830 का डेटा है। लेट्स सी एक ट्रेड और बन जाएगा क्रूड और नेचुरल गैस में बिफोर 6:30 तो बेटर है, दिन भर का काम निकल जाएगा। सब पे मत पूछो क्वेश्चन, लाइव में पूछ लो। इफ एनीबॉडी हैव एनी क्वेश्चन प्लीज आस्क इन द लाइव सेशन। Look at the candle of crude oil, sorry, natural gas, open equal to low है. Let's see इसका 50% कितना आ रहा है actually. Approximately 1:4 है, 1:4.2. लेकिन नेचुरल गैस में यहाँ पर सेलिंग का ट्रेड है एक्सपेक्टेड एंड टारगेट यही है और कोई टारगेट इसमें दिख नहीं रहा नीचे. थ्री 332 एंड देन 325. ये दो टारगेट एक्सपेक्टेड रहेंगे 15 मिनट टाइम फ्रेम पर. ये 2.5 पॉइंट का समथिंग एसएल बन रहा है. ये दो टारगेट 332 एंड देन 325 इन 15 मिनट टाइम फ्रेम. एसएल आपका ही रहेगा 339. क्रूड ऑयल भी ऊपर आता है तो इसमें भी एक सेलिंग का वापस प्लान कर देंगे. बाकी इसमें थोड़ा क्वांटिटी कम ही रखना है, पहले लिख चुका हूँ यहाँ पर लो क्वांटिटी. पॉइंट ऑफ इंटरेस्ट है, टेस्टेड है लेवल ऑलरेडी वन टाइम, सेकंड टाइम आया है तो ज़्यादा रिस्क नहीं ले सकते ना. oil price decline amid uncertainty about Russia Ukraine war. यूक्रेन बॉन्ड्स भी देखोगे गिर गए थे मॉर्निंग पे. यूक्रेनियन बॉन्ड्स देखोगे ना, दे आर आल्सो गोइंग वेरी डाउन. परसों बहुत ऊपर गए थे. Israeli fires kills two Palestinians in Gaza amid impasse over ceasefire deal. ये एसएल रहेगा, इससे बड़ा एसएल मत लेना, दैट इज इनफ. ये आपका पहला टारगेट, अगर इसके नीचे सस्टेन किया तो फिर 325 सेकंड टारगेट. पीएम भी हो गया है, लेट्स सी 6:30 तक मोमेंटम आता है या फिर नहीं। गाइस क्रूड ऑयल को भी देखोगे स्टिल स्टक हो गया है. नेचुरल गैस का ध्यान रखना, ये ब्लू कलर की लाइन तक पहला टारगेट इसके नीचे सस्टेन करेगा तो फिर डेलो का टारगेट रहेगा डेलो से नीचे. करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम. देखते हैं 5:30 6:30 तक कुछ मोमेंटम और आता है तो. एक नेचुरल सॉरी क्रूड ऑयल में भी एक ट्रेड एक्सपेक्टेड लग रहा है यहाँ पर, एक सेलिंग के लिए अगर जाए. ठीक है, दो पॉसिबिलिटी, यहाँ थोड़ा सा ऊपर आ जाए प्राइस और 6130 140 के अराउंड. 6111 के ऊपर अगर सस्टेन करता है तो फिर वापस 6133 की ओर चला जाएगा. नहीं तो अगर यहाँ से रिजेक्शन मिला तो फिर नीचे वाला सपोर्ट इजीली ब्रेक हो जाना चाहिए. नितिन कुमार जी नेचुरल गैस लगाया हुआ है सर, नेचुरल गैस आपके सामने, क्या बताना है, क्वेश्चन पूछ सकते हो। रेजिस्टेंस से सेलिंग कर सकते हो यहाँ पर। 2.6 पॉइंट का एसएल है। ये नीचे ब्लू कलर की लाइन पहला टारगेट, इसके नीचे सस्टेन करता है तो दूसरा टारगेट। क्रूड में भी देख रहे हैं, एक और ट्रेड इसमें बन जाएगा क्रूड में, एक और वेट करो। क्रूड का देखने दो एक बार। एसएल कितने पॉइंट का बन रहा है? तो क्रूड में भी यहाँ पर जो ट्रेड बनेगा ना उसमें भी एक तो ऊपर मेजर रेजिस्टेंस है 6130 133 के आसपास, वहाँ पर एक ट्रेड बन सकता है। वहाँ पर छोटा एसएल रहेगा, वही डे हाई के अराउंड कह रहा हूँ मैं, इस एरिया पे एसएल छोटा हो जाएगा। यहाँ पर सेल करेंगे, एसएल थोड़ा सा बड़ा लेना पड़ जाएगा। टारगेट तो बड़े ही रहेंगे, ऐसा नहीं है टारगेट छोटे रहेंगे, टारगेट दोनों जगह से करो बड़े ही रहेंगे, बट यहाँ पर थोड़ा सा करंट एरिया पे एसएल बड़ा हो जाएगा। लाइक अप्रॉक्सीमेटली अगर मैं देखूँ फ्यूचर चार्ट में तो सेफ प्ले करना होगा, क्योंकि एसएल तो वही रखना पड़ेगा। 38 पॉइंट का एसएल हो जाएगा, विच इज़ टू हाई। अच्छा मिनी को देखे तो एक छोटे एसएल से अगर ट्राई करें तो कितना बन रहा है? कभी नहीं है। ठीक है, ऊपर से करोगे तो छोटा एसएल ऊपर ही मिलेगा, यहाँ पे एसएल बड़ा हो जा रहा है क्रूड में। मतलब फ्यूचर में 38 पॉइंट इज़ वेरी हाई। इवन रिस्क रिवॉर्ड भी देखोगे तो लगभग फिर वही आपका 1:2 ही बन पाएगा, मैक्स टू मैक्स। तो ऊपर ही आने दो, थोड़ा अगर रिजेक्शन लेगा तो, नहीं तो यहीं से करेंगे, अदरवाइज ऊपर ही आने दो। थोड़ा सा एक रिस्क ले सकते हो क्रूड ऑयल में, तो ये एक ट्रेड प्लान कर सकते हो, नहीं तो इसमें एग्जैक्ट रेजिस्टेंस पे आएगा नहीं, तब तक कुछ कर नहीं सकते। एसएल काफ़ी बड़ा हो जाएगा, सो बेटर है कि लेवल पे ही आ जाए। फ्रीक्वेंट सपोर्ट रेजिस्टेंस बन गए इसमें भी, क्रूड में भी। हाँ। यहाँ पर एक छोटे से एसएल के साथ क्रूड में सेलिंग का ट्रेड ट्राई करते हैं। रिस्की है बट छोटा एसएल के साथ ट्राई कर सकते हैं। ठीक है, मेजर लेवल तो ऊपर ही है, या तो ऊपर आने का वेट करो, नहीं तो ये 13 पॉइंट के एसएल के साथ ट्राई करो। टारगेट ठीक है, 1:4 रख लेते हैं, और क्या कर सकते हैं इसमें। रिस्की है बट यही ट्रेड बन सकता है फिलहाल के लिए, अगर लेना चाह रहे हो तो क्रूड में। एग्जैक्ट लेवल पे नहीं है बट दैट इज ओनली लेवल आई कैन सी राइट नाउ। बाकी रुकना चाहो तो थोड़ा सा रुक सकते हो। इसमें ज़्यादा एसएल मत लेना, सॉरी ज़्यादा क्वांटिटी मत उठाना इसमें भी। बाकी देखते हैं अभी 6:30 के बाद और मूव करता है प्राइस तो। थोड़ा सा रिस्की साइड पे रहेगा एक रूट का। ठीक है, 13 पॉइंट का एसएल है फ्यूचर में। हिंदी मनी में पुट में करोगे ऑप्शन में तो लगभग 7 to 8 पॉइंट का बनेगा, 6 to 7 पॉइंट डिपेंडिंग ऑन द स्ट्राइक प्राइस कौन सी है। बाकी टारगेट बड़ा रखा हुआ है, अगर एसएल जाए तो छोटा जाएगा, टारगेट मिलेगा तो बड़ा मिलेगा। लॉजिकली तो नहीं लेना चाहिए ट्रेड। ठीक है, मिनी ट्राई करो, ऑप्शन वगैरह मत ट्राई करना इसमें। या फिर चाहो तो इसको ठीक है मिनी ट्राई करना, ऑप्शन वगैरह या फिर मेन फ्यूचर मत ट्राई करना। बीच में लेना तो नीचे ही था वैसे, बट अगर ट्राई करा जा सकता है तो प्रॉफिट में थोड़े बहुत, थोड़े से रिस्क के साथ। इतना रिस्क तो बनेगा ही। ठीक है, ऑप्शन मत ट्राई करना इसमें, और ना ही फ्यूचर करना है तो मिनी वगैरह ट्राई कर सकते हो, नेचुरल क्रूड ऑयल मिनी। 13 पॉइंट समथिंग, हाँ 13 ही मिल रहा है ना, 13 ही है। 13 पॉइंट का ऐसा है ये, ले सकते हो तो आपकी चॉइस, मैं उसमें कुछ कमेंट नहीं करूँगा। बाकी रिस्क रिवॉर्ड बड़ा ही रखना, और रिस्क रिवॉर्ड जितना रखा हुआ है सो एटलीस्ट कम क्वांटिटी में प्रॉफिट हो तो बड़ा हो। ऐसा ना हो कि कम क्वांटिटी में लॉस छोटा हो रहा है, सॉरी प्रॉफिट छोटा हो रहा है। ठीक है, क्लार्क है क्रूड में नीचे 6052, डे लो के थोड़ा सा नीचे। बाकी पॉइंट ऑफ इंटरेस्ट अभी भी वही बना हुआ है, फर्स्ट एंड नीचे दूसरा। ये पॉइंट ऑफ इंटरेस्ट अभी भी इंटैक्ट है। पीएम हो गया, 1.5 घंटा और है आपका न्यूयॉर्क सेशन की ओपनिंग पे। 1.5 hour is left. Natural gas hits 2 months low on hope for peace in Ukraine. Mild weather, Commerce Bank says. गाइस 5:15 हो चुका है, मार्केट स्टिल देयर, नो मोमेंटम। क्रूड ऑयल का ध्यान रखना, ये ट्रेड में थोड़ा सा ऑप्शन पर ट्राई करना, रिस्की टाइप है, एग्जैक्ट लेवल पे नहीं है इसलिए मिनी ओनली लिखा हुआ है, उस पर रिस्क कम रहेगा थोड़ा सा। गैस में भी देखते हैं, नीचे निकल के आता है 332 के नीचे, अगर तो फिर और नीचे आएगा। 332 पर रुका तो फिर रेंज बन जाएगी वापस इसमें भी। कोई न्यूज़ वगैरह आती है तो लेट्स सी, फिलहाल के लिए ऐसी कोई न्यूज़ तो नहीं है। एक बार लेटेस्ट कुछ डेटा या फिर न्यूज़ है तो उसको सुन लेते। मेक्सिको, कनाडा और चाइना पर टैरिफ लग गए हैं शायद आज से।
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the Oval Office feud that drew global attention and concern from American allies. Ukrainian President Volodymyr Zelensky left the White House without a minerals deal on Friday after that public clash with President Trump and Vice President J.D. Vance. Zelensky expressed doubt about Trump's effort to negotiate with Russia. Trump accused Zelensky of disrespecting the U.S. Director of National Intelligence Tulsi Gabbard told Fox News Sunday, heard on Bloomberg Radio, mending ties with Zelensky won't be easy.
There's going to have to be a rebuilding of any kind of interest in good faith negotiations, I think, before President Trump is going to be willing to re-engage on this.
Tulsi Gabbard's comments were echoed by Secretary of State Marco Rubio. He says Zelensky needs to come to the realization that the U.S. is trying to help. Responding to a question from the BBC in London, President Zelensky said he is willing to meet President Trump again if invited.
Perhaps there is a need in time to analyze certain things, but I would just want Ukrainian position to be heard.
Speaking through an interpreter, President Zelensky added Ukraine is ready to sign the natural resources deal that was put on hold last week.
Well, Nathan, over the weekend, UK Prime Minister Keir Starmer and other European leaders used a security summit in London to demonstrate broad support for Ukraine. But behind the scenes, they were pushing to get Volodymyr Zelensky back to the table with President Trump. Speaking after the summit, Starmer said the UK and France are now working on a plan to secure Ukraine after any U.S. brokered ceasefire.
It's time to act, time to step up and lead, and to unite around a new plan for a just and enduring peace.
Keir Starmer's comments came as French President Emmanuel Macron said the two leaders are working on a plan to secure a one-month truce in Ukraine. In an interview with the Figaro newspaper, Macron said the potential truce would include ground and maritime operations as well as energy infrastructure.
Elsewhere in geopolitics, Karen, President Trump is expected to place 25% tariffs on most imports from Canada and Mexico and double an existing 10% levy on China tomorrow. Commerce Secretary Howard Lutnick tells Fox News the president could yet change his mind on Mexico and Canada.
He's sort of thinking about right now how exactly he wants to play it with Mexico and Canada, and that is a fluid situation. There are going to be tariffs on Tuesday on Mexico and Canada. Exactly what they are, we're going to leave that for the president and his team to negotiate.
Commerce Secretary Howard Lutnick says Canada and Mexico have done a lot to address issues like immigration and drug trafficking.
Meanwhile, in D.C., Nathan, this promises to be a busy week in the U.S. Capitol, especially tomorrow. Bloomberg's Amy Morris reports from Washington.
The Supreme Court is expected to hear arguments over gun violence liability. The Mexican government is suing for billions of dollars in damages and changes to American firearms regulation. But Tuesday night, President Trump will address a joint session of Congress. Technically, it won't be a State of the Union because Trump wasn't president last year. Listen out for results on the government efficiency efforts in effect for the past several weeks. And a potential government shutdown is now just 2 weeks away. In Washington, Amy Morris, Bloomberg Radio.
Amy, thank you. And you can hear President Trump's remarks to Congress with a special edition of Bloomberg Balance of Power starting tomorrow at 8 p.m. Wall Street time here on Bloomberg Radio and on the Bloomberg podcast page on YouTube.
Well, Karen, crypto investors have been on quite the ride after a social media post from President Trump over the weekend. Let's get more from Bloomberg's John Tucker. Good morning, John.
And morning, Nathan. Trump once again talked up his plan for a strategic crypto reserve. On Truth Social, the president saying his January executive order on crypto directed the presidential working group to move forward on a crypto strategic reserve that includes more tokens like Sol, XRP, and ADA. Trump also said Bitcoin and Ether would be included in the reserve, helping those coins recover some of last month's steep declines. Now, a lot of the details of Trump's plan are unknown, including how much the government's going to actually buy and how the purchases would be funded. The Bloomberg Galaxy Crypto Index sank 28% in February, its worst month since the crypto winter of 2022. And checking Bitcoin right now, that is down 2%, just above 92,000 per token. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. We turn to politics. In the Empire State, Andrew Cuomo has made it official. He's running for mayor of New York City. We get more with Bloomberg's Kimberly Adams.
The former three-term governor of New York, who resigned in 2021 amid multiple allegations of sexual harassment, joined an already crowded field of challengers vying to unseat incumbent Mayor Eric Adams ahead of the June 24th Democratic primary.
I know what needs to be done, and I know how to do it, and I will give it my all to get the job done. And it will get done.
Cuomo's decision to run, rumored for more than a year, upends the race to lead the biggest U.S. city. Several polls have shown him leading the field, which includes Adams, City Comptroller Brad Lander, former Comptroller Scott Stringer, and former hedge fund manager Whitney Tilson. In New York, Kimberly Adams, Bloomberg Radio.
Okay, Kim, thank you. Meanwhile, we have some developments in space this morning. Firefly Aerospace successfully landed its first robotic spacecraft on the moon. This is the second time a commercial lander's pulled off the feat as more companies attempt to reach the lunar surface ahead of future human landings. The spacecraft launched January 15th. It landed, the Blue Ghost, it's called, early yesterday morning. The Blue Ghost is carrying 10 tools and experiments built by NASA, including a drill that will bury itself into the lunar soil to test the moon's temperature.
And finally, Nathan and Nora has dominated the 97th Academy Awards, winning 5 honors, including Best Picture. The film star Mikey Madison took home Best Leading Actress and thanked Sean Baker, who won Best Director.
This is a dream come true. I'm probably going to wake up tomorrow. Thank you so much, Sean. I adore you.
And alongside Madison, Adrian Brody picked up his second career Oscar for Best Leading Actor in The Brutalist. And for those streaming the ceremony, Disney's Hulu experienced technical difficulties preventing tens of thousands of paying customers from accessing the service. The issue was resolved after about 2 hours. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. No NFL trade can become official until next week, but the 49ers have a deal to send talented wide receiver Deebo Samuel to Washington for a fifth-round draft pick. Baseball says Commissioner Rob Manfred is considering reinstating Pete Rose to MLB's good graces. Rose passed away 5 months ago. He agreed to a lifetime ban back in 1989. Joe Highsmith won the Cognizant Golf in Palm Beach after a second straight 64. It's his first PGA Tour victory. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
ओके क्रूड ऑयल में देखो अगर ऐसा जाता है तो निकल जाना, ठीक है, इस मिनी वाले ट्रेड से होल्ड मत करके बैठना, फिर ऊपर अपर लेवल पे देखेंगे वापस। कि 1 घंटा और है न्यूयॉर्क सेशन की ओपनिंग। आई होप उसके बाद थोड़ा सा मोमेंटम मुझे लग रहा है प्रॉपरली हो जाना चाहिए। और
Upskilling is becoming more important, so the world has to be prepared for it. So there has to be a
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
0.75% on the week, down about 5%. And that's as we see overall the anxieties build about what the political consequences are on AI, on tariffs from China, and more broadly, whether or not we can see those exports going into the broader world and into allies as well. We focus in on Bitcoin off by 0.4%. The 83,000 number is where we've got to be focusing on. Really, we've come well off of those highs. We're worried about the macro. We're worried about tariffs. We're also worried about certain hacks and indeed what's happening with meme coins over in Argentina. We'll dig into that in a moment. Move on to what's happening in one of the biggest points drags throughout the week. It has been Nvidia. We are down 8.6%. That is significant when you've got a more than $3 trillion market capitalization on a stock. We've fallen as we see Jensen Huang unable to reinvigorate the idea that this is a company that is the only one you need to really bear fruit for the generative AI transition, Jackie. And a lot of that has political consequences.
Let's get to those political anxieties now, as the UK is seeking a narrow trade agreement with the US focused on technology and AI rather than a full free trade deal. Trump's willingness to open a trade dialogue marks a breakthrough for the UK, which has pursued deeper ties with the US since voting to exit the European Union in 2016. Bloomberg's Mike Shepard joins us now. Mike, this isn't the deal that people were expecting, but it has big implications for AI. What are they?
Well, it really does, Jackie, because, Donald Trump has made AI and U.S. dominance in this field a big priority. And we saw this right from the start as he took office. He signed executive orders essentially insisting that the U.S. find a way and craft policies that would spearhead innovation and that would clear clunky regulations out of the way. And he also had this big meeting in the Oval Office where Sam Altman and Masayoshi Son and Larry Ellison all came together to unveil the Stargate project of investments in data centers that would help propel this bid for U.S. dominance in the area. Now, the UK matters because what they are offering is, in a way, a European toehold for the U.S. If the U.S. companies like Microsoft and Amazon and other hyperscalers want data centers in Europe but don't want those pesky EU regulations, the U.K. could be a good alternative. And that was what Starmer was, in essence, pitching. Now, the to be sure is that, look, these discussions are in the early stages. There's a lot that could go wrong. And we could see some friction emerge, including over the question of online content moderation. That was a little bit of a clash yesterday between J.D. Vance and Starmer yesterday. But we'll want to watch this space for sure.
Mike, the broader context is as we have CEO after CEO start to speak out about potential restrictions on exports of AI and chips. In particular, we think of the AI diffusion rule. I spoke with Andy Jassy, the CEO of Amazon, just yesterday. We were going to get into all of that. But I'm interested in your take more broadly on how this UK dialogue fits in with what these corporate giants are currently telling the Trump administration to do.
Well, in a way, the AI diffusion rule would put the UK in the catbird seat when it comes to getting access to that kind of investment abroad from the big U.S. companies and from other companies. They would say, hey, look, we would be in that first tier of access under this AI diffusion rule. And to catch viewers up, the AI diffusion rule sets up 3 categories of access to advanced AI chips. The last category is U.S. adversaries like Russia and China. In the middle are most countries, including a number of U.S. allies like Saudi Arabia, Switzerland, the UAE, where we still do a fair amount of business. The first tier is a rarefied group of very close allies like France and like the UK. Now, the difference is that the UK would allow U.S. companies to put plants and facilities there, but without as many regulations. And when it comes to being able to buy chips in the UK, it would be a lot easier because they would have that velvet rope-like access to make those purchases without too many restrictions from the U.S. government.
Mike Shepard breaking down the political context of all of this. Let's get into the investor context now. Lei Xu is with us, Chief Investment Officer at Allianz Bernstein. Of course, we're talking the impact of tariffs, we're talking about tech sector and AI, the growth narrative that currently is questioned. Have you been questioning it more this week?
We always question, obviously, especially since we have had 2 years of, straight up. So, but I think, a lot has happened, and there's certainly a fair amount of volatility in the market because of a lot of the headline risks that you just mentioned. But that said, we actually remain quite constructive still in terms of the backdrop of what's needed to build out for the future of AI. So yes, we did question, and we always do, but based on fundamental research, we're actually quite constructive on the outlook still.
Lei, let's talk about one of the things that was really hanging over a lot of the tech giants that have reported in recent weeks, and NVIDIA as well. That was DeepSeek. It caused a lot of concerns about whether we would need any of these chips, as many of them to begin with. How do you feel about that DeepSeek concern after seeing NVIDIA's report this week?
So when there are two parts to it. When we think about DeepSeek, what we believe is that DeepSeek actually, rather than just saying, oh, this is a model that requires a few $1 million, this is actually a step function and inflection point in the adoption of inferencing, which inherently is actually far more compute intensive than all previous models. Because what DeepSeek is a reasoning model. In simple terms, you ask a question, it will take longer for an AI to answer, but it will give you a much better answer after they thought about it. So what we think is that with DeepSeek and with the OpenAI's O1 Pro that's out there, we are stepping into test time scaling, which is reasoning model, and both of those are inherently far more compute intensive, and the more the adoption of inferencing, the more the need for compute. So that's one. When we think about DeepSeek, rather than just reading the headline, we actually got more constructive because of inferencing. And then when we look at NVIDIA's results, we're not here to comment on individual stock, obviously, but what we are really seeing is that we're still at the very early stage of adopting rack scale compute, which is a huge system level compute. It's very hard to do. It will take time to do. And they're still in the ramping phase, but we are on track. So despite a lot of the headline noise, we remain constructive based on these two things.
One sort of fly in the ointment that I think Jensen Huang wasn't really able to satisfy the investor base on was ultimately China exposure, but more broadly, political implications to getting his technology out, even to allies. This is something Microsoft then went out and put out a note, Brad Smith writing to the Trump administration saying, please reverse the AI diffusion role. I got to speak with Andy Jassy from Amazon yesterday about it. Just have a listen to what he said.
I don't know how this administration feels about it, but I would say that we share the concern that it has limitations on certain countries who are natural allies of the U.S., who just to be able to do their business and those companies to be able to get done what they want to get done on top of these technology infrastructure platforms like AWS, they're going to need more chips. And so I think if we don't do it, we're going to basically give up that business.
AWS doesn't have a big knock from his perspective in terms of worrying about revenue, but more broadly, are you optimistic that we're going to get a more business-friendly federal government that's going to allow for easier exports, or does not that matter in your thesis for future growth?
Certainly, that's a consideration. And in fact, I think a lot of these political headlines is precisely the reason that you're seeing these gyrations in the marketplace. The volatility is high. But when we just look at the fundamental level, and if you look at these giants, the tech giants, and the amount of spending that they are actually doing in the U.S., and I would put China almost separately as their own ecosystem, that what they're trying to do, I do think despite the volatility we see in the market, there's actually ample demand, even when we just look at the U.S., what we need to do, and how constrained we still are on the supply side, in fact. So we actually think, yeah, headline aside, we still feel fine.
Let's talk about where that demand comes from as well in some of these AI applications. A big one is agents, and we heard from Salesforce earlier this week that it wasn't seeing the kind of demand it really wanted to see. I know you can't talk about specific stocks, but AI agents overall have been a big part of the narrative in terms of what's going to drive the AI rally forward. Are you concerned at all about that adoption really sticking over the next coming months?
I think when we think about a huge technology change and then innovation such as this, when it's transformational, perhaps it would take a little bit time for it to actually play out. But that said, things are constantly evolving. DeepSeek that just came out of nowhere, right? Took us by surprise. And that marked an inflection point, in our opinion, in inferencing. And aside from AI agents, I certainly think we're seeing adoption broadly. This is, in fact, one of the fastest adoption that we're seeing at the enterprise level. It will have huge disruptive impact at the enterprise IT infrastructure. And on top of that, what we are also looking at is the new form factor that will be coming out. A lot of companies are exploring automation and humanoid and the Internet of Things, and where AI will play a huge part of it. So if we actually, in fact, DeepSeek, in our opinion, marked an inflection in adoption of inferencing, and we're going to see a lot more adoption going forward. This will be an important year from a lot of companies for us to see what's going to happen, but we are optimistic that we will see more than what's currently publicly known in the market.
I mean, look at the response of some of the Chinese giants to DeepSeek, and you have Alibaba committing so much money, Tencent coming out with its latest model over in China. But I want to bring it back here to the US just to finish this off, because we started this week questioning capacity when Microsoft had that TD.
देखो अभी 6:30 होने वाला है। रामेश सैनी जी हेलो। कुछ खास मोमेंटम नहीं आता 6:30, फिर 6:30 कैंडल का ही वेट करेंगे। काफ़ी देर से मार्केट अटक जैसा गया है, ना क्रूड ऑयल नीचे आ रहा है उस लेवल से, ना नेचुरल गैस। Okay, 5:45 हो गया guys. 1.5 sorry 45 minute 45 minute left. देखते हैं 6:30 की कैंडल पे अब क्या मूव आता है. डेटा भी है, ध्यान रखना गोल्ड और सिल्वर के लिए स्पेसिफिकली. करते रहो guys, don't forget to like the stream. से आधा घंटा और बचा हुआ है मार्केट हो गया साइडवेज 6:30 की कैंडल पे देखते हैं अब क्या मूव आता है आई होप 6:30 के बाद आ जाए मूव फिर सीधा यूएस मार्केट की ओपनिंग ही है बिकॉज गाइस आधा घंटा और है. क्रूड ऑयल कहीं जा नहीं रहा है मिनी वाली ट्रेड में भी. नेचुरल गैस भी लग रहा है ऐसे उड़ा के ही जाएगा फिर नीचे. इसका भी रेजिस्टेंस जोन ही है ऊपर तक अप्रॉक्सीमेटली 340 तक. देखते हैं थोड़ा होल्ड करता है या फिर वाला एसएल निकालता है और फिर जाता है. ओपन इक्वल टू लो नहीं बननी चाहिए कैंडल बस. बाकी 6:30 से पहले अगर कॉस्ट पे रखना चाह रहे हो एसएल या फिर सिस्टम पे रखना चाह रहे हो तो रख लेना. ठीक है 6:30 की कैंडल का कुछ कह नहीं सकते. ओपन इक्वल टू लो ना बन जाए दोनों जगह. दैट इज नॉट गुड. ये 4 PM की कैंडल ने लग रहा है क्रूड ऑयल का भी गेम बिगाड़ दिया. Depend upon the 6:30 candle. ठीक है 6:30 कैंडल से पहले अपना एसएल कॉस्ट पर रख लेना या फिर सिस्टम पर डाल देना. मिनट और हैं. लाइक भी करते रहो गाइस जब तक. डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल. बाकी नेचुरल गैस में ऐसा हो सकता है लाइक ये एक विक बना के ऊपर को फिर इस तरह से नीचे आए या फिर थोड़ा कंसोलिडेशन करके सेलर के एसएल उड़ा दे और फिर नीचे आए. पॉसिबिलिटी काफ़ी ज़्यादा हाई है क्योंकि ऊपर 340 तक पूरा ही रेजिस्टेंस है. हमने एग्जैक्टली 340 तक का ही ले रखा है लेवल क्योंकि फिर एसएल नहीं तो बड़ा हो जाएगा और ज़्यादा और ऊपर लेके जाएंगे एसएल को तो 341 तो 4 पॉइंट का एसएल हो जाएगा 41 तक. Tesla is hiring in India. Know what degree and skill you need to land a job in Elon Musk Tesla.
high. Bloomberg's David Welch joins us now. David, Tesla's run-up has really been driven just as much from investor exuberance as much as fundamentals. But why don't you walk us through what we know about those fundamentals right now?
Yeah, so what drove it up over, I think, the past year was a lot of hype, but also a lot of interest in their AI and autonomous vehicle plans that Elon Musk has he's made a lot of hay out of that, and they did have a demo of the vehicle, and I think that generated excitement. I think investors, by and large, are looking at their EV business as maybe it's capped out for a bit. The only new vehicle coming would be a Model 2, which could do some volume because it's cheap, but it's going to be a lower margin vehicle. And in a lot of markets, particularly Europe, as we saw the other day, they're under a lot of pressure. There are some consumers who don't like Elon Musk's political position now that he's de facto part of the Trump administration. And I think that's hurting their sales. There's also a lot more competition with other EV companies. I think General Motors, I think Hyundai and Kia are gaining share in the U.S., and I think you're seeing some of that in other markets as well, where European automakers have more EVs, so they've got more competition there. And the other part of this that we really haven't talked about is EV credits. Tesla's made a lot of money on those over the years. If the Trump administration does water down the greenhouse gas and fuel economy rules that make automakers buy EV credits from Tesla, and Donald Trump has talked about that. There is a proposal from Senator Moreno on that would lower those standards. That's less income in the auto business from selling credits that Tesla has. A lot of pressure here, and we don't have really a catalyst in the way of autonomous vehicles that's obvious yet that'll push it back up.
I mean, the share's trading a little bit higher today as maybe the macro picture turns a little bit higher for the broader market, David. But indeed, it has been off by more than 14% over the course of this week, the worst week since October 2023. But as we note with this company, as we do so often, it's not often fundamentally driven. A lot of this, even with earnings that come out that disappoint, the exuberance that comes from Elon Musk gets the retail investors back in and makes institutional investors hold. Is there anything that makes you signal that this is something long-term shifting, that February numbers will be as bad in Europe and that ultimately the shares will continue to reflect on a fundamental basis?
Yeah, look, I think the increased competition and a bit of declining growth in the EV market, particularly in the U.S., but other places as well. There's still growth, it's just not as fast, and you have more competition. So I think as long as investors are focused more on Tesla's EV sales and the ability to generate cash and earnings from that, you're going to have pressure on the stock. Once we actually see some more progress with his robo-taxis, which is really what drove the last rally, and it's apparent that those vehicles are going to be ready, they're going to be working, they're going to be generating revenue. Tesla always has delays with new technologies. That, I think, would rally the stock. But right now, I think it's trading on what's happening with their electric vehicle business and not on the hype and the enthusiasm over robotaxis.
To be fair, analysts still pretty enthusiastic. 32 buys, 13 sells. David Welch, thanks so much. Coming up, Meta and Apollo in early talks for a $35 billion financing package for data centers right here in the U.S. Details next. This is Bloomberg Technology. Apollo Global Management is in talks to lead a roughly $35 billion financing package for Meta to help develop data centers in the United States, all according to sources. Now, the funding conversations are at an early stage, and there's no guarantee a deal will be complete. Bloomberg Intelligence senior analyst Mandeep Singh joins us for more, and it's more and more interesting. In fact, just before you come to you, Mandeep, we've got to go into the White House, where President Trump is indeed welcoming Ukrainian leader.
Guys, एक मिनी वाला ट्रेड निकालना है तो निकाल देना, उसके ऊपर एक एफयूजी वहां से देखते हैं अब 630 पे। ये मिनी वाले का ऐसा उड़ा दिया इसने। ठीक है, ये मिनी वगैरह सेल किया हुआ तो निकल जाना उससे। SL is hit in crude oil, ऊपर भी रेजिस्टेंस है, वहां से फिर सेल कर सकते हैं। नेक्स्ट कैंडल का ध्यान रखना, 630 वाली कैंडल ओपन इक्वल टू लो ना हो, क्योंकि इसके बाद सिर्फ वही कैंडल बनेगी। 15 मिनट की एक कैंडल और है इसके बाद, देन 630 की कैंडल है सीधा। यहाँ से एक प्लान करेंगे अब। नेक्स्ट कैंडल अगर ओपन इक्वल टू लो नहीं बनता है, हाँ ठीक है। ठीक है, बाकी ये नेचुरल गैस अभी भी रेजिस्टेंस पर ही मानना, 341 के आसपास तक रेजिस्टेंस ही माना जाएगा। फिफ्टीन मिनट इज लेफ्ट ओनली। बाकी ये नेचुरल गैस का रेजिस्टेंस भी स्ट्रॉन्ग ही है यहाँ पर, बस ओपन इक्वल टू लो में ना निकले। ओपन इक्वल टू लो में निकल जाता है तो फिर अलग बात है। अदरवाइज अगर अपना ओपन इक्वल टू लो ब्रेक करके नीचे आ जाए या फिर डायरेक्टली सेलिंग आए तो बढ़िया है, क्योंकि अगर ये लेवल होल्ड नहीं करता है 341 के ऊपर कहीं सस्टेन हो गया तो फिर सीधा नेक्स्ट मेजर रेजिस्टेंस 350 ही दिखा रहा है इसमें। थोड़ा बहुत बीच में हो सकता है 344 पे रुके, अदरवाइज दैट इज द मेजर लेवल। बाकी नीचे कोई सपोर्ट नहीं है, नीचे नीचे सपोर्ट आपका ही लगा रखा है 327.26, दैट इज अ मेजर सपोर्ट राइट नाउ। बीच में कोई नया बनेगा तो देखेंगे। क्रूड ऑयल में भी फिर ऊपर मेजर रेजिस्टेंस आपका 6195 6200 के अराउंड. $20 left only. $10 left. 10 मिनट ही रह गए. न्यूयॉर्क सेशन ओपनिंग.
getting back on track, or was this actually a bigger event that we need to talk about?
Well, Joe, I think that I agree with a lot of the points the congressman made, because it's in our national interest for the president of the United States and the president of Ukraine to be on the same page. It is imperative that Volodymyr Zelensky and President Trump meet again as soon as possible to kind of put everything back on track. There is a possibility that they could sign this agreement on the minerals, and that, I think, would provide a face-saving way for them to kind of put that horrible scene in the Oval Office behind all of us.
Well, if we get down to the very basic thing that they were attempting to achieve today, Evelyn, which was this minerals deal, President Trump argues that that is enough of a security guarantee, that a closer economic relationship between the U.S. and Ukraine would be adequate deterrent against any future invasion President Putin may desire to pursue. Zelensky says, no, I need greater security guarantee than that. Which one of them do you tend to agree with?
Well, I completely agree with President Zelensky, because it's not sufficient to say the United States has a stake, so Russia should not invade. Russia doesn't care. Russia will invade if Russia thinks that U.S. troops are not going to protect those minerals. So there is an open question there that, frankly, I would argue should be explored further. Probably President Zelensky wanted to explore that open question and get the answer ASAP. He pushed in that meeting to try to nudge the president or move the president to the answer, and didn't get it. And, perhaps that was a tactical, misstep, that he might have been able to just sign the agreement and see what happens. But there is a real danger for him that he signs the agreement and President Trump goes back to the Russians, because our president's speaking with the Russians without Ukraine or the Europeans there. So there is a danger that our president could say, okay, I'm going to agree to X, Y, and Z on behalf of Ukraine, and just don't invade because we have this agreement. So I think that there's a lack of trust, and that's the fundamental problem.
Well, Evelyn, I'm not sure what the next step is here. For Volodymyr Zelensky, he's got plans, of course. Would it behoove him to just stay in the country until Donald Trump comes back to Washington?
I think he should try, Joe. I mean, my heart is breaking that he has to, do this, because, frankly, we were hosting him. He was our guest, and he was horrendously mistreated, in public by the two most powerful men in the world. So, and meanwhile, Zelensky is a hero. His people are heroic. They're holding the line against Russia and China, Iran and North Korea, holding the line for our international order and for our European allies in the first instance.
Do you not think he crossed the line, Evelyn? We've been hearing from people since this took place, and we were live on the air when it happened, that he disrespected the president, disrespected the Oval Office. What do you think?
I don't think so, no. I mean, I think he was pushing back. Unfortunately, he probably pushed back with less charm than, the French and the British leaders did. But from what I saw, he was trying to hold his own and kind of make sure that the truth had an airing. He probably could have just sat back. I'm not sure whether that would have served him well. Remember, he's also a leader of a sovereign nation. So, but clearly something needed to happen to de-escalate the situation, and, took a very long time before the situation ran out of its own steam.
Well, as we consider things that are running out of steam, it was suggested, Evelyn, by the president today that without the U.S., Ukraine is not going to be able to keep going. But obviously, we have seen a laundry list of European leaders and other allies coming out and reiterating their support for Ukraine and how it will be ongoing in the aftermath of this today. If the U.S. were to decide there is no deal to be made, we are walking away, cutting off aid, what have you, is Europe going to be able to be enough of a backstop?
I mean, Kayleigh, I think that Europe can be, if Europe unfreezes the $300 billion that they can unfreeze for Ukraine, that Ukraine then can use to buy weaponry, including from U.S. companies. And, I would imagine that then they can hold the line. Don't forget, On the other side, the Russians are also hurting. They don't have enough ammunition, they don't have enough weaponry, and they don't have enough manpower without calling out a full mobilization, which President Putin doesn't want to do. This war is not popular in Russia.
This year's National People's Congress will be tasked with some heavy lifting to counter deflationary pressures at home. Congratulations. Compounded by political uncertainties from abroad.
We think 2024 was the year of understanding the beginning of reflation in China, but it's going to be a long, long battle.
Coming out of the first Trump trade war and then the pandemic, China doubled down on its industrial policies while simultaneously cracking down on the property sector, the internet economy, and of course, COVID. An over-reliance on exports has led to the challenge China faces today: how to address, without stoking excessive debt levels, the imbalances between industrial overcapacity and slumping consumer spending, while also bracing for a potential protracted trade war.
Priority of macroeconomic policies should shift from promoting more investment in the past to promoting both consumption and investment, with more importance attached to consumption.
Bloomberg opinion columnist Julie Ren says China's households sitting on more than $20 trillion of savings have hunkered down, spending.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Saving Zelensky. European leaders pledged to increase defense spending and support Ukraine after talks between President Trump and President Zelensky collapsed. Chinese stock investors facing a pivotal week with high hopes the National People's Congress, the NPC, may deliver further stimulus to counter U.S. tariffs. And the Kurdish separatist group PKK has announced a ceasefire in response to a call by its imprisoned leader to lay down arms and bring an end to a 40-year war with Turkey. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. So much news politically, geopolitically, and of course markets-wise as well. We're gearing up for a major week. Wednesday is NPC, the beginning of the NPC. We're going to talk more about that in a moment. But of course, tomorrow is the deadline for those tariffs that President Trump has been teasing. New tariffs on Canada and Mexico, and an additional 10% tariffs on China too. So that could happen in the next 24 hours. And then don't forget, you've got important data to watch out for, payrolls on Friday, and the ECB meeting in Europe on Thursday. So all of that happening this week. But markets brushing off some of those geopolitical concerns. S&P futures just below 6,000 here, but leaning towards the green, up 0.1%. S&P back to tracking positive for the year now. Asia Pacific handover pretty positive as well, up 0.7%. European futures also surprisingly opening up in the green as well as we head into the European sessions. And we're piecing together what we learned from that Starmer summit on Ukraine yesterday. And in Euro also having a good session today too. So surprisingly, a lot of green on the board. Let's switch over a brief peek at NPC and one of the metrics that we could watch out for. I thought this chart was interesting because China has set a CPI target of above 3% since 2004. And guess what? We've consistently undershot that, going all the way back to, well, you can go all the way back the past 10, 15 years, and we haven't really got to that 3% target. So many in the analyst community think they're going to have to revise that target lower to perhaps 2%. But of course, with CPI tracking below 1%, even that 2% target seems to be unachievable at this point. So to talk more about this, very happy to say that Min Min is going to be joining us. China's annual National People's Congress will be opening this week, but the tariffs also is going to be a big theme weighing on people's minds. Bloomberg's China correspondent Min Min Lo is in Beijing, and she joins us now from Beijing. So just give us a sense of what to expect out of the NPC.
Yeah, so we have the tariff, the additional 10% kicking in tomorrow, midnight U.S. time, which is 1 p.m. Beijing time. That's when we want to look out, keep our eyes peeled for any news lines from China, because I believe that's when Beijing will likely respond with their own announcement of the countermeasures to the additional 10% tariffs, possibly targeting U.S. agricultural goods, for example, if what state media editorial has said is anything to go by. And with regards to the MPC, you showed that chart earlier. It's interesting you talked about that inflation number, because the target of 2% that analysts are expecting this time, that's largely viewed as a ceiling rather than a floor. That's why China hasn't always reached their inflation target in the past. Last year was 3%. We were far away from that. And again, they are lowering that possibly this year because we have been in this deflationary streak. We're quite far away from reaching that target, to be honest, and it's still the growth target that is the most important priority for the government, and we're expecting the government to set a 5% target this year as well. We're also closely watching the deficit target this year, expected to increase from the current 3% to between 3.8 or 4%, so pumping in more trillions of yuan into the economy to address some of the persistent challenges like the property crisis, the domestic consumption, and of course to build up the resilience amid these external challenges.
Right, so we talk growth target, deficit target, but how likely is it that the threat of the tariffs, or indeed by tomorrow, maybe it will be a fait accompli, is going to change the calculus of what's on deck at this week's NPC?
Definitely the tariffs are going to factor into policymakers' consideration when it comes to what sort of stimulus they will put out next year. But some analysts think it will not necessarily move the budget so much. The budget, of course, is something that policymakers think about and pore over for weeks. And it may already be set in stone by this time. But also, we spoke to David Lee Dao Kui on the China show earlier, and he was saying tariffs is not even going to make it into the top 3 issues that policymakers are thinking about. Their most important and urgent priority is about boosting domestic consumption. How they are going to do that? Of course, other priorities including continuing to foster that capacity for innovation from Chinese companies and solving some of the problems in the economy, the fundamental issues, the overcapacity, to try to facilitate this modest increase in prices. And to that end, we have seen how Chinese authorities have been pretty reluctant to overstimulate the economy because they're at this point still cleaning up the messes from previous years, the property crisis, the over-leveraging by local governments, the bubble that has formed in the property sector. So they don't want to overstimulate. They have more or less adopted this sort of wait-and-see approach. They put out a little bit of stimulus and then check if it's taking hold, and then put out a little bit more if it's needed down the line.
Yeah, sort of a drip-feed approach to fiscal stimulus. Bloomberg's China correspondent Min Min Lo, thank you so much for the overview as we head into a very important meeting this week. Now, Ukrainian President Volodymyr Zelensky says he is willing to meet President Trump again, if invited, to, quote, solve real problems. The two leaders had a disastrous meeting on Friday in the Oval Office, leaving Western European governments scrambling to show support for Ukraine as the UK Prime Minister hosted a summit in London. Joining us for more is Bloomberg's senior reporter in Dubai, Henry Meyer. So much to talk about. Maybe let's just start with the state of the relationship between President Trump and President Zelensky. We all saw what happened on Friday. We've had a couple of days to digest it. European leaders obviously trying to mend the rift that has opened up between the two. How likely is it that we could see a reconciliation of sorts between Zelensky and Trump in order to perhaps be able to proceed with what happens next vis-a-vis the ceasefire?
I think at this stage it looks quite unlikely. President Zelensky, in his comments at the weekend, said that he wants to go back. He's ready to go back to the White House, but he doesn't seem ready to give the apology that has been demanded of him. He said that he was ready for equal dialogue. I mean, of course, he got a great reception in London from the UK Prime Minister Keir Starmer, from European leaders, and he must have felt like old times. But the situation has changed completely with the new president in the United States. You have senior American officials openly calling for a change of leadership in Ukraine, such as National Security Advisor Mike Waltz. So I would say that at this stage, it does not look likely that the current Ukrainian leadership, President Zelensky, will manage to reestablish a rapport with Trump. However, of course, Ukraine will be included going forward in these negotiations, and there's definitely, Europe is doing its best to try and bridge that gap.
Yeah, I mean, there were loads of articles over the weekend talking about how the relationship between President Trump and Zelensky precedes this current war, going all the way back to 2019, that phone call that they had that later led to Trump's indictment. So there's a lot of history there between the two. But let me just bring it back to the summit that was held in the UK over the weekend. How likely is it that these European efforts to build up a security guarantee for Ukraine will actually get Washington on side?
There, actually, I'm a bit more optimistic. I mean, I think that what Trump wants from European allies is to come up with a concrete plan for deploying peacekeepers. Now, Russia is completely opposed to that. However, Trump has said that he supports European boots on the ground. He wants Europe to take responsibility for this situation. One of the main points of discord has been that Trump is refusing to provide a security backstop. Keith Starmer went to Washington last week. He tried to get that. Trump refused. I think the U.S. could provide logistical support for such a mission, reconnaissance, but they are not going to guarantee to intervene in case these troops come under attack. So if Europe is willing, given that condition is not going to change, to come up with a viable plan for a peacekeeping mission, then I think they will get American support.
Interesting. Okay, so there is hope on that front. Bloomberg senior reporter in Dubai, Henry Meyer, thank you so much for the latest. Now, Saudi Arabia's sovereign wealth fund and its portfolio companies have embarked on an acquisition spree spanning sectors from agriculture to gaming. The $925 billion public investment fund is the main driver of the kingdom's economic transformation plan as Riyadh tries to boost local development. Now, to tell us more, we're joined now by Matthew Martin, Bloomberg.
Can't hear anything you said. Now voice is clear. अब आ रही voice. मैंने कहा क्रूड ऑयल में जो भी ये रेजिस्टेंस बना था छोटा वाला वो ब्रेकआउट हो चुका है ना. That act like as a support. बाकी यहाँ पर ये सपोर्ट यहाँ बने हुए हैं एंड ये एक मेजर रेजिस्टेंस यहाँ पर है. ये जो एरिया था यहाँ पर जो प्राइस ने रेजिस्टेंस जो था इसके ऊपर निकल गया तो वो सपोर्ट की तरह काम कर सकता है. इसको अब रिमूव कर दो. बाकी नेचुरल गैस 341 तक रेजिस्टेंस है. आना होगा तो 341 होल्ड करना चाहिए. नहीं करता है तो फिर ऊपर छोटा सा एक रेजिस्टेंस यहाँ पर है. देन मेजर रेजिस्टेंस ओवर हियर. मॉर्निंग पे सपोर्ट पे एग्जैक्टली आया नहीं तो बाइंग हो जाती. उसी का इंतजार है कि आए नीचे. अगर आता है तो मोमेंटम तो होना चाहिए अब. न्यूयॉर्क सेशन ओपन हो चुका है बिल्कुल.
Tomorrow midnight US time, which is 1 p.m. Beijing time, that's when we want to look out, keep our eyes peeled for any news lines from China, because I believe that's when Beijing will likely respond with their own announcement of the countermeasures to the additional 10% tariffs, possibly targeting US agricultural goods, for example, if what state media editorial has said is anything to go by. And with regards to the MPC, you showed that chart earlier. It's interesting you talked about that inflation number, because the target of 2% that analysts are expecting this time, that's largely viewed as a ceiling rather than a floor. That's why China hasn't always reached their inflation target in the past. Last year was 3%. We were far away from that. And again, they are lowering that possibly this year because we have been in this deflationary streak. We're quite far away from reaching that target, to be honest, and it's still the growth target that is the most important priority for the government, and we're expecting the government to set a 5% target this year as well. We're also closely watching the deficit target this year, expected to increase from the current 3% to between 3.8 or 4%, so pumping in more trillions of yuans into the economy to address some of the persistent challenges like the property crisis, the domestic consumption, and of course to build up the resilience amid these external challenges.
Right. So we talk growth target, deficit target, but how likely is it that the threat of the tariffs, or indeed by tomorrow, maybe it will be a fait accompli, is going to change the calculus of what's on deck at this week's NPC?
Definitely the tariffs are going to factor into policymakers' consideration when it comes to what sort of stimulus they will put out next year. But some analysts think it will not necessarily move the budget so much. The budget, of course, is something that policymakers think about and pore over for weeks. And it may already be set in stone by this time. But also, we spoke to David Lee Dao Kui on the China show earlier, and he was saying tariffs is not even going to make it into the top 3 issues that policymakers are thinking about. Their most important and urgent priority is about boosting domestic consumption. How they are going to do that, of course, other priorities including continuing to foster that capacity for innovation from Chinese companies and solving some of the problems in the economy, the fundamental issues, the overcapacity, to try to facilitate this modest increase in prices. And to that end, we have seen how Chinese authorities have been pretty reluctant to overstimulate the economy because they're at this point still cleaning up the messes from previous years, the property crisis, the over-leveraging by local governments, the bubble that has formed in the property sector. So they don't want to overstimulate. They have more or less adopted this sort of wait-and-see approach. They put out a little bit of stimulus and then check if it's taking hold, and then put out a little bit more if it's needed down the line.
Yeah. Sort of a drip feed approach to fiscal stimulus. Bloomberg's China correspondent Min Min Lo, thank you so much for the overview as we head into a very important meeting this week. Now, Ukrainian President Volodymyr Zelensky says he is willing to meet President Trump again, if invited, to, quote, solve real problems. The two leaders had a disastrous meeting on Friday in the Oval Office, leaving Western European governments scrambling to show support for Ukraine as the UK Prime Minister hosted a summit in London. Joining us for more is Bloomberg senior reporter in Dubai, Henry Meyer. So much to talk about. Maybe let's just start with the state of the relationship between President Trump and President Zelensky. We all saw what happened on Friday. We've had a couple of days to digest it. European leaders obviously trying to mend the rift that has opened up between the two. How likely is it that we could see a reconciliation of sorts between Zelensky and Trump in order to perhaps be able to proceed with what happens next vis-a-vis the ceasefire?
I think at this stage, it looks quite unlikely. President Zelensky, in his comments at the weekend, said that he wants to go back. He's ready to go back to the White House, but he doesn't seem ready to give the apology that has been demanded of him. He said that he was ready for equal dialogue. I mean, of course, he got a great reception in London from the UK Prime Minister Keir Starmer, from European leaders, and he must have felt like old times regimes. But the situation has changed completely with the new president in the United States. You have senior American officials openly calling for a change of leadership in Ukraine, such as National Security Advisor Mike Waltz. So I would say that at this stage, it does not look likely that the current Ukrainian leadership, President Zelensky, will manage to reestablish a rapport with Trump. However, of course, Ukraine will be included going forward in these negotiations, and there's definitely, Europe is doing its best to try and bridge that gap.
Yeah, I mean, there were loads of articles over the weekend talking about how the relationship between President Trump and Zelensky precedes this current war, going all the way back to 2019, that phone call that they had that later led to Trump's indictment. So there's a lot of history there between the two. But let me just bring it back to the summit that was held in the UK over the weekend. How likely is it that these European efforts to build up a security guarantee for Ukraine will actually get Washington on side?
There, actually, I'm a bit more optimistic. I mean, I think that what Trump wants from European allies is to come up with a concrete plan for deploying peacekeepers. Now, Russia is completely opposed to that. However, Trump has said that he supports European boots on the ground. He wants Europe to take responsibility for this situation. One of the main points of discord has been that Trump is refusing to provide a security backstop. Keith Starmer went to Washington last week. He tried to get that. Trump refused. I think the U.S. could provide logistical support for such a mission, reconnaissance, but they are not going to guarantee to intervene in case these troops come under attack. So if Europe is willing, given that condition is not going to change, to come up with a viable plan for a peacekeeping mission, then I think they will get American support.
Interesting. Okay, so there is hope on that front. Bloomberg senior reporter in Dubai, Henry Meyer, thank you so much for the latest. Now, Saudi Arabia's sovereign wealth fund and its portfolio companies have embarked on an acquisition spree spanning sectors from agriculture to gaming. The $925 billion public investment fund is the main driver of the kingdom's economic transformation plan as Riyadh tries to boost local development. Now, to tell us more, we're joined now by Matthew Martin, Bloomberg senior reporter for Middle East wealth funds. Matthew, good to have you with us. So there's been a flurry of investments from the PIF over the last couple of months. How should we interpret it, and how do these investments align with Saudi 2030?
Yeah, good morning. Well, look, I mean, I think that's sort of kind of the key question around all of this. And, I was in FII, the Saudi Investment Conference in Miami a couple of weeks ago. And, the big theme then was that it's getting harder and harder to get money out of the PIF for big global deals. And then we've seen this sort of flurry of announcements. So, I think the way that we should look at this is that what we're seeing the PIF doing with these is that where there are opportunities to spend money internationally that bring companies back to Saudi Arabia to work on the economic diversification, on those Vision 2030 projects, then there is still money around. If there are international deals which are just about financial returns, you're going to see less and less of that, whereas these deals which we've seen over the past couple of weeks, like the investment in DAZN, for example, the sports streaming service, that's all about linking into Saudi Arabia's sports strategy. So although it's money going out, a lot of the goal is about promoting Saudi Arabia, promoting the World Cup that's going to be in Saudi, promoting the Saudi Football League. So it all does link into going back to the Saudi economy and driving things there, even though it begins with money leaving the country. The big challenge, of course, is going to be, can they transform all of that investment into long-term investments which make returns for the country and that do achieve in diversifying the economy?
Yeah, you mentioned DAZN, the investment going into sports, but what are some of the other key industries that the fund will continue putting money into?
Yeah, I think if we look at what we've seen over the past couple of weeks, I would put them broadly into two main buckets. Excuse me. First of all, you've got one of them which is related to sports and sort of social development, and so you can put things like DAZN in there, put things like the planned investment into Niantic, the video gaming platform. That all sort of links back into creating and developing those industries back in Saudi Arabia and improving the quality of life and giving citizens of the country more and more to do. The other bit of it, which I would sort of broadly call manufacturing, is this investment, which I think, you have up on the screens now of Alat, this electronics manufacturing company that PIF created, investing into TK Elevator, and part of that is to get them to then come back to Saudi Arabia and create this manufacturing hub. We've also reported that they are in talks with Leonardo, the defense company, to build an aerospace facility inside Saudi Arabia. So that, again, is about, building up those manufacturing capabilities inside the country and diversifying non-oil exports, which is a big focus I think we'll see from the kingdom over the next couple of years.
Yeah, Matthew, thank you so much for the reporting. As ever, Matthew Merton, Bloomberg senior reporter for Middle East Wealth Funds. Thank you very much. And for more of our Middle East money coverage, do not forget to subscribe to our weekly newsletter on Bloomberg.com. It comes out every Monday around 4 p.m. local time. Now, coming up, Ghana's new central bank chief has suspended the Western African nations program of paying for oil with gold. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Ghana's new central bank governor has suspended the West African nations program of paying for oil with gold. Johnson Asiama is also vowing to implement clear policies to curb inflation, which has been above 20% for nearly 3 years.
See some a pickup in terms of investor sentiments, even for our local bonds, which is a good sign. And so it is time to rebuild, once again. It is time to look at, for example, the capital markets master plan, which was put in place around 2020. We intend to see how to put life, back into the financial markets in general.
Joining us now for more is Bloomberg's Andira Ganga, who spoke to the central bank chief, Greg Gatt. I was taking a look at the Ghanaian currency, the cedi, the last couple of years. It has been on a path of both volatility and a slow devaluation as well. What do we know and what did we learn about the central bank's plan to manage some of this currency volatility?
Hi, Jumana. So the central bank governor says that they're going to do this in twofold. One is maintaining an appropriate monetary policy stance. In the last meeting, we saw them hold the rate at 27%, but also working hand in hand with the John Dramani Mahama to ensure fiscal discipline from the executive side. During the first State of the Nation address by President John Dramani Mahama, he said that the currency lost 19% of its value to the dollar in 2024. And this year alone, 2025, since January, it has lost 5%. And while talking to the governor, I put it to him and asked, is this normal depreciation, or is there a need to manage and stabilize the currency? Because 5% in a span of less than 60 days should be something that should raise an eyebrow. And the governor said that they intend to put in place measures to manage this depreciation, but he says that this year the cedi will avoid extreme volatilities. Another thing that they intend to do is also step away from instruments that were used by the previous administration to manage currency volatility, one of them being the gold for oil program, where the central bank would buy gold bars using the local currency and then barter it for oil. Governor Asiama says that they've recorded losses on that, they've incurred losses, and they have put that on hold. Another key area of priority is inflation. In January, it hit 23.5%. But the governor is optimistic that by the second quarter of 2026, they will be in the single-digit realm within the central bank target of 6-10%. And he says how they're going to do that is put in place better fiscal coordination mechanisms to help ease inflation. Another really interesting thing that came up during this interview is the fact that in 2022, the bank recorded an overrun in spending of $3.9 billion because they had to write down loans in order to qualify for an IMF bailout program of $3 billion. He says that this year they're not going to incur any losses because they're managing their expenses a little bit better.
Yeah, interesting. Andiro, also I want to tie back to what you were saying about inflation and the central bank governor's expectations of where inflation is headed. How could that tie back in to the interest rate picture? Because they attempted to start cutting interest rates, but of course they've had to be cautious given that inflation is still running north of 20%.
Absolutely, Jumana, and that's why he's giving it a really decent time span from now to the second quarter of 2026 so they can manage how inflation goes. A lot of their pressure comes from food inflation and also the currency. If the currency is not doing well, if they're not getting good receipts from tourism, if they're not getting good receipts from cocoa, if they're not getting good returns from oil, particularly due to volatility at the international market, then it means that they'll have a lot of pressure internally. There'll be trade imbalance. And Ghana is a country that heavily imports things that are dollar intensive, like machinery, like chemicals. So they're going to use this period between now and the second quarter of 2026 to monitor how inflation is, to monitor food, to monitor dollar inflows in the country, and then maybe begin their easing cycle. But in the meantime, they're going to be very cautiously optimistic, probably likely to hold in the next meeting as they see how things unfold.
Yeah, interesting. Bloomberg's Indira Ganga, thank you so much, and thank you for bringing us the stories on Ghana the last couple of days. Now, coming up, a Kurdish separatist group has declared a historic ceasefire with Turkey. More on what this means for the wider region next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Kurdistan Workers' Party has announced a ceasefire in response to a call by its imprisoned leader to lay down arms and work towards ending a 40-year war against Turkey. But the PKK says it will only do so if Abdullah Öcalan is allowed to personally guide and conduct its disarming and disbandment. Now, let's bring in Honor Ant, Bloomberg's managing editor for Middle East and North Africa. On Friday, when we spoke about this, we said we were leading into potentially interesting and significant weekends for the future of PKK and its potential for military disarmament. Yeah. What did we learn in the last 24 hours?
What we were looking forward to, or what we needed to find out over the weekend, was whether or not PKK would respond to this call by its symbolic leader, Abdullah Öcalan, in a positive way. It did, but as you said, there are some missing elements, and that is the fact that now PKK wants Abdullah Öcalan to personally guide, or let's say lead, the process of laying down arms, the convention that the PKK is supposed to convene. But that's going to be tricky because right now Abdullah Öcalan is on an island prison just off Istanbul. He has been there for 25 years. And it would cause a huge backlash if Turkey just decided to free him. Even a house arrest would really result in a huge public backlash, which probably President Erdogan would not want to face, given that it would result in a dip in his popularity.
So it feels as though they've almost announced a unilateral ceasefire, which means you don't have the other side on board just yet. What is the likelihood of this plan actually succeeding?
Unilateral ceasefire, it had to be a unilateral ceasefire, right? Because no sovereign would really agree to a ceasefire with a group that it considers as terrorist. The PKK is considered to be a terrorist organization for Turkish government, and that's the end of it. But clearly, just like as in the past, when the PKK says, I'm not going to fight, usually what happens is Turkish forces also refrain from combat. And if that is the case, and it probably will be, just judging by the political statements and the political support for this process, what will happen is there is going to be a cessation of hostilities until the PKK basically convenes and makes a formal decision to lay down arms and basically abolish itself, which is what Abdullah Öcalan called for last week. But as I said, there is some distance between where we stand now and the point where it might happen.
What did the PKK get out of this then? What concessions are they looking for in theory?
Well, they say the call by Öcalan was not the end of something, but was not the beginning of a new era. I think what they were trying to say is that as a result of this process, they think they will get, they will make some headway in their long struggle to get more rights for Kurdish minority. Now, what exactly that results in reality is going to be a function of time and political decisions, and really, there's a huge difference in the political environment in Turkey between 1970s when PKK was formed and here, right? The demands, some of the demands are not valid anymore, but they do look for things like the right to education in mother tongue, mother language. That's one of the things.
Yeah, Honor, thank you so much. Good to have you with us today. Honor Ant, Bloomberg's managing editor for Middle East and North Africa. Now, a look at equity futures, because we seem to be trading in the green despite this big weekend of news, geopolitics, and of course that meeting that took place at the Oval Office on Friday. Heading into the second hour now, Jennifer Zabazaja will be joining me. We'll be back in just a few minutes. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Saving Zelensky. European leaders pledge to increase defense spending and support Ukraine after talks between President Trump and President Zelensky collapsed. Aid trucks head back to Egypt after Israel halted all humanitarian support and imports to the Strip over Hamas's rejection of a U.S. proposal to extend the ceasefire. And markets are counting down to Trump's barrage of tariffs on Canada, Mexico, and China, which take effect tomorrow. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, it was the meeting that was heard around the world, really affecting everyone, still having an impact on markets and geopolitically, but also a big week ahead for investors.
Yeah, I mean, I don't even know where to start, Jen. There was so much news to digest over the weekend. The world is still reeling from that Oval Office showdown on Friday. But of course, the European leaders did their best to help bring down the temperature on the situation. We are going to talk about what happens next for Ukraine. But interestingly enough, markets seem to be brushing off some of those geopolitical concerns. Because take a look, S&P futures are up 15 basis points. And actually, on Friday, we were talking about the fact that for the year, S&P had gone into negative. But we're back in positive territory again after a positive close on Friday. That PCE number coming in line with expectations. Looking ahead, Jen mentioned some data to watch out for. Well, there's a lot to watch out for this week. Tomorrow is the tariff deadline. Wednesday, we've got the China NPC meeting. Thursday, we've got the ECB meeting. And then Friday, we've got those payrolls numbers to get through. So busy week coming up on the data front. The handover today, though, positive from Asia, up 0.8%. European futures also leaning towards the green, up 0.5%. And even the euro currency itself also gaining a bit of ground versus the USD today as well. What else is doing well? Well, flip over. It's been a really good weekend for crypto. Take a look at the price action in Bitcoin. It's back up to around $93,000. Only a few days ago, it was trading through at $80,000, around $78,000, I think, was the low we got to. And all of this on more comments out of President Trump that he was looking to start up a strategic digital assets reserve, is what he's calling. And in that will be Bitcoin, Ether, Solana, some of the other cryptocurrencies as well. So all of that has been taken, of course, well by the cryptocurrency community. And apparently there is going to be a crypto summit, so to speak, towards the end of this week, as though this week wasn't busy enough already. So that's the picture for Bitcoin, in case you're wondering why there's a bit of a rebound. But let's go back to Asian markets. The handover is positive today. And April, of course, investors are looking ahead to that NPC meeting this week.
Yeah, positive handover, but don't forget, on Friday, the region's benchmark lost the most since the August carry trade unwind. And of course, last week, it was about tariffs, it was about tech. This Monday, it looks like that optimism surrounding the Fed rate cuts, even though you're seeing dollar China firmer, given how the dollar bears seem to be creeping back in, it does make you wonder how much this will last. Aside from that, when Chinese stocks and you're seeing this rebound underway. It's also got to do with some of the data that came out over the weekend and this morning as well that show resilience in factory activity. Today, the private survey of Tyson Manufacturing showing that bit of a pickup. Now, aside from that, as you say, it's going to be about the Chinese NPC later in the week. The view that seems to be emerging from observers is that this is a meeting that has a tendency to underwhelm, but maybe this time around will be a bit different given the threat of tariffs and how that might prompt authorities to act.
Yeah, though, good day today, though. Avril Hong in Singapore, thank you. Now, Ukrainian President Volodymyr Zelensky says he is willing to meet President Trump again if invited to, quote, solve real problems. The two leaders had a disastrous meeting on Friday in the Oval Office, leaving Western European governments scrambling to show support for Ukraine as the UK Prime Minister hosted a summit in London. Joining us now to discuss is Bloomberg's Russia economy and government editor Greg Sullivan. Okay, first of all, let's just start with the fact that Zelensky is now saying that he would actually have another meeting with President Trump. But of course, debatable whether President Trump wants to have another meeting with Zelensky. And there was loads of press over the weekend about how the relationship between those two goes all the way back to 2019, that infamous phone call that took place, right? So there's a lot of history between the two sides. How likely is it at this point that the rift can be mended?
That is a really good question. I mean, as you said, there's no doubt that that was a very bad meeting for Zelensky. The two already have a lot of history. They've never been particularly friendly with each other. And the meeting put Zelensky in a very, very tough spot. The U.S. has been a critical backer for Ukraine, and there's a lot of doubt about whether that support will continue going forward. Now, for Zelensky, he sees this resource deal as something Trump wants, a potential way to re-engage, to keep him from completely breaking off the relationship and completely aligning with Putin and Russia at the expense of Ukrainian interests. Whether another meeting actually happens, it's hard to see that happening from here, but anything is possible with Trump.
So how viable is it for Ukraine to be able to continue the war in the case that the U.S. decide to cease providing military and economic support?
Well, it will definitely be a lot harder for Ukraine. Ukraine has relied on U.S. support, U.S. Ordnance to wage this fight, U.S. intelligence. But Ukraine will be able to keep fighting. For how long is a question for analysts. It's unclear how long they can sustain the fight. It is an existential fight for them. Europe is definitely trying to step up. We saw that on Sunday to fill in part of the gap. And they also have been providing a lot of support to Ukraine.
Yeah, so it was interesting that Keir Starmer, the UK Prime Minister, was talking about building a so-called coalition of the willing. And it seems as though at this point, UK and France are the only countries that are willing to provide peacekeepers and troops to Ukraine on the ground. How likely is it that, assuming some of the European leaders are able to bring down the temperature and re-engage back with President Trump, that we also may see some support, those so-called coveted security guarantees coming from the U.S. as well?
Well, the U.S. for now has really ruled out putting boots on the ground. But as you said, the U.K. and the French are leading that discussion, and they've both been clear that it's not going to work without U.S. support. And at some point, the U.S. will need to provide a backing. For now, the line out of the Trump White House is, first we need a peace deal, and then we'll talk about that. And it's also important to note that for now, the Russians have been excluding that as a possibility. Over the weekend, we heard from Foreign Minister Lavrov saying that it was actually insolence, this idea of putting European peacekeepers in Ukrainian territory. So it's still a big question mark over the whole deal.
So potentially a non-starter for Russia, which, of course, is very important to getting any ceasefire deal across the line. Still many hurdles to get through. Bloomberg's Russia economy and government editor, Greg Sullivan, thank you.
Now, Israel says it's blocking all humanitarian aid to Gaza after the first stage of the ceasefire expired on Sunday. It comes after Hamas rejected a U.S.-led proposal to extend the truce until mid-April. Both Saudi Arabia and Egypt have criticized the Israeli move and say aid should not be used as a weapon for, quote, collective punishment. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, Egypt, Qatar, we mentioned a lot of mediators really criticizing this decision. What was behind it?
Well, as you noted, this Gaza crisis, 16 months in, reached another crisis juncture over the weekend when the initial 6-week truce that had been agreed by the side did not lead into envisaged phase 2 arrangements. That's basically because Israel and Hamas have not agreed on the core terms of that phase 2. There was really nowhere to go, and it appears that the Americans decided to bridge that gap, hopefully to put off a potential resumption of the war with the end of the truce by proposing an entirely new truce of their own, which would have been another short-term one geared to span the Muslim Ramadan fast month and the Jewish holiday of Passover coming up after, and basically giving more breathing space to the sides, in which the Americans envisaged it, according to Israel, more hostages would be released, more Palestinian prisoners, more humanitarian aid brought in. Now, Hamas has insisted on phase two. It rejects some core Israeli terms for phase two, and it has therefore rejected this idea of an interim bridging truce. Israel's response appears to have been to amp up the pressure by saying, fine, no more humanitarian aid. Israel controls the borders. And what we're seeing now is the reaction of some core Arab players. Those two countries, as you noted, have been critical in mediating between the sides. There's no direct contact between them. These are not peace talks. These are very much transactional truce talks, and they're signaling that they may be getting fed up with the entire arrangement. So right now we're seeing effectively a game of chicken between Israel and Hamas, with humanitarian aid and the fate of the remaining Israeli hostages in Gaza really being caught in the middle of that.
And Dan, Israel has decided to stand quite firm in its decision to defend Syria's Druze from some of the other gunmen who we've seen in the country. What is happening there? Why is Netanyahu so adamant on defending this part of the region?
Well, what we're seeing with Israel's conduct in Syria is really coextensive with the lessons Israel says it's applying as a result of the October 7th attack in 2023 by Hamas, this blindsiding cross-border attack that Israel simply failed to anticipate or prevent. It is now creating buffer zones wherever it can with potential enemies. It has been not especially happy about the new regime in Syria, the one to replace the 50-year regime of the Assad family, given the al-Qaeda roots of the new leadership there. And it has also been extending an arm to Druze. This is a significant minority in Syria. They also have a presence in Israel. They're a very loyal minority in Israel. And Israel's official position is those Druze in southern Syria, natural allies of ours, and we will not see them fall victim to sectarian persecution within Syria. What makes this Israeli pledge potentially to send in Israeli forces to help the Druze of Jeramana is that Jeramana is basically a district south of Damascus, the Syrian capital, very much deep into Syria. So Israel is really saying it's willing to weigh in deeply into post-Assad Syria, more deeply than it has already, and it's already quite deep into the country. So I think for now that has yet to play out, but there's definite messaging to the new people in charge in Damascus that Israel is not only being diplomatically standoffish, it's willing to take up arms if necessary.
Right. We'll continue to watch this story, as we know you will, too. Bloomberg's Dan Williams in Jerusalem. Dan, always great to have you on the show. Thanks so much. Now, still ahead, we'll get the market outlook with Manulife Investment Management as investors count down to Trump's barrage of tariffs while weighing geopolitical developments in Europe. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Markets are counting down to Trump's barrage of tariffs on Canada, Mexico, and China, which take effect on Tuesday. Meanwhile, traders are also watching developments in Europe, where leaders have pledged to increase defense spending and support Ukraine. Joining us now is Mark Franklin, Deputy Head of Multi-Asset Solutions for Asia at Manulife Investment Management. Well, there's a lot on deck this week in terms of geopolitical news to digest and all of the events coming up from NPC to ECB to the payrolls figures on Friday. But of course, the main one tomorrow is this tariffs deadline. And I just wonder why markets seem to be quite complacent into the deadline and the potential imposition of tariffs on Canada, Mexico, and another 10% tariffs on China.
Good morning. It seems to be the case that markets are anticipating, whilst there might be initial announcements, there's also the prospect of rollbacks or dialing back the rhetoric subject to responses from those trading partners. So for the time being, markets do appear sanguine. But at the same time as well, it's not entirely clear what the economic and the pricing impacts would be on the imposition of tariffs. the extent to which exporters or the producers of the goods pass on those tariffs underlying cutting prices, or whether the end consumers pay the full price increase as a result of tariffs as well. So it will take a bit of time for the data to reflect any tariffs that get increased as a result of these bilateral discussions, and for the market to adequately price in what its implications are for the economic outlook, but also monetary policy settings.
Yeah, have you advised clients to stay clear of any particular sectors because of the risk of tariffs?
At a high level, our guidance to clients since the start of this year is to recognise that we're likely to move into a more persistently volatile period for markets across risk assets. And as a result, we need to adopt a more selective approach, taking increased exposure in those asset classes which have quite attractive risk premia, and starting to cycle away from those asset classes that have had strong runs in recent times that might not be discounting in much more upside in the short term. So it's about a case of reorienting portfolios towards catch-up type opportunities or mean reversion type positions.
When we talk about catch-up, Mark, China's NPC meeting, Jumana was mentioning that in the intro. We had our reporter, Avril Hong, saying that this meeting tends to underwhelm. You, though, expect something a little bit more. Give us your outlook.
We do expect that there'll be some focused attention around recapitalisation of banks, shoring up the real estate market or attempts to do so. But the really important focus will be on direct stimulus towards consumers, the households, which has been somewhat patchy in detail so far. But for example, trade-in programs or incentive schemes for front-loading purchase as well, those kinds of measures in scale will be quite important for the market to focus on. One of the things that we've done in portfolios at Manulife in recent months is we've taken a more tactically overweight position in Hong Kong and China stocks. But we're starting to rotate that exposure into onshore exposures because the onshore market has effectively lagged the offshore market, which is a reflection to say that maybe onshore domestic investors have slightly more modest expectations of the NPC, whereas offshore markets have had this strong rally so far. And so on a reverse engineered basis, expectations going into the NPC are a little bit higher. So go back to the earlier point that you want to be positioning into asset classes with still quite attractive risk premia, rather than those that have fully discounted a positive scenario.
Would that include, Mark, in your opinion, tech, Chinese tech?
Certainly, yes. One of the things that we really paid attention to in the last couple of weeks was the forum that Xi Jinping and the CCP held with some of the leading figures in the private sector, particularly the technology companies in China. And I think it was a message that was being sent to global investors and global watchers as well to acknowledge the importance of innovation and the private sector in working hand in hand with the government towards innovation and self-sufficiency in some of the more value-added technological industries in China and to make them more reliant on domestic innovation. It was a recognition that there had been some persistent concerns around the extent to which the private sector would be enabled going forward. But the message was very, very clear. It was that we will permit private sector enterprises to scale up and to become very, very successful first before seeking to effectively adopt national service and make that innovation and technology available to the government and to the central policymakers in China. So that was a welcome shift in tone. And as a result, we do think that the technology sector in China will see a persistent bid because there's been a significant valuation discount to US tech companies for some time.
Yeah, and certainly that's been playing out at the beginning of this year. Let me just end with a point on the US. The last couple of weeks have been characterized by people getting concerned about the direction of travel for the U.S. economy. There are some serious growth concerns popping up, and certainly some of the indicators that have come through have disappointed to the downside. How pivotal do you think this payrolls number on Friday is going to be?
It's going to be quite important because we saw in the initial jobless claims last week a bit of a tick up. And so the conjecture is that that is the early reflection of some of the cutbacks or attempted cutbacks in federal government spending, as a result, federal government payrolls. And therefore, the question will be, can the private sector offset any job losses in the public sector? So our view would be that bonds will trade in a wide range this year. Early on, you will see some growth moderation get priced into bond markets as a result of this attempted pivoting away from the public sector as being the principal driver of job creation towards the private sector. But what you're likely to see from a sequencing perspective is softening of jobs in the public sector before the private sector starts to push ahead as well. So initially, growth moderation in terms of expectations, but perhaps later on in the year, a reignition of growth expectations as the private sector takes up the mantle.
Interesting. Mark, great to have you on with us today. Mark Franklin, Deputy Head of Multi-Asset Solutions for Asia at Manulife Investment Management. Now, coming up, Ghana's new central bank chief is vowing to implement clear policies to curb inflation. We'll bring you the story next. This is Bloomberg.
It is still relatively high, but we think that the downward trend that we started seeing since last year or so is well on course. The last reading came in a little bit, higher. But we think that going forward, if you look at the causes, of the pressures, the inflationary pressures, it was mainly from, food inflation. It was mainly structural in nature. And so therefore, the coming budget statement, which is about to be presented on the 10th of March, should be presenting a number of measures that can contain food inflation. If that is done, we are sure that we will see a return to the disinflation path. We plan to hold the next monetary policy meeting next month, where we will reassess the conditions and take an appropriate decision. And therefore, once we have the appropriate monetary policy stance in place, and then also food price inflation is well controlled, we will begin to see inflation trending back to its target path. We have a monetary policy consultation clause with the IMF. And so we expect that inflation should settle very much within, the band for end of the year. Barring, again, I keep using the word barring any further shocks, because we have a number of shocks from the administered prices that get into the way. So we can also only talk about the forecast horizon in terms of when and how we will get there. As we sit currently, we are looking at, middle of 2026, we should settle within within 6 to 10%. For that one, that is what our assessment, indicates at this point in time.
And do you have any plans of reviewing the Foreign Exchange Act? And if so, what in the law will you be exploring to change? And how will this in turn affect the exchange rate?
So I made mention of the plans to introduce a new Foreign Exchange Act. The reason being that the act in place currently is quite an old one. It's an act that was passed in 2006, thereabout. A lot has happened since then. There's been several notices that have been published since then. There's been, new developments, fintechs and virtual assets and what have you. So the idea is to have a new law that is able to cover all these new developments, a new law that's able to take out all the inconsistencies to do with our notices, a new law that provides clarity to the markets.
Youth unemployment is an issue in all labor markets. That's why it's one of the major pillars of the conference. One of the difficult things in dealing with labor market that if you change anything, it takes years for us to be reflected. That's the right thing to do, to look at the future and prepare from now. If you have the best practices, the right data, you will be able to overcome any difficulties or challenges. I'm hopeful about the future of the labor market.
This is Horizons Middle East and Africa. Our top stories this morning. Saving Zelensky, European leaders pledge to increase defense spending and support Ukraine after talks between Trump and President Zelensky collapsed. Chinese stock investors facing a pivotal week with high hopes the National People's Congress may deliver further stimulus to counter U.S. tariffs. And Bloomberg has learned Saudi's public investment fund has temporarily banned PwC from advisory and consulting service contracts. We are live in Riyadh. But for now, it has just gone past 7:30 a.m. in South Africa. I'm Janet Ferzabasaja in Johannesburg.
And I'm Jumana Basachi in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. No shortage of headlines to wade our way through this morning, Jan. But of course, not a great weekend for President Zelensky, starting off with that, train wreck of a meeting with President Trump on Friday. Things look to get better by Sunday with the UK summit. But of course, big questions remain about the future of Ukraine and those peace talks.
Yeah, and everyone, depending on who you talk to, has a different take on who did what and how did it actually derail. But it is a big week, as you were mentioning, Jumana, there. We do have a number of things that we're focusing on. Geopolitics, of course, is front and center, but we're waiting for that China NPC meeting, as we were just talking about there. And then, of course, a few other data points that we'll get later in the week, including, of course, from labor market data from the U.S. and some others. There's also the ECB that we're waiting for. But let's just take a look at where markets are positioned ahead of the trading day. As Jumana was mentioning there, a lot for markets to digest. And it's only Monday morning, at least here in South Africa. But as you can see, S&P futures edging up about just 0.2% there. Again, waiting to see what the outcome is of these Trump tariffs that is set to start on Tuesday. But the S&P closing last week in negative territory for the second week in a row. So we'll see how that pans out. The euro up just about 0.4%, strengthening against the dollar as we are seeing more and more European leaders rushing to offer support to Ukraine. We're seeing the euro, it's actually up about 3% from its February low against the dollar, even as the bloc is still waiting to see the outcome of tariffs. I was speaking to a number of finance ministers from Europe last week about that here in South Africa. And if we just stick with European Forex, if we take a look at the Polish zloty, we're seeing a few of these other currencies advancing as well as the expectation for more defense spending potentially fuels growth in the region. The dollar is down right now, just about 0.8% against the zloty, as you can see there. And Bitcoin also in focus, trading lower after a weekend surge. We did get news over the weekend from Trump potentially planning to reveal a crypto strategic reserve. We're not sure what exactly that means because he didn't give too many details, but the question is how will that affect Bitcoin? Clearly having an effect on that right now. And I want to just bring you this terminal chart because we are seeing a lot of focus on the dollar. And as there is more and more dollar bears appear to be emerging. We did see the Bloomberg dollar spot index actually reach its peak when we first heard from Trump about tariffs against Canada and Mexico. But more and more investors appear to see weakness on the horizon amid more of these concerns about what a potential trade war means for the U.S. and then also potential signs of a cooling economy. We'll wait to get unemployment data later this week to see how that pans out. But that's just a look at what we're focusing on right now with the dollar. Let's just pivot back to another story we're focused closely on, and that is China's annual National People's Congress, It's opening later this week with the economy showing signs of momentum. But of course, Donald Trump's tariffs will test Beijing's ability to sustain that push. Let's bring in Bloomberg's China correspondent. That's Minmin Lo. She's joining us now from the Chinese capital. Minmin, what are the key takeaways that we should expect, if anything?
Well, I mean, first of all, the external environment that is confronting China is very uncertain now. Not only is the 10% tariffs, additional tariffs from the U.S. kicking in tomorrow, but we have Scott Bessent pressuring Canada and Mexico to match those U.S. levies in exchange for maybe lowering U.S. tariffs on those countries. So China could possibly be at risk of more tariffs from other countries besides the U.S. And the U.S. tariffs kicking in tomorrow, one day ahead of the NPC, I believe tomorrow, 1 p.m. when those tariffs kick in, we might see lines from Chinese state media around the announcements from China when it comes to the countermeasures China might take, possibly targeting U.S. agricultural goods, for example. And I'm just going to run through very quickly some of the economic targets we expect to hear on Wednesday when Premier Li Qiang delivers the government work report. There has been a lot of consensus and around the expectations from the NPC, and that's why it's going to be pretty hard for the authorities to give us any upside surprise, just given how much expectations there is. And broad consensus so far for economic target, growth target is around 5%. Inflation target expected to be reduced from the current 3% to 2%. But bear in mind, we're a long way from that target, so that inflation target likely seen as more of a ceiling rather than a floor. Deficit target expected to increase as well from the current 3% to around 3.8 or 4%, which could potentially make it the highest on record, which shows the intention of the government to pour in billions of yuan to support the economy and address some of the long-standing problems like the property sector, the weak consumption slump, and also to counter these tariffs and ensure that China has the ability to stop relying so much on export-driven growth to shore up the economy.
Min, is there anything that we could potentially be surprised by, or will Trump's tariffs likely overshadow any other announcements that we could potentially get?
Well, the Trump tariffs, some analysts are saying, are not even going to be the top priority for the Chinese government, given that China likely had already went through the scenario planning for up to 60% tariffs, which Trump had previously telegraphed when he was campaigning. So the tariffs actually came in below expectations. And some analysts that we have been speaking to are saying the top priority for the Chinese government is still about boosting consumption and addressing some of the risks in the economy right now, the overcapacity problems, to facilitate that modest increase in prices. And so that could be why they may be reluctant to overstimulate the economy, because they are now still cleaning up the mess that comes from overstimulation in the past and the over-leveraging of real estate developers and local government debt, cleaning that up as well. So they may still be quite modest in the way they deliver the stimulus this year.
Shaping up to be quite a busy week. Bloomberg's China correspondent Min Lo in Beijing. Min, thanks so much for joining us. Let's pivot back to Friday's disastrous Oval Office clash between U.S. President Donald Trump and Ukrainian President Volodymyr Zelensky. European leaders this weekend sought to assemble what Britain called a, quote, coalition of the willing to secure Ukraine after any U.S. brokered ceasefire. Our UK correspondent Lizzie Burden joins us now with more. Lizzie, so where does this meeting that we did see on Friday between Zelensky and Trump, and also the London summit that we got over the weekend, leave peace and potential peace in Ukraine?
Well, yeah, that press conference with Trump and Zelensky couldn't have gone any worse, Jen. And that's why the UK and France are in these talks about how they can get a peace deal and present it to President Trump to work through. But we had the US Director of National Intelligence, Tulsi Gabbard, over the weekend suggesting that Zelensky would need to apologise to President Trump publicly if he wanted the relationship to move forward. Zelensky, for his part, yesterday signalled that he would meet Trump if he were invited back. And then over the weekend, we had the UK's Keir Starmer, France's Emmanuel Macron and Italy's Giorgia Meloni trying to get the two men back to the table. They still believe there's a narrow path to getting a minerals deal over the line. And Macron told a French newspaper that some nations want a 1-month truce in Ukraine so that these talks about peacekeeping can play out. But indeed, it comes back to this question of whether the US is going to provide a security backstop. When Starmer was in Washington Washington, all Trump would say is that he'll always be there if British troops were needing support. But under Article 5 of NATO, of course, members only commit to backing each other when one of their territories is attacked, not when a NATO member is backing a non-NATO member. So if British troops are peacekeeping in Ukraine, will the US actually be there? That is the ultimate point that Russia's Vladimir Putin is testing, and we don't have an answer. NATO Secretary General Mark Rutte said yesterday that the London meeting shows the debate is ongoing on that question. Keir Starmer, for his part, says that he's clear Trump wants a lasting peace. This US backstop is the absolute key to a lasting peace in Ukraine's mind.
And Lizzie, when we think about what Starmer calls a coalition of the willing, what would that look like? What would this coalition do? And would it actually guarantee, support for Ukraine?
Well, of course, your audience knows better than anyone the origins of this term. The most famous or infamous coalition of the willing was the 30 nations who backed the US in the invasion of Iraq in 2003. But this coalition of the willing is all about, number one, working out how Europe can defend itself without the US, and number two, how they can get the support together fast without everybody getting on board. So this is how Keir Starmer put it yesterday.
We are at a crossroads in history today. This is not a moment for more talk. It's time to act, time to step up and lead, and to unite around a new plan for a just and enduring peace.
So we know that there'll be France and one or two others, but there were only like-minded nations at this summit. There was no Hungary, no Slovakia, for example. We know that there are going to be internal domestic hurdles to get over. Now we look ahead to the Brussels summit on Thursday. And of course, we question still who will be the leader of Europe. Some saying that Angela Merkel should come out of retirement, some looking to King Charles.
I should say the speed in which these events are happening is quite astounding and historical. Bloomberg's Lizzie Burden for us in London, giving us a recap there. Lizzie, thanks so much for joining.
And over in the region, Saudi Aramco is set to report its fourth quarter results tomorrow. Bloomberg Intelligence estimates that the company's profit may have declined another 9% year over year, driven by a 10% lower benchmark oil price and, of course, lower production. This with oil output stuck at just below 9 million barrels a day amid sustained OPEC plus cuts. Anthony DePaula, Bloomberg's Middle East energy reporter, joins me now. Look, we can have a chat about where that profit figure is going to come through, but I'm going to be honest, I think what most people care about is what is going to be announced on the dividend. So walk us through what you're expecting there.
Yeah, I mean, that dividend is the key thing because that's a main component of some of the income that goes to the Saudi government. The Saudi government via the government itself, as well as the PIF, the Sovereign Wealth Fund, they own the majority of the Aramco shares, so the majority of that massive dividend goes to them. And it's over $120 billion for this year. We know that because they've already announced it going forward. They've got a component that's a base dividend, and they've got something they call the performance-linked dividend, which is taking all those bumper profits from 2022 when all the commodities complex surged after Russia invaded Ukraine. So oil companies were really banking profits at that time. So Aramco is distributing that as additional gains to the shareholders. Now, we don't know what they're going to do in terms of they've got plenty of scope for debt, so they could issue debt, giving them some additional cash to play with and transfer that to the government. Aramco has not talked about that, has not confirmed anything about that. But what we do know is their stated policy going forward. That base dividend, which is about $20 billion, that's going to be stable as a base, floor for what the investors will get. Plus, they expect to raise it over time. That special component of the dividend, the performance-linked, is going to be calculated as a percentage of their free cash flow. After they pay out the main dividend and after they do investments. Now, in a few quarters already last year, even that base dividend was greater than the free cash flow. So already the analysts are looking at a lower free cash flow for this quarter and then going forward. So we're not seeing that there's going to be a lot of extra space for that base dividend. So based on the calculations that Aramco has given us, there's not going to be a lot of that performance-linked dividend.
Yeah.
So Aramco's either going to have to reduce that payout, rely on the base dividend, or think of another mechanism to transfer some money to
you
the state.
remember when I sat down with Amin Nasser, the CEO of Aramco in Davos, I asked him a question about it. Obviously, he didn't commit to anything, but what he did say is, I just want to remind you, it is a performance-linked dividend. The second part of the dividend is performance-linked. So, i.e., if you're in a situation where they don't have the free cash flow to honor up that performance-linked dividend, then they might change the structure. So this is the expectation into tomorrow, I guess.
This is a possibility. Yeah, that performance link, they're clear that that's giving the upside to the investors, whereas they've got that stable base dividend, which, let's be clear, that's a huge dividend. That's $20 billion. And they are saying, again, that that's going to be progressive, meaning they hope to increase it, which they have done over the past few years. So analysts are looking at a few different scenarios, possibly, as I said, some debt for something special or an increase to that base.
And just on the OPEC plus production front, obviously Saudi have been withholding barrels. We still don't know if they're going to put back these barrels in Q2 of next year, but how much of an impact is that going to have on the bottom line?
Yeah, for sure. That's hurting Aramco because they are in this price area where it's less than what they need to balance the government budget. So they're producing oil less than they normally would sell at a lower price. So of course that's going to be a compounded factor that's hurting them and hurting the bottom line.
Yeah. Anthony, thank you so much. Good to have you with us. We'll have you back on again tomorrow to discuss the earnings. Anthony DePaola, Bloomberg's Middle East energy reporter. Well, coming up, sticking to Saudi, PIF has temporarily banned PwC from advisory work in the kingdom. We bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, Bloomberg has learned that Saudi's public investment fund has temporarily banned PwC from advisory and consulting services contracts. The PIF did not explain the reasons behind the move in messages sent to its portfolio companies, but the firm's auditing projects will reportedly not be affected. Joining us for more on this, Matthew Martin, Bloomberg senior reporter for Middle East Wealth Funds. This story hit Friday afternoon, made a lot of waves, I would say, in the region, thanks to your reporting, Matthew. What do we know? Why did the PIF make this decision?
Well, I think just first of all, to put a bit of context around this, this economic transformation that's been going on in Saudi Arabia, this Vision 2030 master plan has attracted huge volumes of the strategy consultants and management consultants and advisory firms to come in and massively staff up inside the country, and also to put huge teams in Dubai flying in. And they have been, I think it's fair to say, over the course of the last decade, have extracted billions of dollars in fees out of Saudi Arabia and out of what has been going on here. And I think we're perhaps starting to see the first fruits of some of the backlash against that. And as the kingdom looks more at delivery and value for money out of these services, I think that this action against PwC is, as I say, one of the first things that we've seen. What we do know so far, and we don't know a huge amount at the moment, but what we do know is that earlier in February, the PIF sent out a message to all of its more than 100 subsidiary companies telling them to stop using PwC for advisory and consultancy work. Audit work is apparently going to remain going on. There's obviously only really 4 big audit firms, so to cut one of them out would be a big hit to the ability of companies to find different auditors. But so advisory and consultancy is going to be the main area that is affected here, and this ban is going to be in place for 1 year. So up until February of 2026, PwC is not going to be able to do any of this advisory and consultancy work around all of these big projects which have been using dozens, if not hundreds, of manpower from consultants on areas like NEOM and on Alula and some of these big projects which have been spending billions and billions of dollars. So a huge blow for PwC, which has also, it must be said, had some issues around the world as well, then has run into some problems in places like China, which is also hitting its growth. And it had previously said that the Middle East was going to be one of its strongest growth markets. So that's clearly going to be challenged now over the course of this next 12 months.
Yeah, huge story. Matthew, thank you for bringing it to us. Matthew Martin, Bloomberg senior reporter for Middle East Wealth Funds. And coming up, has Dubai become a victim of its own success? An influx of workers is leading to a surge in costs and a moderation in salaries. We get the latest next. This is Bloomberg. Dubai's job market is being overwhelmed by an influx of foreign workers, leading to a surge in rents and traffic and a moderation of salaries and financial benefits for staff. For more, let's bring in Bloomberg's Verity Radcliffe. Verity, really good to have you with us. Has Dubai become a victim of its own success?
Well, we've definitely seen the population surge here. You must have noticed. We've had more than 400,000 extra people arrive since 2020. There was a big boost after the pandemic, and that's obviously having some impact on people's salaries and their lifestyles. There has been a bit of an impact on lifestyles here.
But at the same time, it feels as though authorities are trying to mitigate some of those issues. There are lots of infrastructure plans for road transport. Yeah. How are Dubai residents adapting to this higher cost of living?
There's some things that the government can do, obviously, and they build and build and build here. Just looking out the window here today, I can see plenty of cranes. Yeah. Dubai is always doing this, but just dealing with the scale of the extra people to house and to build roads for and office buildings, it's an enormous task. And yes, they are building lots of extra roads, but you must have noticed all of the traffic problems that we're having. The roads are gridlocked at certain times of day. It's terrible. So there's some things they can do, but I mean, residents themselves are doing certain things as well. They're moving further out of the city to cheaper places, moving to perhaps cheaper Emirates as well.
Like Sharjah,
Indeed, to Sharjah, to Ras Al Khaimah, or just a little bit further out of the city to further away developments, just on the outskirts of Dubai as well. And I mean, some people are also looking at alternative places to move to as well, perhaps Saudi Arabia, although even there, the hiring cycle has sort of come to an end. There was an intense activity, which seems to be slowing a little bit even there as well.
Yeah, it's interesting. We had Knight Frank on the show on Friday talking about Saudi real estate trends. So it's a similar phenomenon, I guess, sort of playing out there. But let me just bring it back to Dubai. Has this higher cost of living disincentivized expats from moving here, would you say? Or are we not at that point yet?
Well, there are push and pull factors. The reason why people have come to Dubai over the past few years has been certain push factors like wars, terrible economic prospects in certain places as well. So those things haven't really changed. And the pull factors, such as low tax regime and easy visa processes with the golden visas that we have here now, they still exist as well. So it seems like the numbers haven't slowed yet, but I suppose if the trend continues, you might see a change in the future, but we don't know. Yeah, you forgot to mention the nice weather as well. I'm a fan of the sun, so especially this time of year. That's a draw, I think, right? Maybe.
Bloomberg's Verity Radcliffe, thank you so much for the reporting. Okay, a quick look at futures before we head out for the show. Markets are trading in the green despite all of the geopolitical developments, I should say, over the weekend. Even European markets looking to open up in the green as well. Take a look at Eurostoxx futures up 0.7%. But that is it for our show. I'm Jumana Versace in Dubai with Jennifer Sabazaja in Johannesburg.
तो गाइस यूएस मार्केट ओपन हो चुका है, डेटा है 8:15 और 8:30 पे, ध्यान रखना। ये नेचुरल गैस का भी एसएल चला गया था, क्रूड ऑयल चला गया साइडवेज, मोस्ट प्रॉब्ली 8 बजे का वेट कर रहा है। आज वो भी है, याद रखना, ट्रम्प के थ्रू चाइना पे और कनाडा और मैक्सिको पे टैरिफ लगने वाले हैं। अगर टैरिफ लगते हैं, लग ही जाएंगे मोस्ट प्रॉब्ली, 99% चांसेस हैं, तो क्रूड ऑयल पे उसका एक इम्पैक्ट पड़ेगा। देखना पड़ेगा क्रूड ऑयल पे किस तरह से मार्केट को वो लेता है। मोस्ट प्रॉब्ली क्रूड ऑयल उसी वजह से रुका हुआ है। सिल्वर के लेवल मैंने बताया सेम ही है, चेंज कुछ नहीं हुआ है। क्रूड नेचुरल गैस में ऊपर वाले से सेल किया, बढ़िया है, होल्ड करो। नीचे देख लेते हैं एक बार। ठीक है, देखो टारगेट इसका 337 तक रखना नीचे, यहाँ पर रुकने के चांसेस लग रहे हैं 337। ठीक है, यहाँ तक एक टारगेट रख सकते हो 337 के अराउंड। बाकी फिर देखेंगे अराउंड 336 के नीचे अगर क्लोजिंग आ जाती है तो फिर बढ़िया है, और गिरेगा, नहीं तो मोस्ट प्रॉब्ली यहीं पर रुकना चाहिए प्राइस को। ये बीच का लेवल रिमूव कर देना, इसकी ज़रूरत नहीं है अभी। दिस लेवल इज़ नॉट यूजफुल नाउ। ठीक है, इस एरिया के आसपास देखेंगे अगर वापस बाइंग आती है तो। फिलहाल टारगेट इतना ही है। तो भी देखते हैं, अगर एक ट्रेड बनता है यहाँ पर एक सेलिंग का 6158 के अप्रॉक्सीमेटली, थोड़ा सा और अगर ऊपर आ जाए। ओके ये क्रूड ऑयल रुक रहा है अपने प्रीवियस जो रेजिस्टेंस था इसका ब्रेकआउट हो गया तो वहाँ पर एज अ सपोर्ट की तरह रुक रहा है। ठीक है, ये जो करंट एरिया है याद होगा अभी थोड़ी देर पहले यहाँ पर जो रेजिस्टेंस का ट्रेड बनाया था। ठीक है, ये रेजिस्टेंस था, मार्केट ब्रेकआउट कर गया, उसी पर थोड़ा बहुत रुकने की कोशिश कर रहा है एक्चुअली। रिव्यू मैंने बताया था, प्रसाद सत्याजी सिल्वर रिव्यू ऑलरेडी इन्फॉर्म्ड। अर्ली टाइम फ्रेम पे 8 कंजिका हम वो उसका रीज़न ये है अभी एक्चुअली यूएस मार्केट के अलावा मैंने अभी थोड़ी देर पहले बताया आज यूएस सैंक्शन लगा सकता है, किस पे लगा के सकता है, लगाएगा ही लगाएगा, चाइना पे, मैक्सिको पे और कनाडा पे। तो उसका इम्पैक्ट कहीं ना कहीं पड़ने वाला है। इक्विटी मार्केट के लिए नेगेटिव ही न्यूज़ है, बाकी गोल्ड और सिल्वर के लिए पॉजिटिव न्यूज़ है। एक बार लेवल आप देख लो, मैं लेवल बता देता हूँ। ठीक है, फिर से पॉजिटिव बना हुआ है बिकॉज ऑफ दैट न्यूज़ की वजह से कम्प्लीटली पॉजिटिव है मॉर्निंग से ही। बाकी आपको आर्ली में भी बताना है। ठीक है, देखो अभी हो सकता है, अभी तो अभी यूएस मार्केट तो जस्ट ओपन ही हुआ है, यूएस में अभी थोड़ा बहुत सुबह ही हुई होगी, वहाँ पर कुछ स्टेटमेंट वगैरह निकल के आएंगे तो उसका इम्पैक्ट पड़ेगा। तो एक बार आर्ली टाइम फ्रेम पे ही मैं देख रहा हूँ। ठीक है, आई होप आप आर्ली में ही पूछ रहे होगे, कोई और टाइम फ्रेम पे नहीं पूछ रहे होगे। ये फॉरेक्स का चार्ट है बाय द वे, दिस इज अ फॉरेक्स चार्ट। ओके, आर्ली टाइम फ्रेम तो न्यूज़ का थोड़ा बहुत इम्पैक्ट पड़ सकता है। बाकी अभी 8:15 और 8:30 पर एक डेटा है, 8:15 वाला डेटा तो निकल गया है, 8:30 पर एक और डेटा इंपॉर्टेंट है। बॉन्ड दिए पे 5:30 5:30 1 hour टाइम फ्रेम ऑन द वे। ओके, ठीक है, 1 hour टाइम फ्रेम पे रेजिस्टेंस पर ही है। 1 hour टाइम फ्रेम पे सिल्वर 1 hour टाइम फ्रेम पे रेजिस्टेंस पर ही है। 15 मिनट 1 hour टाइम फ्रेम 15 मिनट का नहीं देखा है, 1 hour टाइम फ्रेम रेजिस्टेंस है। बाकी एक नेक्स्ट रेजिस्टेंस और एक नीचे सपोर्ट भी देख लेता हूँ, सो दैट थोड़ा सा और क्लैरिटी आ जाएगी। ठीक है, रेजिस्टेंस पर ही है फिलहाल के लिए, 1 hour टाइम फ्रेम ध्यान रखना। ऊपर वैसे तो लास्ट टाइम यहाँ पर देख पा रहे होगे काफ़ी ज़्यादा रेजिस्टेंस ले चुका है, बट अभी भी यहीं पर है, रेजिस्टेंस पर ही माना जाएगा। 0.19 तक पूरा रेजिस्टेंस जोन। नीचे सपोर्ट भी देख लेते हैं, सपोर्ट कहाँ तक मिल सकता है। न्यूज आती है तो हो सकता है ब्रेकआउट रीटेस्ट हो, अदरवाइज नेक्स्ट रेजिस्टेंस देख लेता हूँ। दिस इज अ रेजिस्टेंस, करंट जोन तो रेजिस्टेंस का ही है, जब तक ये वापस अब 32.18 के ऊपर नहीं निकलता है इसको रेजिस्टेंस ही मानना। ठीक है, सपोर्ट भी देख लेता हूँ, एक सेकेंड। ओके, दिस इज अ रेजिस्टेंस इन 15 मिनट टाइम फ्रेम, सॉरी 1 आवर टाइम फ्रेम, ये 1 आवर टाइम फ्रेम का चार्ट है, 15 मिनट का नहीं है। देखेंगे ये लेवल 1 आवर टाइम फ्रेम पे नेक्स्ट कैंडल अगर कहीं ब्रेकआउट पे चली गई तो फिर रेजिस्टेंस के ब्रेक होने के चांसेस रहेंगे. अभी तो रेजिस्टेंस पर ही है. एग्जैक्ट सपोर्ट ये देखो 30.86 के आसपास एक सपोर्ट है डेलो वाला. बाकी बीच में थोड़ा बहुत ये यहाँ पर रुकना चाहिए. यहाँ पर एक एफईजी है. मोस्ट प्रोबेबली इस एफईजी के आसपास प्राइस रुकेगा डेफिनेटली. ठीक है, ये कुछ लेवल है सपोर्ट रेजिस्टेंस. एफईजी पर रुकना चाहिए मेरे अकॉर्डिंग. नीचे वाला सपोर्ट अभी भी इंटैक्ट है. ये काफ़ी पुराना सपोर्ट है, ऐसा नहीं है अभी का सपोर्ट है. 1 आवर टाइम फ्रेम पे देखोगे लास्ट टाइम 3rd फरवरी 2025 के आसपास सपोर्ट लिया था इसने. ठीक है, ये कुछ लेवल है 1 आवर टाइम फ्रेम पे. लेट्स मूव ऑन टू द नेचुरल गैस 15 मिनट टाइम फ्रेम. नए लेवल बनेंगे तो देखेंगे. ठीक है, अभी कोई नए लेवल अभी बने नहीं है. यूएस मार्केट ओपन हुआ है, वहीं पर देखते हैं कुछ अगर न्यूज़ वगैरह आती है स्पेसिफिकली इम्पैक्ट करेगी क्रूड के प्राइस को.
They upgraded the stock to overweight from equal weight, calling the company a, quote, quality large cap growth compounder that's been weighed down by short-term headwinds. Now, analysts expect the company's catalysts are going to boost performance in the months ahead.
And finally, a tale of two ratings for Deere. The farm equipment maker was added to Goldman Sachs' conviction list. Analysts believing the stock's sluggish performance is headed for a turnaround, and now's the time to enter. But Baird analysts see it differently. They downgraded Deere to hold, saying the timing of recovery isn't certain thanks to weak commodity prices and tariff uncertainty.
All right, well, that does it for Morning Brief, but keep it right here on Yahoo Finance. Catalyst is coming up next.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Shauna Smith alongside Madison Mills. 30 minutes into the U.S. trading day. Let's get you the three catalysts that are moving the markets this hour.
First up, we break down the market outlook for March as investors await key earnings, economic data, and more.
Plus, we're going to dig into the data and get a preview of what we can expect from February's payrolls report later this week.
And we'll look at how tariffs could impact the economy, consumer prices, and sentiment. Sweeping levies set to go into effect tomorrow.
Let's take a look at some of the market headlines to start the hour, sponsored by Tasty Trade. Taking a look at the major averages right now as we do digest the U.S. ISM manufacturing data, the fact that it fell, the prices paid rising during the month, obviously having a bit of an impact here. You're looking at all three of the major averages now in negative territory. You've got the S&P off just about 0.4%, the Dow just below the flat line, the NASDAQ adding to earlier losses, now off just about 0.8%. So again, when you take a look at some of that pressure that we are seeing return to the broader market, flipping over to the bond market there, taking a look at yields, that has been a huge mover here. You got yields moving to the upside, up just about 1 basis point, not a huge move there, but still right below that 425 level. And flipping over to Bitcoin, lots of action in the crypto markets following the news on Truth Social over the weekend, further digesting, looking ahead to the crypto summit as well. That's going to happen on Friday. You're looking at Bitcoin rising off the highs of the day, but still up just about 5% here today, just below 90,000.
Yeah, and it looks like the market's still holding on to gains as we're digesting that economic data amid broader concerns about economic growth. All eyes, of course, on Friday's jobs report for the latest insight into the consumer. Our very own Josh Schaefer on set with us for more. And Josh, it's obviously interesting looking at that prices paid number surprising to the upside. What does that tell you about the concern that's starting to enter the room about the economy and whether or not that's kind of a flash in the pan or something more sinister?
Yeah, Maddie, I think when we get to the point where a prices paid print in an ISM reading is moving the market this much, that's usually when you can get to the point where you're saying, okay, the market is skittish on every piece of economic data, right? Because prices paid in this ISM data for the manufacturing sector would, in theory, be a read-through into potential inflationary pressures, right? That's sort of the takeaway why people would be concerned about that. But it's not a actual inflation reading, right? This isn't the Fed's preferred inflation gauge we were looking at last week. This is perhaps more of an indicator of where prices could head. But there's a clear read-through right now over the past month, really, at this point, has been markets are worried about inflation maybe being higher than we thought or stickier than we thought, stickier than we hoped, and the economic growth story not being as strong as many investors had hoped for coming into this year. Even looking at the ISM manufacturing number itself, the index came down to 50.3, right? So it had just entered expansion territory last month, already starting to come down. You wonder how bad the trajectory is there when you look at another data set, S&P Global. They noted that, yes, the number itself went up for S&P Global, but the commentary, a lot of businesses concerned about the overall administration and policy. So clear market reaction here has been bad economic news, not good for stocks. We're looking for good economic news again, and that's sort of the narrative, I think, heading into Friday.
Yeah, and Josh, just building on top of that, given the fact that the NASDAQ had been up 0.8%, ahead of this report, now we're looking at losses of just about 0.8% there. What does that tell us just about how much uncertainty there currently is right now, and how much, I guess, uncertainty might be the best way to put it, but indecisiveness just in terms of the direction and the economic story and how that's going to play into some potentially handicapping some of the gains that we're getting.
Yeah, I mean, it feels like people have been looking for a little bit of a reason to sell, right? You're at pretty extended levels, or you were at pretty extended levels going back a couple weeks ago for the S&P 500. We know valuations are as high as they've been over the past several decades, right? And so when you get to that point, you're kind of wondering what could make me sell here, right? And it's been this economic data and a little bit of concern. Also, we haven't even talked about tariffs yet, right? And that's supposed to come tomorrow, or we're going to get more news on that tomorrow. And so there's just a lot of these little pieces sort of coming in, and the overall read has not been that positive. But I think some people have sort of been pointing out to you guys on the show, and Maddie, I know you were talking about this with Neil Dutta over at RenMac, the stocks that are selling off is also interesting too, right? We're looking at a little bit of an unwinding of the momentum trade. If a stock like Palantir that had been up over 100% starts coming down a little bit and it all is happening at the same time, is that really a growth scare trade? or is that people getting out of an extended name? And I think you could perhaps maybe argue the latter, right? But right now, what the data is sort of showing us is it's extrapolating the skittishness that you're seeing across the market and is expected to come again on Friday with that big jobs report. Seems like we're probably going to get one of the bigger moves we've had in a while off of payrolls.
I think it's also really interesting in the context of what we're talking about, again, seeing this sell-off off of this print. It tells me a little bit that the market is more concerned about the economic data right now than tariffs, because we have seen tariff announcements moving individual names, but not necessarily dragging the entire market down with it. And I know you've been following investor reaction to those tariffs. Does it seem like the focus is that econ data?
It feels like right now the focus is the econ data, because it feels like the consensus from strategists on what is going to happen with tariffs is that we're not going to get full 25% tariffs on Mexico and Canada. Most strategists are still telling us that is probably not priced into the market at this point. And if it is believed to happen, it's believed to be short-lived, right? That's sort of the consensus stance right now, is we are not going to be sitting here in June still talking about the 25% tariffs that were put on Mexico and Canada. That is not how people feel this is going to go. So the opposite of that would be, well, if that's what's priced in, the bad news that could come tomorrow would be we do get 25% tariffs and it doesn't feel like they're going anywhere, right? What do we hear about negotiations? Are they really just a negotiating tactic? If not, then maybe you start to see tariffs take a little bit of the lead, Maddie, and that's also a key market driver overall.
Yeah. All right, Josh, thanks so much. Well, ISM data coming in this morning disappointing to the downside ahead of that key jobs report on Friday. This comes after data in February showed some signs of continued softening across the U.S. economy. Joining us now to discuss is Michael Gapin. He's the chief U.S. economist at Morgan Stanley. Michael, it's great to have you back here on the show. So talk to me just about how you are sifting through some of these conflicting reports, especially those that are showing maybe the fact that the U.S. economy is starting to weaken just a bit.
You know, it's always difficult in these moments, but I think right now most of the data suggests that we're getting payback from a very strong fourth quarter, right? The biggest signal we've seen so far is that spending on durables retraced pretty sharply in January. Remember, auto sales were almost 17 million units on an annualized basis in December. So I think really there was a short-term demand for cars following the hurricanes last fall, and that should pay back. And it seems like it's paying back in the first quarter. So that, I think, is the majority of the story, payback, not turning point. But I think the ISM data that just came in does give you a little bit of an imprint of what tariffs and trade restrictions may do, right? So if that above 50 reading is driven by the prices paid component, remember back to COVID, higher prices paid pushed the headline on these indices higher, but these are indices constructed around demand-side forces that would normally read stronger prices as stronger demand, pushing up producer prices, and that's not the case, of course, in this instance, right? So there's hints of tariffs would weaken both employment and activity by pushing up prices paid, and that's a soft data indicator. We have to see if it flows through into the hard data. So again, right now, I'd say payback more than turning point, but we have to be aware and alert for the turning point.
So, Michael, what does that potential turning point look like, and how are you looking at the incoming data versus the incoming policy news out of Washington and sussing out which of those two buckets is going to be that turning point?
Right. So I guess when I say turning point, I'm kind of thinking, recession risk. And right now, I think the outlook is, manufacturing is a relatively small portion of the U.S. economy. It's about 10% of activity, 10% of employment. Trades, maybe let's call it 15% of GDP. There's a lot of overlap there between trade and manufacturing. So it's really, we're talking about a general slowdown in growth towards, something maybe to the 1.5% to 2% range from the 2.5% to 3% that we've been doing. So we're not saying that this is a recession, but if you put on trade restrictions, immigration restrictions, you try and act some spending cuts, it seems like the edge off the economy should be taken off and growth should moderate. So turning point here, I'm saying, what would be the recession scenario? And you need spillover from the good side of the economy into services. That probably comes through very weak asset markets, which would mean that upper income consumer, which has been spending and driving the recovery, would decide, hey, maybe we need to spend less and save more. So I think that would be your your channel. Too much volatility, a big correction in equity markets, that might cause consumers to take a step back.
Michael, I guess, is there a higher probability or chance of that happening at this point, do you think, when you're taking a look at the data?
Sure. Given just the sheer amount of change across a number of policies, whether it's, again, trade, immigration, fiscal policy, geopolitics is an issue again. So there's a number of things here that could, and I emphasize could, we're not calling for it, that could collide together in a way that leads to risk-off sentiment. You get whiffs of it now and then. Again, our baseline is a moderation in the economy, a continued recovery in the economy, but we have to be watching out for signs that the combination of policy choices and heightened uncertainty lead to a greater pullback in activity than we expect.
Michael, you mentioned that personal spending for the top 10% of earners. They're responsible for half of U.S. consumer spending right now, according to Moody's. Do you think that makes the headline data look better than it actually is? Do we have the accurate data to suss out the health of the economy right now if that data is being held up by the top 10% of earners?
I do think we have the accurate data, right? So again, as an economist, we're writing down aggregate consumption, total growth in the economy, overall inflation. What you're pointing to is there appears to be a wide distribution of where households are seeing income growth or wealth growth and what that means for consumption. I think the way I would put it is the health of the economy or the robustness and the durability of the recovery is driven by a smaller and smaller share of households. That's not necessarily bad from a propagating the recovery point of view. But again, those are, as we're alluding to here, those are upper income households that hold the majority of the financial and real estate wealth in the economy. So what that's saying is the major risk to the recovery is if all of this policy uncertainty collides in a way where equities say, we're 20% overvalued and we need a big correction. If you got that kind of correction, then upper income households aren't spending, the economy and the labor market weakens, and that's a very different story. So that's how I would interpret it.
Michael, one of the notes that you published a couple weeks ago at this point was titled Immigration and the Macroeconomy. And it caught my attention just because you mentioned the fact that obviously there's so much talk and rhetoric and focus going on when it comes to tariffs, that immigration is also potentially very consequential to the U.S. economy. I guess more specifically, what does that potentially look like, and what should investors keep in mind, especially as we head into the jobs report?
Yeah, I think that the story here is that tariffs get all the headlines and they're the bright, shiny objects in the in the news flow right now, and for all the reasons I think are right and we understand. But we're just trying to emphasize here that, remember, in the background is a very strong desire to control immigration flows that actually started in the middle of last year when the Biden administration took steps to control the border flow. Now, so I think we all agree that coming out of COVID, the surge in immigration put upward pressure on economic activity and brought in a lot more labor supply. So it took the economy to 2.5% to 3% growth, but also helped wage growth to come down and inflation to come down. So the supply side component here was very important. If we restrict immigration, go from roughly 3 million a year like we had for 3 straight years back to a million or less, something kind of below our pre-COVID averages, well then shouldn't that narrative reverse? You have fewer spenders, fewer labor suppliers in the economy. So I think it can take, immigration alone could take the economy from the 2.5% to 3% growth rates that we've seen in previous years, take it back down towards 2 or maybe even 1.5 if the combination of restricted inflows, some increased deportations, and maybe a chilling effect on labor force participation weighs on the foreign born workforce. So I think we're just flagging that as, hey, don't forget, immigration is working under the hood right now. It's going to be harder to see in real time, but it should mean less growth in the labor force, less consuming households, and that will also pull growth lower.
So, Michael, I guess to put a bow on everything that we have talked about so far, it sounds like recession risks could weigh on asset prices, and if there's a sell-off to an intense degree in asset prices, then that could cause a recession. Can you help me understand the kind of feedback loop between those two things and which domino falls first to cause a substantial economic risk?
Yeah, so that's exactly right. And so the baseline view would be, well, trade restrictions, immigration restrictions, that should mean a slower growth, stickier inflation outlook, a Fed that cuts but cuts later. So the baseline isn't a recession, it's just a moderation in activity. But the risk is somewhere in here, maybe we push the policy levers too far, there's too much policy uncertainty, where it weighs on growth and employment more than we think. Then you get a stronger asset market correction and you get the reinforcing mechanism to lower consumption and recessionary outcomes. So it'd be more, at some point we've gone too far, asset markets correct, consumer takes a step back. Again, that's not the baseline, but that's the downside risk as we would see it.
All right, Michael, great insight as always. Thanks so much for taking the time to join us here this morning. Well, coming up next, we're going to take a look at some of today's top trending tickers. First up, why Tesla is climbing higher after a tough week for the stock. That's coming up next on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Gold ETF flows hit a record last week at $5 billion, and a closer look at the longer-term trend may point to more upward momentum for the yellow metal. I'm Jared Blickery, host of Stocks in Translation. Let's take a look at gold's record inflows and why the move may just be getting started. First, I want to go to a gold chart. This is going to be a 10-year chart of price action. You can see we're at 28.93 right here, and we've got two big rallies that we saw. One was in 2019 to the early part of 2020, and the other was last year. 2024 just took off, and it's continuing to make record highs this year. But let's take a look. We're going to get to ETF flows in a second. I want to take a look at what central banks have been doing, because they have been the biggest marginal purchase of gold in the last few years, arguably going back to the last decade. What you can see here in each of these last three bars, that's 22, 23, 24, those purchases basically doubled the prior average, and we're now looking at about 1,100, at least over 1,000 tons per year. Simply a huge amount, and it dwarfs anything that we're seeing in the ETFs. However, very recently, over the last 5 days, we have seen ETF buying just explode to the upside, and here we have this bar. This goes all the way back to 2019. So even during that 2019 rally, even in that 2024 rally, we saw nothing approaching the flows that we saw last week alone. And now I want to put this in the context of what happened over the last 6 months. So this same chart chart that we were looking at, if you spread out that buying from 5 days to 6 months, you get a longer term view. And you can see here we had the peak in early 2020. That was just before the pandemic when we had that huge deflationary impulse that affected all risk assets. But ETF flows over the 6 months on that basis were much, much higher, approaching $30 billion. What we're seeing now is just a blip on that. So my thesis is if we see anything approaching the prior run-up or the prior run-up in flows that accompanied that rally that we saw in 2019, we should have that much more incremental momentum for the price of gold finally launching above 3,000. And that's pretty much how I see gold right now. Back to you guys.
Jared, thank you so much. Appreciate it. It's now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, Tesla reinstated as a top pick in the U.S. auto space by Morgan Stanley. Yahoo Finance's Praz Subramanian is here with more. Praz, I love the way they start out this note. Tesla shares down 30% year to date. It's our top pick in U.S. autos. Explain.
Yeah, I mean, it's more of the same here from Jonas, right? Last year was also, it was his top pick, but it's more about the autonomous and the AI opportunity with Tesla, not so much the actual auto business here, right? Or as he calls it, embodied AI. We're talking about robo-taxis in cars. We're going to start that new robo-taxi testing in Texas later this summer, but also Optimus robots. Like this is a 10-year out, 5-10-year out sort of bet on Tesla. He says that it's going to be choppy this year. Auto sales will probably be down or weak because he only flicks at the issues like you're talking about, right? He's flicking at the fact that European sales are tumbling, right? This is the newest data that we have. We see protests in the U.S. We see people who are longtime Tesla owners wanting to give their cars back because they're unhappy with Elon Musk and his sort of foray into politics. So I think we see that part, that immediate effect. If you're a Tesla shareholder, your stock's down 30% this year. I don't know how you're happy about that. So I think it's more about he's like just. It's okay to hold on for a few years, but that's a lot to ask.
It is a lot to ask, especially given so much of that uncertainty and given the fact that there has been so much blowback of Musk inside the White House. Press, let's also talk about BYD because there was some news out, a headline out this morning, and they're looking to raise $5.2 billion, and this will be Hong Kong's biggest share sale in nearly 4 years. Also comes on the back of some pretty strong sales numbers, too.
Yeah, I think this is a good pairing here, right? So you see, we have Tesla here, sort of the bet on the long term. BYD's making sales now, had a huge month in February in China and other areas. They want that money to expand, to keep growing, localized production. They're putting their self-driving tech in their cheapest cars, which is sort of a big deal. They're giving that to their consumers that are actually buying those cheaper EVs. And this is like, this is them expanding. This is them expanding their actual auto business right now that's growing. People are interested in it. Whether we see those cars in the U.S. is another story, but look, they're looking to overtake Tesla in pure EV sales this year, right? That's potentially going to happen. And I think it's a tale of two companies right now, where one is super focused on the actual here and now, and according to Adam Jonas with Tesla, they're focused on 5 to 10 years out.
All right, Pras, thanks so much. Let's take a look at Intel. There's a report out this morning that NVIDIA and Broadcom are running tests on Intel's manufacturing process. This is according to a report from Reuters. The test could indicate that the companies are considering committing significant manufacturing contracts to Intel. Obviously, that would be very, very welcome news for Intel shareholders. You're looking at the stock up just about 2%. Now, NVIDIA has declined to comment there to Reuters, and Broadcom did not respond to Reuters' request to comment. But Intel spokesperson is saying that, quote, they don't comment on specific customers, but continue to see strong interest and also engagement on Intel 18A across our ecosystem. And I bring that up just in terms of the fact that I think that does point to some interest, whether or not it be from these two companies, maybe more broadly speaking throughout the industry, and obviously would be a welcome boost here for Intel's business.
100%, and this comes as Intel is still the top performer in the SOX Semiconductor Index year to date. You've got a couple of their competitors underperforming them. This would potentially be negative news for TSMC. This kind of puts Intel in direct competition with them. The manufacturing process Intel uses, it's called their 18A process. It's a chip-making technology that's utilized for those advanced AI processors that TSMC is typically more known for. Intel's already got deals with Microsoft and Amazon on similar chips production that uses that 18A process. And the last thing I thought was interesting in reading about this morning is that this contract manufacturing business was a key focus of Pat Gelsinger's before he was ousted from the company And now we're seeing that potentially being part of the company's success story moving forward. So something to continue to look at in terms of Intel stock still moving to the upside this morning. Take a look at Core Scientific, the digital mining company, reporting a disappointing fourth quarter with total revenue coming in at $94 million compared to $141 million a year earlier. Joining us now, we've got Adam Sullivan, Core Scientific's CEO. Adam, great to have you on this morning. Talk to me about the strategic decision making when it comes to investing in more of these data centers as a revenue driver moving forward, and how that might be weighing on your revenue currently, but how you see that as a growth story moving forward.
Yeah, absolutely, and thank you for having me on. This is all part of a long-term transition that Core Scientific is going for. Last year, we signed over 500 megawatts worth of contracts. We followed that up, just last week with another $1.2 billion contract. So from a long-term basis, Core Scientific is in a stronger position than ever, and we're hyper-focused on continuing to invest in new locations, new geographies, and bringing new clients into Core Scientific, because this is really about a broader shift in the industry of where power is going in America. Power is going to compute, and we are a part of that trend, and we're going to be a major growth factor to help facilitate bringing more compute online for all types of use cases, not just artificial intelligence, as the news really likes to talk about these days.
Adam, is that the number one priority right now of Core Scientific? And I guess to what degree is that going to then shape how you navigate or some of those opportunities in the future?
Yeah, this is really our sole focus today, is really to continue to drive growth into this business line. Bitcoin mining provided a very strong foundation for our company early on. We were the largest operator of infrastructure dedicated to Bitcoin mining in North America. And we've been able to pivot that entire business to building large-scale data centers to fulfill this massive trend that's going on in the industry.
Adam, I know you're going to say no, but when you hear of the strategic Bitcoin reserve and see the lift in crypto stocks today, do you have any regret about transitioning as fully away from Bitcoin mining as a key cornerstone of the business?
Absolutely not. The broader trends in the data center industry right now provide for long-term contracts that provide significant amounts of free cash flow. Now that we're talking about strategic Bitcoin reserves, potentially other cryptocurrencies as well, even with Bitcoin price increasing significantly, mining economics have continued to decline over time. And that's a trend that will continue over the course of the next 5, 10, 20 years, really no matter where Bitcoin price goes. And that's because the infrastructure development, the advancements in chips, really keep a ceiling on where mining economics can go over the long term.
It's an interesting comparison, and I know it comes in the context of you unveiling plans for that $1.2 billion data center expansion in partnership with CoreWeave. Why is now the time to be betting on AI strengthening moving forward as a revenue driver, especially given the questions that we're hearing about the amount of CapEx from big tech firms into AI and questions about DeepSeek that are pointing to concerns about how much people are spending on AI and training?
Yeah, I think the most important thing that we saw after the DeepSeek news was every single hyperscaler announced earnings really the following week or 2 weeks following, and everyone increased their CapEx expectations. What we're seeing is a broader adoption of AI. And really what we're seeing is that we're at the very early stages of the growth trend. So we're at the very early stages of a hockey stick style growth where right now it's humans interacting with agents. And what we're going to see going forward is more AI agents interacting with each other, which is going to continue to drive further demand in this ecosystem. And so we're going to start to see this ramp significantly over time as everything we interact with on a daily basis is going to be touching a data center soon. And so that's one of the most important things to note, and the reason why we're at the earliest point in this trend that we possibly could be, because this is really going to be a 5, 10, 20-year bull cycle of continuing to develop compute and continuing to invest, especially in inference facilities, which are really some of the most necessary facilities to help facilitate your day-to-day uses and interactions with artificial intelligence.
Adam, what can you tell us just about your ongoing discussions, whether or not you're having ongoing discussions, I'm guessing you are, with some of those hyperscalers that you were just referencing, and maybe what that tells us just about Core Scientific's role here in 5 to 10 years from now?
Yeah. Every hyperscaler wants to move more quickly. I think last year we saw a lot of news around one of the hyperscalers really making a big push into building big data centers. Now we fast forward to where we are today in March of 2025. A lot of the hyperscalers feel behind from where, when they were watching all this occur back in 2024. And so everyone wants to move with greater speed. Everyone wants faster delivery. But there are massive supply chain constraints in this industry today that are pushing out delivery of infrastructure, even if you sign a contract today, 12 or 18 months out at the earliest. And so what they're trying to do right now is get all of the facilities that they want for their 5 and 10-year plans. They want to secure all those this year to ensure that they can actually meet the delivery schedules that they're promising to their end clients. Because this is really about how much market share can you capture in this industry. And for the hyperscalers, they're all in an arms race now to secure as much power capacity as they possibly can to ensure they can meet any demand that they receive from a client.
Adam Sullivan, we have to leave it there, but thanks so much for taking the time to join us, CEO of Core Scientific. Well, coming up, we're going to be taking a look at what the latest ISM manufacturing data tells us about the health of the economy. Of course, it was a market-moving report at the top of the hour. We saw stocks turn lower, prices paid rising there. A huge concern here for the U.S. economy going forward. We got much more on that when we come back.
Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
The Trump administration pushing forward with new tariffs on Canada, Mexico, and China as soon as Tuesday, though Commerce Secretary Howard Lutnick described the tariffs as fluid in an interview this weekend. Here with more on the president's tariffs plans, Yahoo Finance's Ben Werschel. Ben, just how firm are these tariff announcements coming up on Tuesday?
Yeah, it's as firm as every other Trump tariff announcement that we've seen. I would note that these are tariffs that were supposed to go into effect a month ago, and then they got delayed by this 30-day period. What Lutnick said is that the tariffs are coming, but the rate itself is fluid. So it's sort of fluid in a bunch of different directions. What I tried to focus on today is that the kind of bottom line for the markets here is that with all of Trump's promises coming down the pipe, even if he's 80% bluster, say, that still would represent more than his entire first term. He's already implemented 10% blanket duties on China. What he's promised for tomorrow is 25% on Mexico, Canada, and then an additional 10% on China. That, if he did that and then he did nothing else, that would be far above the economic effect of his entire first term. And then that's not even talking about the upcoming. Next week we have steel and aluminum tariffs that on their own would sort of, along with these already China ones that are already in place, would match what Trump did as an entire first term. So it's a hard thing for markets to game out at the moment because Trump he's promising so much, and there's a high expectation that he'll pare it back in some form, and he's already, Lutnick is already signaling that. But even if he does, it's still sort of wide-ranging economic effects.
But is this conversation going anywhere? Are tariffs going to be something that we're talking about, not only for the next couple of months, but really years to come when you look ahead to the rest of the administration?
For sure. I mean, I think Trump, he indicated in the campaign trail that tariffs were going to be an even bigger agenda item for him this time than last time. So I would suspect it's not going anywhere. I mean, I do think we have a month here where we're going to kind of see if the rubber meets the road on his major issues. His big deadline that he set is April 2nd. That's the reciprocal tariffs. Lutnick has called that the big transaction. So if we're in a month's time and we sort of know the landscape, it may sort of fade a little bit. But I think the answer to your question is yes, that it's going to be a kind of through line of it. The question is how much he sets in place and then adjusts it over the next 4 years.
All right, Ben, always great to talk to you. Thanks so much for breaking that down.
Thanks. Talk to you later.
February's ISM manufacturing index coming in below expectations. Prices paid rising to the highest level that we've seen since June of 2022. Now, this is a sign that input costs for businesses are quickly rising. Stocks turning lower on the heels of this report. For more on this, we want to bring in Tim Fiore. He's ISM Manufacturing Business Survey Committee Chair. Tim, it's good to have you. So obviously some worrisome signs within this report. Prices paid rising. You have new orders below 50 as well as employment, both sagging below 50. What are you hearing from the business community just in terms of the macro conditions right now and whether or not it is deteriorating at a rapid clip?
Yeah, thanks, Shauna. So I think the whole story here is really around the tariff issue, which is really the prices index. Mm-hmm. Because the fact that the prices index went up 7.5 points, it's really impacted the new order levels, the inventory level, as well as the supplier delivery number. And let me explain. So our prices index really measures the width of the lake, not the depth of the lake. What this really says is that a lot of companies have been impacted by steel and aluminum tariffs. Now, I think they're 15%, 10 or 15%, but the spot market immediately went up to that tariff price per ton when the tariffs were announced, even though they don't go into place till the 12th. If you look at the spot market, you look at the Midwest differential for delivering aluminum, it's up 20+% since I last spoke with you last month. So what that has done is it's slowed down the new order rate because suppliers are not going to take new orders unless they agree with their customers about who's going to pay for this. It's also caused an increase in the inventory count because we pulled forward deliveries over the last couple of months to try to avoid these tariffs. It's also, probably some impact from the Lunar New Year stuff showing up. And it's impacted the supplier delivery number. They raised the number because some suppliers are obviously refusing to deliver their product unless there's an agreement on who's going to cover these tariffs. So the good news here is that the new order number, the supplier delivery number, inventory number are probably a blip. It might be this month. Well, we got Mexico and China coming not too far down the path here. That'll probably, if you remove the tariff issue, the one-time tariff issue with steel and aluminum, those numbers will probably recover. The prices number is going to stay elevated. I mean, that's really the story this month, is that consistent with the administration's stated goal of the External Revenue Service and its basis is tariffs, that this number is going to stay high. I would really quiver to think of what would happen if the Mexico and Canada tariffs go into place in the next couple of days and what that would mean for the PMI for March.
What would it mean?
Well, it's probably going to mean that new order number gets even worse. The supplier delivery number gets even worse. The employment number probably drops more because people are still releasing people now when they really shouldn't be releasing people now. They were much more optimistic a couple of months ago about, okay, we de-staffed to the right headcount level consistent with our forecast. But given the uncertainty here driven by the tariffs and the impacts that could have on the Fed's interest rate policies, they're continuing to de-staff people using primarily attrition and freezes as a tool rather than layoffs this month, which I think is good news. So they're not acting as drastically that they had been in Q4 of last year, and even to some extent last month. We thought the employment number would stabilize by now. But what business people are saying is, in this space of uncertainty, I don't think I'm going to carry this headcount. I'm not going to reduce my headcount proactively, but I'm going to attrit down, meaning if somebody quits, I don't want to replace them right away, and I'm only going to replace people that are strategic to the company. So, and you would expect that if those Mexico and Canada tariffs go into place, that prices number could easily be 80 plus, if not more.
So what does that tell us more broadly about risks to the economy, risks of a recession, risks of even stagflation moving forward, Tim?
Oh, thank you for that question. Well, I mean, if you stay on the path that we're headed on, I think it's going to be a tough route. We've been saying for a while here that the second half, when the tariff as a tool was announced many months ago, we knew it was announced. The administrations continue to deploy that strategy. If they deploy the strategy, the second half of the year is not going to look good because it's going to, first off, it's going to clog everything up. Our panelists already said back in December that their ability to pass price increases through were half as good as they were last year. So they don't really think that they can pass the prices through. So either make it up in productivity, which is only so much you can do, or you eat it and then it's a margin. So, I mean, that's kind of the summary on this, is that there's no magic about this. When you raise the price of input goods, somebody's got to pay that cost, and eventually it ends up in the product that you're selling.
Yeah,
so,
Tim, you said it would not look good for the second half of the year. Does that mean recession?
I'm not sure. I don't want to call that. That's well beyond my pay grade. But I will tell you that our prices index has been very consistent for the last year and a half about what's happening with the CPI and the PPI. So when we show a weak growth in prices, you're seeing a stable CPI or a PPI. When we show a more dramatic increase in prices, think 55, 56, you're seeing maybe a 10th tick up. Now we're at the 62 level. So what does that mean to the CPI and the PPI that comes out this month? I would say it's going to go up. And what does that mean to the Federal Reserve? You know the answer to that. The other thing here is that our new order number generally does a pretty good follow with the industrial production numbers released by the Federal Reserve. So we're now down in the 48.6. I would guess that their IP numbers for the prior months are not going to be as positive as they have been. And all that's going to weigh into interest rate decisions. That may or may not change the administration's policy. The Federal Reserve can only react to what's happening. They don't proactively do things in the market to change or even to butt up against the administration's policy. So it's really up to the administration to make some decisions here that, it's nice to say we're going to raise all this money through, quote, a tax on imported goods. You saw what it did to the steel and aluminum markets, which is just an industry issue. What happens when you do reciprocal tariffs across everything? I shudder to think.
All right, Tim, a great breakdown. Thank you so much for joining us this morning to break down those ISM numbers. We appreciate it.
Thanks, guys.
We will have all of your markets action ahead right here on Yahoo Finance, so stick around for more.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Billionaire Warren Buffett speaking out on President Trump's tariff plans over the weekend, calling the policies a, quote, act of war and warning of their impact on everyday Americans. The Oracle of Omaha adding, quote, they're a tax on goods. I mean, the Tooth Fairy doesn't pay them. Tariffs on Canada and Mexico, along with additional levies on China, are scheduled to take effect tomorrow on Tuesday. The significance of this, obviously, just the fact that so many investors pay very, very close attention to what Buffett has to say, the fact that he is commenting on Trump's policies for the first time this time around inside the White House when it comes to tariffs, obviously is grabbing investor attention right now. And this also coincides with more of a bearish activity that we've seen from Buffett here, Maddie, over the last several months, as he has been raising more cash. Of course, lots of questions about whether or not maybe that true or maybe that is a sign that he is a little bit more sinister, a little bit more worried about what the coming months, quarters could potentially look like here for the U.S. economy, the impact that that could have on the stock market, or if in fact he's just raising some money following some pretty profitable investments as we do look ahead to